think while the feature phone and credit card is something
Something is
that
there.
has got announced, maybe UPI going international is something where, we definitely see a role in the future. Uh, uh, Apart from that, I think our engagement with NPCI is already there from inward remittance kind of thing. IMPS and the UPI, VPA is something that we aggressively use for all terminations into India. Yeah, I think it's a win-win situation for both, and we are very eager to collaborate, co-create with NPCI. We all know, I mean, it's something, it's a matter of pride, right? When you go into different geographies and speak, and people talk about UPI and NPCI, it's become a sort of a precedence that has been set the world over. Right, and especially in virgin territories or markets who are now trying to enter into the digital payment space, while the intent is there, right? It's all about building capabilities, and I think that is where we at TerraPay work with like-minded partners, even to the extent of working with regulators, and that is one of the reasons why we are like either licensed or regulated in 26 countries. Where we know how regulations work, we are sensitive to how to comply with things. Which means that gives us that much more responsibility to perform. And I think an association with entity like NPCI definitely helps that to build more credibility when we talk about, having partnered with such an entity for promoting a lot of cross-border payments.
Right. No, I do believe also there's a great synergy, between NIPL and TerraPay, and it can go up to the highest level.
Look forward to it.
Thank you, Ritesh. I think it's a very insightful session, and I hope our audience gotten, yes, learning from it.
These are advantages of it being the first session. And then people are attentive.
Yeah. Thank you so much. Thank you for your patience, audience. Thank you, Ritesh.
Thank you.
We're getting into the session now. It's a panel discussion, the topic of which is raising the bar, delivering extraordinary customer experience. We will be joined by an esteemed panel this morning, which comprises of Ali Saberi, founder and chief executive officer, Tilly Software; Kumar Mayank, CEO and co-founder, Zimyo; Suraj Shetty, head of customer experience and learning development, Kisht; and Satish Dubey, head of growth and retention, Kalera. And the moderator for this session will be Laksh Gangwani, founder, digijanus.com. May I also mention that Suraj is running a bit late. We will start with the session and Suraj will join in as soon as he's here. May I ask Laksh to take over from here, please? Thank you.
Hi, good morning, everyone. So a quick update. I am also the MD for Asia for ViewTrade as of 6 days ago. So I do think that is important to update everyone about. So please, I would love all the guests to join us.
It's completely okay.
So I really want to thank Vineet and team for the opportunity, and we hope we live up to the panel topic, which is delivering an extraordinary customer experience. So everyone has a mic?
Can you hear me?
Yes.
Okay. So see, customer experience is a very broad topic, and we have a lot of esteemed panelists on the stage with us. So what I want to do is let's get an intro into who you are, what kind of customer experience are you into, and what does a great customer experience mean for your customers. So let's get started, and let's keep it in the fintech domain. Okay. So we start from the other side. Thank you.
Hello. Hi guys, good morning. My name is Satish. I am representing today Kalera. Kalera is trusted CPaaS global company, provide mobile communication. We cater all the fintech domain where we provide the solution in terms of all omni-channel communication. Our technology today speak about all safely, securely, and reach it to 100 of mobile networks. Our mission is to make conversation between businesses and their customer uninterrupted by providing technology which is bridging the gap. So our main motto, main focus is that bridging the gap between uh, businesses and their customer, providing omni-channel a powerful communication tool. In terms of customer experience, I believe there are three words, Laksh. FAB, okay. FAB means focus on customer growth. Goal, I say that. Then second, anticipate customer needs. Third, build a genuine relationship. So when your organization is talking about the same language or speaking the same language with the customer, and when focusing the business or growing hand to hand with the customer, then make a different impact to the customer. Yeah. So today organization need to not to just do a sales. Okay, today we need to consultant business to grow. Okay, when the business will grow, you flourish your retention will be in a higher side. You'll build a relationship, and end of the day you will get a revenue.
Thank you so much, Satish. And you gave me some really good points there, so I'm coming back and asking you some more questions, and some tough ones now. So, Mayank.
Yeah, hi everyone. I'm Mayank, founder of Zimyo. So Zimyo operates in the space of embedded finance. What we do is we have an eponymous HRMS, leave, attendance, and the entirety of payroll for an employee. And over the payroll, right, to the not just the company, to the employees itself, we offer the entire suite of financial solutions, right? The genesis of the of Zimyo, say, was an altruist thought that there are factory workers, there are a lot of SMB workers who are still not part of the financial inclusion, right? They're not part of the financial world. So we started this whole semi-neobank operating under the entire HR tech. As of now, we cover around 2.5 lakh employees, over 1,000 customers. If you'll ask me what let's say customer experience to me is not just the organization who are supporting on the HR front, but the employee, right? The end employee who is able to get a loan, who is able to get an insurance coverage for him, who is able to get his salary on time through direct payouts and every other financial access which he otherwise did not have. That's what customer experience to me is.
Yeah, and Mayank, I have like a lot of questions for you because love the whole neo-banking space and what you're doing there. And Ali, let's hear from you.
Thank you. My name is Ali. I'm very grateful to be here. Thanks for having me. I'm the CEO and the founder of Utility LLC, which is a US-based fintech startup. Our focus has been on customer experience, customer engagement, communication, payment services, and our products, the Utility CX solution, the nudge, the concept of nudging your customer to make a payment, right? That kind of defines us, and we are in that space. And with the success in the US, we have, as of last quarter, launched our services in India, and we are looking forward to providing exceptional customer experience here in India as well. Our focus has been on a single factor of bringing out the nudge, bringing the factor of nudge to customers to be able to get the aha experience, right? The kudos is what we live for. It's basically the vision that we have is to provide that exceptional experience and globally.
Okay, and thank you for that, Ali. So all three of you, talk about exceptional experience. And exceptional experience comes with the understanding of the customer journey. So we have seen how customer journeys went from, the physical world into the digital world. Now we are seeing the next phase of it, like everybody is, coming out, they call it revenge travel, maybe revenge bank visit, like I don't think that is the most appropriate word to use, but people want physical interaction, right? So walk us through something, some of the examples or thought process on how you or your customers are preparing for a customer journey which goes back into the physical world, and how are you delivering a great customer experience there?
Right, I think the journey started off with the web, right? And people said, hey, self-service is the next thing, right? Self-service required a customer to use a website or a mobile application to be able to proactively take care of the issues at hand without having to stand in line or a queue to get the customer service experience that they wanted, right? Yeah. So that was all proactive. and you still had to rely on technology that would support the early adopters and the non-believers, I would say the ones who are technically challenged, right? So the technology was there to do that. With what we found was the reactive behavior of the customer was what needed to be actually enhanced by giving the nudge in time, the call to action in time to actually get a responsiveness out of them. And that actually turned out to be a unique experience because you are offering a technology platform that does real-time integration connected with your back-end ERP systems all the way to the workflow that a customer is expecting. And when you do the timely nudge, that's really the time when they react to it.
Yeah.
And then you are being proactive and they are being reactive. That mixed combination has really taken off in a big way.
Oh, okay, okay, thank you for sharing that. So Satish, I want to come to you first and I'll ask Mayank a different question on this. So Satish, how do you see your customers preparing for these new client journeys, in the offline space? And, how are you guys optimizing those?
So Laksh, in Kalera, I'll tell you what we do in Kalera. So Kalera, it caters to B2B business and partnership.
Yeah.
So we have a bundle of product which we offer to our customers. Okay, these are all omni-channel services we are offering to our customer. Now, when we talk about the customer journey, so what do we do? I'll take one example, a story you can say about that. So we have lots of BFSI customer. Yeah. So one of example I'll give, they're facing some challenging connecting with millions of customers in a day in, day out. So in the Indian industry, human agent can dial only 120 numbers or 150 numbers in a day. Yeah. But they wanted to reach 1 million of customers, they have a database. So what we have provided as a company, we provided a voice solution. Okay, right. This is a customized solution which we have provided, where they are reaching million of customers every day. Okay, so their purpose, what they were expecting, which was not meeting, now we are solving this purpose, which yielded a good result to them. And they have recommended few customers as well, which we have integrated and do that. Apart from that, we also build lots of customized solution, we can say that, which we offer to a customer, looking the demand and looking the need. As I mentioned, fab, goal, need of the customer. So accordingly, before we do anything, we understand what the customer is looking and help them to grow their business. Right. So that is way how we build our journey with the customer.
Absolutely, and I love the example where, a human agent can call maybe 100 numbers, but you want to call 1 million numbers, right? So how do you get that enabled? That is amazing. So, so now, Mayank, we want to ask you, I want to ask you a different question because, my understanding is your offering is primarily digital. Yep. So now you have two sets of customers. One of these are the HR guys, etc., and one of them are the end employees of these SMEs, right? So walk us through, like, how do you even engage with 2.5 lakh people digitally? Like, why do they come back and use your platform? Is it only because there is no other option out there? And so I would love to hear your thoughts.
Okay, so there are two reasons why. Okay.
Hi. Welcome, Suraj. So welcome to the panel, and Mayank, please.
Yeah, so there are two parts of how our engagement works. The first, of course, is, let's say all of us are working, right? As a corporate employee or anyone working would be spending some certain hours in the office environment, right? And while the office environment is there, he'll be marking his attendance, applying leave, getting his salary slips even. So there's this definite engagement when you are in your professional world.
Yes.
So every employee has to spend that hour. Generally, companies would give maybe an app where you can clock in, clock out, much like ours, but there would also be biometric engagements, right? But now look at this whole segment of 2.5 lakh employees, right? Whether they are on app or they are on the physical mode, right? But they have to have that engine of maybe getting registered themselves and maybe applying for the leave. Yeah. So while in the environment themselves, while they're applying the leave, while they're downloading salary slip, why not use nudge, right? Why don't nudge them to get another offering? Like, these are the factory workers who nobody is looking after, right? They do not have access, they cannot walk to a bank. Even their companies are not themselves eligible to get loans, right? We are talking about certain private entities and maybe factories which nobody in operating in the third worlds, right? And I'm talking about, we have a global base, and I'm talking about companies which do not operate in the mainstream financial world. Even to that employee, the digital connects them to the banking and the financial world.
Absolutely.
So while the employee is marking his attendance in and out, indifferent of his cadre, he may be a senior VP, or he may be an executive, or maybe the factory worker, right? If he's not well equipped to manage the smartphone, we give him a message option, right?
Oh, right.
And over the message also, he can avail a loan, an insurance, and indifferent even if he's operating or not, but he'll get his salary in his account directly, because at least the company will have a smartphone or a digital web view to manage it. So look at this. Someone who has never thought of going to a bank, or maybe in his village also there is no bank, he now has an access of financial access. Where do we get the collections? Even for the collection, we don't need to send the salespeople. He gives an indemnity when the salary comes. With his consent, we take back the money. And that's how the entire journey happens for those 2.5 lakh employees.
No, absolutely, that is wonderful, and I see how you're helping nudge Ali into, like promoting him as well. No, absolutely, you're solving a very, very real challenge for a very large percentage of the population that who don't even have like a smartphone, but they do have a feature phone, right? And they've never accessed the financial system. So, this is a very, very big step towards financial inclusion. And financial inclusion is one of those words which has been used a lot.
Yes.
And, not a lot of it has been done, but I see that you're taking very, very good steps toward it. So, Suraj, welcome. We are very glad to have you on the panel.
Thank you, Lakshmi.
So, why don't you introduce yourself and, what customer experience means to you and your business as we go forward?
So, myself, Suraj Shetty. I had customer experience and learning and development for Kisht. So I would say Kisht is a fintech platform which is into consumer durable loans, personal loans, and buy now, pay later solutions. And we also have another vertical, Ring, which is for small merchants, wherein we give loans, credit to small merchants and their customers. So when it comes to customer experience at Kisht, the primary objective, there are three basic pillars to it. One I would say is being a RBI registered NBFC. We are in a highly regulated market, and we have one of the best regulators, that is the Reserve Bank of India. And so the first number one priority for us when it comes to customer experience is fraud prevention and security. Because unless you have tough fraud prevention standards, the customer will ultimately lose trust in the system, in the platform. And trust is something that's the base of customer experience. So fraud prevention and security is priority for us. Number two comes convenience. So when I say convenience, it's more of an instant gratification kind of thing, because we have observed that customers usually have started comparing financial services with other products. Like, why can't I get credit immediately? Just like I'm using Zomato, I'm ordering a pizza from Zomato. Why can't getting credit be as easy as ordering food? Yeah. Or why can't getting credit be as easy as ordering a cab? So this comparison leads to the need for instant gratification. So it's necessary that apart from fraud prevention and security, we are able to provide that instant credit to customers, that within 2 minutes he is able to pass through all the checks and avail credit into his bank account instantly, without having to going through all the hassle. And third one is reliability. He should be able to have that feeling of reliability over the platform, that this platform will give me credit no matter what. I can rely on this platform when I need credit.
Right. No, absolutely. Thank you for that. And from a customer experience point of view, when you come in and you can order like food in 2 minutes, the expectation is that the loan should also come in 2 minutes. Now, I want to ask you a very specific question, and this is not because you were a little late. This is because I come from this field as well. Do you think it is the right thing for a platform to do to cater to an expectation that your loan should be approved in 2 minutes? And I'll ask you why. Because in a country like India or Indonesia or Cambodia, where there is a lack of credit bureau data for a very large population, so you are accessing somebody's, you're doing digital credit scoring using their device, etc. And you take a decision at that point of time. Now that decision could be risky or non-risky, based on your algorithms. But we are creating an environment where people are expecting financial institutions to take risk decisions within 2 minutes. Do you think that is a good expectation to set?
Yeah, I think that's a good starting point for all, because it's necessary that we try getting the best experience to customers. And when it comes to giving credit in 2 minutes, similar to UPI, for example, if 10 years back we were discussing about transferring money, we would be surprised to know that you can transfer in 2 seconds by just a pin, right? Even the security concerns would be too high for us. We would have thought that how can we transfer in 2 minutes by doing all the security checks. So just like UPI has transformed payments, and it's something that everyone is using today, and we have seen the kind of revolution that has brought. So I think credit is the next after UPI. Credit has to be transformed, and credit delivered within 2 minutes. I don't say that home loans can be given in 2 minutes. Of course, there is a different kind of underwriting that goes for home loans, car loans. But small credit, wherein people, especially self-employed, they are looking for small credit to meet emergency expenses or to pay bills, etc. So these small credit can range from an amount as small as 2,000 to 30,000. So these small credit, if it's instantly available because we already have channels like CKYC can be done instantly,
Right.
DigiLocker can be accessed, and based on these information, a small credit can be given. And then based on the repayment behavior, you can upgrade the credit limit to the customer. So that's how we.
Absolutely a great answer. So, having a differentiation when it is small credit versus, a larger piece of credit. So, absolutely. So now I want to ask, Ali and Satish, like the same question. So, both of you to certain extent automate, you automate the nudges that go out there, and, you automate reaching out to 1 million people. Now, is this a great customer experience that 1 million people get like all these calls together? Like, are these guys even expecting these calls? 1. 2, what is I see the efficiency part of it. I see that. What is the good, like, we're talking about great customer experience. What is the greatness of the customer experience when you get an automated call like that?
So Laksh, in terms of, Suraj, what he's saying is very right. I mean, you get a loan in 2 minutes. If you're getting a payment in 30 minutes, why can't we get a loan in 2 minutes, which all the fintech is doing?
Yeah.
Okay. The Kiss and Ring is the best example for that. So, the RBI guideline says that, you need to reach your customer, okay, if you're doing any transaction in any form the way. Like Suraj had mentioned, he's lending a loan, say 1,000 rupees. He need to remind his customer to make the payment. Okay. That's where your automated call or automated SMSs play a very important role. Because the Indian mentality is such a way, they go as a last minute. Okay. So that's the way automated call is very important, or automated, chat bot, you can say, conversational message is very important to remind the customer to make the payment. Otherwise, you will go in defaulter and it create a bad debt for the company. So it's very important, Laksh.
No, absolutely. And Satish, I'm asking you this question because I don't know. So I am understanding, and I agree with you that would a customer rather have an automated call or default and pay, a fine? So the customer experience of getting an automated call is much better. So, So Ali.
I think in my opinion, there are two sides of this coin. One is the organization who is trying to do well as an organization, be profitable. And the other side of the coin is their end user. By being able to club the pain points of both, right? That's where you are actually providing a value add to the proposition that is in front of us, the challenge that is in front of us. What we call the timely nudge, right? Is important. I concur with the panelists on this in terms of convenience, in terms of effort, now also in terms of cost, operational cost for both sides of the fence, right? When you are bringing in technology and addressing the pain points and able to provide a value-added solution that is affordable, then I think you have kind of gone towards that. You've reached your goal of providing the AHA experience and relying on the kudos of the customers. And then you hold yourself accountable by saying, hey, what is my adoption? How is it increasing? You do your OKRs and you set them up to hold yourself accountable, saying, how are you reaching your goal as a company?
Right. No, absolutely. And, that is a great answer. So Mayank, in the last round of tough questions, we want to ask you something. I read a report out of like 300 plus neobanks, if I recall it correctly, less than 13 are profitable. So why, I know you're taking financial inclusion to, the end customer, etc. What is the path to profitability while balancing a great customer experience? Because if you're pushing a loan towards, or, insurance towards somebody who doesn't need it, that is not great customer experience. That is,
Yep.
yeah. So how do you determine what will be a great customer experience for, your digibank or neobank user? And how do you balance off a great customer experience versus your own need to make money out of them?
Well, Laksh, first of all, thank you for asking the question. And good that I get to stage my thoughts on the genesis of why Zimio was made. So I was like a fresh product manager in a microfinance.
Okay.
My understanding about how these factory workers get their salaries and still have to go to informal money lenders, charging them 5%, 10%, was something I could not understand then, right? And microfinance, though, or even banks, they are limited by the cost that it takes them to serve it, right? So when we talk about great customer experience, right, let's understand what Zimio is doing. So we are going after that 97% of the working population which does not have access to finance by going through a digital way.
Right.
If tomorrow banks or microfinance could serve them, my job is served.
Okay.
Talking about profitability, my financial benefits is a pull product. We don't push to any factory worker that you have to take loan and pay me back EMIs.
Okay.
It's a pull product. We are profitable on our HR software.
Okay.
We have like so I don't know if any organization here opts for a SMB level HR software, you would see write us in 1, 2, 3. Like we are in 3 years time, we have gone to become one of the biggest SMB software.
Yeah.
The reason being is of great customer experience, not to the HR or the owner. If you talk to any SMB factory owner, his main concern is what is my employee getting?
Yeah.
And when you take a financial access to these employees, his job is served. So when we talk about delivering a neobank for this segment, I think this is this is the best customer experience for the organization as a whole and the employee of making it accessible in the first chance. Yeah.
Oh, absolutely. And
Thank you.
Mayank, that is a great and very passionate answer.
Oh, yeah.
Okay. I think I asked you guys very tough questions in this round. So let's take it, on a little bit of a fun side. So why don't we start with you, Suraj, and walk us through an example of, how you came up with a great customer experience and how it played a very big role in the growth of your platform.
So that's an interesting question, Lakshya. I would say, like to cite a recent example, during the pandemic. So a lot of customers had these issues like I'm not able to make payment, I need more time, etc. But there was no concept of moratorium, etc.
Yeah.
Later, RBI came up with a rule that moratorium has to be given. So what we did is we have for every team we have process experts. So for calling, chat, etc. So that the duty of the process expert is to understand what's the problem in the channel, how efficient the channel can be made for the customer to approach and get his queries resolved. And we got a feedback that a lot of customers are coming and they're asking for time, etc. And there is no solution with us. We did not have a ready solution what additional time has to be and how the interest has to be charged. But then we ourselves came up with a plan that we will additional provide 1 month extra to these customers and a nominal interest would be charged. And later we also got a notification that RBI has asked to give moratorium. So that's how we keep developing new solutions for customers. Like if customer is not able to make payment, we just stop call. Sometimes customer doesn't need time. He says, I don't need time, but just I don't need any calls and SMS from you guys. Just give me 10 days. So we just stop all the communication. So we have built these automations wherein communications can be stopped for a period of 10 days, for a period of 1 month, depending on the customer request. Or late fees can be waived for a specific period, as well as extension can be given. If customer says, I just need 5 days extension, I will pay additional 5 days interest, even 5 days extension can. So these flexible solutions have been built in the system wherein customer can rely on the platform. He feels that, okay, these people are there to help for me, and this has helped in getting repeat business from this customer. Otherwise, these customers have been going into the delinquency bucket and there was no repeat business coming from them. So we have seen, due to these helpful measures, at least a 30% more repeat business has come from this pool for us. And the pandemic has been a great learner for us. So we have, even after the pandemic, we have continued these steps towards the customers. Even today, if any customer calls and says, I need time, there is no questions asked. We just give him the time and let him do that.
And Suraj, that is a wonderful example, like somebody who's going through the pain of not paying and, you can switch off calls or communication that, I'm sure it is a pleasant experience for somebody who has an intent to pay already. So Ali, why don't you walk us through some example of, one of your clients or you on, the how great customer experience played a big role in their journey, and what were the outcomes out of it.
Thank you. So essentially, when when we talked about this, most of the customers have portals and websites and mobile applications and stuff like that. During COVID, there was a requirement for catering to the credit relief and programs, right? When you have a solution that is out of the box built to create call to actions that respond to these business requirements of providing credit, then you don't have to, you let the business be the driver side of the thing, of the solution to be able to make these offerings available online to the business so that they can engage with their customers and roll out these programs of e-bill enrollment, payment agreements, deferral plans, right? We talk about that. So out of the box, we have this call to action, which are specific to the customer's account status and the account eligibility.
Yeah.
So these things are built into the product to be able to change with the need and be able to implement in a much timely fashion. So we did this for one of our customers who's got 1.2 million customer base, and the federal government was giving out COVID relief funds, and we were able to distribute 98% of those within a matter of 3 weeks.
Oh, nice.
And that was the beginning of COVID, and that lasted throughout the season. I think those are the primary reasons why our growth has actually taken off, because of the applications that could be built from that framework.
Oh, that is a wonderful example, and how you could innovate and come through in such a tough scenario. Satish, coming to you, and because we ask all the tough questions to Mayank, he's very good. So please. So Satish, an example of great customer experience that you have seen with one of your customers. How is it playing a part in their growth? What are they doing differently than their competitors? If that is something you could touch upon.
So, Laksh, I divide this question into two pieces. One, you say customer service. Second, you say customer experience.
Yeah.
Customer service means I have a problem, I approach you, solve my problem, the job is end. What is the customer experience? Customer experience, you are interacting with the customer, building a relationship, you are approaching the customer. Okay. When an organization want to have a wonderful customer experience, need to come above beyond their customer services. Now, if you have a good customer services, a good customer experience, what will happen? You will increase your retention, okay? Your profitability will go, your customer will stick to you, okay? They will not leave you anywhere. Now, in terms of customer growth, as we mentioned, we have an omni-channel platform.
Yeah.
We provide bundle of services to the customer, where the need of the customer, which help to growth or grow up the customer businesses. That's what we do that.
Right. Okay. So Mayank, you are my favorite panelist, because your answers are so passionate, and I love that. So now you already answered this question in some part. Now, a customer experience or a great customer experience is a never-ending fight. Where does this stop? Do you stop at 30-second loan approvals, etc.? And I'm coming back to you, Shankar, as well. So where does a great customer experience stop? When can you stop?
Well, it's very subjective, right? Studies can say it might be the speed of service or NPS score or CSAT score. See, to me, as a founder of someone who has thought of conceptualizing this, it's how many lives I impact, right? So customer success to me, experience delivered is how many people I could give insurance to who nobody was giving insurance to, how many loans I could disburse who nobody was giving loans to, how many salaries we disburse or pay out real time. That's important to me. To just put to a context, like how would you feel if you start something during the midst of summer 2021 in Delhi, where the banks are shut, nobody can walk anywhere. We disbursed 108 loans. 108 people could get that 5,000 rupees loan to buy that oxygen cylinder. It saved lives. What else high you need? What else high you need in life? So that's my high. That's customer experience to me, for me.
And that is a great answer, and but let me rephrase my question. So
Please.
Great work, during a time when people needed it. So today you take out a customer experience. The IP laws in India can only protect it that much, under copyright, etc. So anybody can copy that experience, right? You have to keep innovating. You look at deliveries. When I was back here, you could get deliveries in 3 days. You were happy. I've even seen the time when somebody sends you a letter, and you get it after 30 days. I think I'm telling people how old I am, and you would feel happy about it. Today I see people are impatient at a 10-minute interval as well. Some, the reason they are impatient today is because organizations like us have created that expectation. So where does this end? Where does the fight for a great user experience to acquire customers, etc., delight them end?
Yeah, so I just mentioned it. It's the number of lives covered. So we
Yeah.
don't say the speed of disbursement. We don't say the CSAT or an NPS score.
Okay.
We go for the number of lives we cover. And our vision, of course, is to cover millions and millions of employees, everyone who needs, who is underbanked,
Yeah.
who needs banking. The number of lives is our parameter of success,
Right. Okay.
of
So
delivering a great customer
I'd like
experience.
to add, sorry.
please,
Yeah,
please,
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 please.
please.
I'll add over here. So I read somewhere 50% of Indian population, they don't care about that, how they want to communicate. They want their job to be done in a second button, okay? They don't know the backside, what is happening, is a human talking to them or there is a machine is talking to them, okay? So today, you know, if you talk about, if you ask me, conversational experience is going away. I mean, this is a way, you know, the business should adopt the conversational, because every life cycle of the customer, every journey of the customer, you need to interact with them. And as you mentioned, customers are impatient, okay? Today, you know, even the Domino's says 30-minute delivery, 30 minutes doesn't over. I mean, you become, you know, impatient on that. So,
I think somebody celebrates before they become impatient, you know, because they still do the free pizza, right?
you know, that is the way, you know, market is moving and the businesses are moving. And they should move as per the trend, what is going in the market. Otherwise, they will be left behind.
Yeah. Okay, and Shankar, so this question for you. So you defined customer experience in two really nice ways, you know, one, getting access or immediate access to credit, and then, you know, also looking at the macro environment and enabling customers to switch off communication, etc. For a while, yeah. So what is next? Because this experience that you say, this can be copied and, you know, somebody else can also offer this. So what will be the next milestone in great customer experience for you?
I think when it comes to credit, I would say we are able to deliver credit in 2 minutes. But when it comes to customer experience, or when it comes to customer service, I would say, still the experience that customers are getting are similar to other companies. So if a customer is calling Kist, or if a customer is calling HDFC Bank or ICICI Bank, the whole time will still be same. It's not that I'm able to deliver credit quicker than HDFC Bank, but the service delivery is still the same standards. So the next level for us is to deliver customer service also as quickly as we deliver credit. Because if a customer, for example, is coming for a refund and you are asking him to wait for 15 days to get a refund because payment gateway is sending you the refund and it is going to get processed, etc. These things he won't accept. And that's where the experience gets damaged and he won't come back to us. So I think the next thing for us to work upon and achieve is to deliver customer service in 2 minutes, as just like we deliver the loan and other products in 2 minutes.
Yeah. Oh, okay, that is a fantastic example. Now, Ali, when we were speaking earlier, you talked through, so I had this opinion that when something goes wrong, you don't want to speak to a bot, but you had an alternate example. So I would love for you to share the alternate example with the crowd.
Yes, for bots, I think the use case is important. The purpose of defining what the bot was meant to function is replacing the complicated and the complex human behavior and human mind, right? To get the bot to be able to cater to that, you need a few things in place first. One is to be able to effectively have a good design around the use cases that you are trying to solve, so that the artificial intelligence that built, the framework that is built into the bot is mindful of the user who's interacting with it. And I believe, and I've seen this, where the adoption can actually answer 100% of the questions that are meant for that particular use case. So having the use case, the mindfulness framework around this AI approach is probably the single most important factor to be able to get bots, actually useful. And then, of course, you can, have that icing on the cake where a human intervention is kind of the is part of the solution offering to provide the customer experience that you really can live with.
Yeah, absolutely. Now, you have been great panelists, and this makes me ask you some more tough questions before we end the panel. One of the things that I have noticed over the last 10-15 years is when an industry is working really well, you see competitors from big tech, conglomerates, and big banks coming into it. Now, all of you are perfect targets because you're doing so well. If I was in one of the big tech or big banks, I would be looking at your business models and saying, oh, you know what, this works really well. These guys have made it work, hard way. Now what we need to do is offer this. So Shankar, let's start with you. What happens? And a lot of big tech is already doing lending, and big banks are taking all these credit decisioning systems, etc., and they are trialing out how can they lend in 2 minutes, 60 seconds, 3 minutes, etc. What happens when a big tech and a bank comes and offers what you're doing? Do you think your customers will stick around, and why?
Yes, so that's exactly where customer experience plays a role, because product and process can be copied, even the pricing can be copied easily. But the experience that the customer has been given for the last 1 year or for the last 2 years, that cannot be copied instantly. Second, I would say India is a fairly large market, and the reach of fintechs is still to the tier 1 cities and not still on tier 2 and tier 3 cities. So there is a lot of scope for all the companies, even if there is competition, and there is already competition. They have already entered it. So I can see a lot of banks and big tech already entered. They are into credit. So as we say, credit in 2 minutes, even Paytm is giving that. Everyone is, you can get it even from Amazon. So it's not that they are yet to come, they have already come. The only part is what market they are targeting, which is your target customer, and I think the next wave that will be is how fintechs will be entering. Till now the focus has been on India. Now the focus has to shift to Bharat, wherein customers are not very literate when it comes to credit and online solutions. But the challenge lies in how you introduce these solutions to them and how you make them use these solutions in their everyday lives. And I think there platforms like Kalera and few others would play a major role, because I think voice is something that is going to be very helpful in these markets as compared to chat and email. So the upcoming solutions like voice bots, etc., will play a major role. Like, to cite an example, the innovation that Paytm did with the sound box, I think that was a very good example as to what kind of technologies India needs right now to cater to these markets.
I absolutely love the brotherhood in the panel. You guys keep promoting each other, and each other's services. I think I should have all 4 of you in my marketing team, and send you on panels. So, no, wonderful answer. And just a follow-up question. Now, when it comes to lending, I want to be a little bit more skeptic or more responsible towards lending, because do you think credit is available more easily than it should be in today's world?
Yes, it is easily available, but at the same time, there are two sides of this coin. That is, there are players who are very secure and they're following all the standards, and you'll also find players who may not be registered at all. They may not be following the right standards. So when it comes to, there are cases where people have faced fraud or people have faced data theft, etc. And that's where the regulators come in. And a lot of, we have seen a lot of platforms have gone out of the market after the pandemic because of these practices. So I think credit is easily available right now. But the point is about which platforms are allowed in the market, because a lot of unregulated platforms are also available in the market, which can be harmful to the user. So it's necessary to have a standardized approach wherein the user is easily able to recognize this platform is verified or not. Right now, if you go to the Play Store, you will find 100 apps, but you cannot recognize which app is a valid one and which app I should not go towards. So that filtering is not present right now, which is required.
Oh, no, absolutely. And I saw the version 1 of this industry in Indonesia firsthand, where there were a lot of illegal apps operating without the framework of privacy, etc. And it becomes a mess. And Indonesia learned this lesson very hard way, and there was a lot of loss of human life as well around this. So you raise a great point over there. So Mayank, now we come to you, and sorry. So we have talked about, reaching out to the audience, etc. And so what is next? What do we do next from here? Where do you find the next 2.5 million or 5 million customers, and what do you do next for them?
Well, so good thing is we are in a country where there's a lot to be done, right? If anybody is seeing that we are seeing a saturation of startup ecosystem as large, Just take fintech for example, lending, I mean in question, 97% of the population still needs access to credit.
Yeah.
And I think over a period of time, all of this will become as a fundamental right? Access to credit should be a fundamental right. And I think a lot of innovation will happen. So when you see like how we are positioned in the embedded finance space, every technology will try to adapt a piece of embedded finance in it, right? If you go to, let's say, even any of the tech solutions, CRM, like we are a payroll HRMS company, right? Anyone over a tap can get access, right? So as the SMBs and as the workforce adapts more of these solutions, the more intrinsic part of the journey it will become to the final end customer. So that's how we or anyone here starting into looking at the unbanked segment can get to them.
Okay, and Ali and Satish, I want to ask you this common question. Walk us through a couple of innovations that we can expect in the next 5 years that will change how people are engaging with their end customers, with their like lending apps, and all of that stuff. So please walk us through an example, Ali.
I think from a customer experience perspective, when you don't have to call your service provider,
Yeah.
that is managing expectations,
Yes.
right? If you are providing services that are not non-interactive,
Yeah.
I think we would be out of jobs.
Yeah.
And I think we are working towards. I think the whole global ecosystem is working towards that, managing that customer experience where you don't have to talk to your customers. And I think that's where we are reaching ultimately. All these dialogues, all this community. Who has time?
Yep.
Right? I think that's really the future, where you have systems in place that cater to the need of the end user without these complicated interactions. I think that's my.
Okay. Satish, let's pick up a crystal ball because you answered this really well. So I will ask you a different question. Okay, let's give you a crystal ball. 5 years in the future, what do you see happening differently from now?
So I'll give you one example. So Laksh, when you want to speak to any call center today,
Yeah.
what is the waiting time you know about that? Perfect. When you want to reach the branch, the pain you go through reaching to the branch. So the organization is completely shifting to automation mode, okay, where they can at least satisfy their 60-70% customer online journey, okay. Rest, tier 2, tier 3 city they can manage on call or could be other way around, okay. In 5 years journey, I think every organization need to automate their system, okay, where they can, the customer easily can reach, okay. Now, what is the customer is looking, the way they want to chat with their friends and family, similar way they want to, interact with the businesses. So this is where the, industry is moving. And player like us, we are helping to businesses to integrate with the robust API and run the show.
So we are expecting a very automated future. Okay.
Yes.
Okay, so we are right at the end of the panel, and I whenever I have esteemed guests like you, I ask them this one question every time. This is my final question to you. So Suraj, we'll start with you. What is one thing, if you had like unlimited power, resources, etc., what is one thing you would change in the lending industry today?
I would say I would allow people to use their credits using UPI. I think that's one thing I need, because I see there are billions of transactions happening on UPI, but these are direct from bank, whereas people cannot access UPI through credit. That's opening up already. Credit cards have been allowed from RuPay credit cards have been allowed, but I think a lot of push needs to be required at that end, wherein people are able to utilize the credit limit for making UPI transactions at a pawn shop or at a kirana store or a general store. They can just use credit and pay and just leave directly. So I think
that is a wonderful vision. You go in and you can get kirana stores, etc., to accept credit. That is absolutely wonderful. Mayank, we come to you. One thing you could change today in the digital banking space, what would that be?
Well, for me, it would be more on the policy form, more at a macro level. I would think certain policy reforms or maybe enablement that allows businesses to have certain capital requirements to suffice for payday loans, have insurance coverage for their employees, ensure direct payouts. So some things which are very hygiene, I think with policy and with enablement, that can be, that is my wish list on how we see how the lending and the entire digital space will move.
Oh, thank you so much. Satish, one thing you would change, in the financial industry today, it could be anything. What would that be?
I can suggest financial institution to automate their processes, make their life more easy.
Now we know who the salesperson in the room is. So, yeah, please.
No, the reason behind that, Lakshya, I mentioned, I read the story. The 50% is already moved. They are dealing with the banks or a company. This space has grown tremendously. Okay, this fintech industry. Every day the new, unicorn is coming in India. So everybody is asking, like, now today, everybody is saying want to deliver the grocery in 10 minutes.
Yes.
Is it getting delivery? Nobody knows. I never get the delivery in 10 minutes. So, but the fintech is giving a loan in 2 minutes, as Suraj just mentioned, right? So, I suggest, okay, they should automate the process better way.
Absolutely. So you want more automation. Ali, we come to you. What is one thing that the industry should forget that they are doing today?
Should forget.
Yeah, they should just get rid of it today.
Paper.
Yeah, sorry?
Get rid of paper.
Oh, okay, get rid of. Okay, we have a second.
Which means currencies, which means bills. We are on the digital transformation, right?
So we have a second salesperson in the room as well. So, and one thing you would like to change with the fintech space or the financial industry today?
So I think everybody talks about financial inclusion. I think I would really want to look at social inclusion as well.
Yeah.
That's a big one for us. For us to be part of this grand vision where we are partnering and we are embracing this India stack, right? The big grandeur vision, the ambitious plan to get your identification, your payments, your data, and of course the open network, right? To participate in that, to be a key player.
Yeah.
I think that's really where we need to go.
Yeah, absolutely.
Globally.
Thank you so much. So guys, thank you so much. You were very, very good guests. You answered some very tough questions. So, I think Suraj is going to have a very separate chat with me once we get off the stage. So, but thank you so much. I want you to be able to interact with your...
I have one question for you.
Okay, please. Please go ahead. Yes.
So what are your plans? I think you just announced about, so you want to talk about that?
So, okay, one, I am not PR certified, so I hope I don't get fired on day 2.
I didn't put you in a tough situation.
No, you have not. You are not. So what we want to do is we want to democratize retail investors to be able to invest into the US market. It is one of the biggest markets out there. And we see a couple of challenges that there are a lot of challenges, but there are a few that we can address. So one of the challenges is like access to the markets. If you have less access, you have less number of players offering it, the cost goes up. So we want to work with, a larger set of platforms and brokers, etc., to offer, all of you, like a digital bank, you have all these Gen Z customers, you want to own Apple, all these stocks, etc., we can help you with that. So, but not being the salesperson in the room, the third salesperson, and then the cost of doing these transactions, we participated in one of the RBI sandboxes very recently. So what we want to do is we want to look at all the friction points, and we want to look at all the points which is making investing in US markets increasingly tough or, expensive, and we want to address all those points. So, and as a company, we have been around for 20 years. So they have been around for 20 years. This is day 2 for me, and we are already partnering with platforms like Grow, Upstock, etc. So want to have a bigger partnership, want to make products in India, exported out of India, and want to be part of the India growth story because it is incredible, what India is doing right now. Okay. So thank you for asking that question. I think our CEO really appreciates that too.
You're welcome.
Thank you so much. So thank you.
Thank you.
Okay. Thank you, gentlemen, Thank you, gentlemen, for that wonderful session and a lot of interesting points coming out there. Particularly enjoyed what Satish mentioned about building genuine relationships when it comes to customer experience. Kumar focusing on the employee and not just the company. And his example on the pandemic loans for gas cylinders was pretty interesting. Ali mentioned that bringing the nudge into the customer experience to achieve the aha moment was something that they are focusing on, which again was something that we could all ponder on. Suraj focused on the fraud prevention and security as being his priority in the along with convenience, and bringing instant gratification to the credit business, which is something really interesting. And Laksh, it was a well and splendidly moderated session. Thank you so much for doing this with us. Take care of yourselves and all the best.
Thank you.
Yeah.
Thank you so much.
We now have
Thank you.
We now have a 10-minute break, but kahin mat jaiye, please come back. We have a product launch by our partner NPCI. Thank you so much.
La noche no se muere.
Ladies and gentlemen, I'm sure that each one of you would agree that it is such a sunny and bright day to be a part of this amazing gathering. First of all, once again, we would like to welcome you all on behalf of NPCI. And yes, ladies and gentlemen, welcome once again to the Global FinTech Fest 2022. Ladies and gentlemen, as you people know that NPCI do believe in the statement that we can do so little if we are alone, but together we can achieve so much. So to start off, before we actually begin our session for the day, we thought of a small task for each one of you in the house. Ladies and gentlemen, I'm sure every one of us would agree that 2 hands are better than 1, that all we are expecting is everyone to showcase the unity we have right now in the house, and all you have to do is showcase on the gesture of my hand. So if I have my hands up in the air, I am expecting a clap from each one of you. Is that possible? 1 clap at a time. All you have to do is focus on the gesture. If it's down there, it has to be complete silence. All right, let's give it a try. Focus and coordination is what we are looking at. That has to be louder. Together, as a big happy team. All right, ladies and gentlemen, Can we please have a big round of applause? And we love the fact that finally we can see some happy, smiling faces in the house. Thank you so much. And ladies and gentlemen, on that note, yes, of course, once again, I would like to welcome and extend a warm welcome on behalf of NPCI. As we all know that the NPCI Partner Program is a unique and fresh initiative from us to collaborate and work more closely with entities like yours, to dedicate to make impact to the scale serving the financial sector through truly robust and agile products and services. Ladies and gentlemen, let me also tell you that this program is specially curated for you to expand the retail payments network by making it more exclusive and transparent and accessible. We are confident that it will definitely create limitless opportunities for you and your customers out there. And to let you know more about this program, ladies and gentlemen, it's an absolute honor to please welcome on stage with us. I'm sure we all are looking forward to hear from her with a big round of applause. Please welcome on stage our COO, Ms. Ravina Rai. Can we have a round of applause?
Hi, good morning, everybody. So it's great to have you all here. First half of day one physical event of the Global Fintech Fest. So, when we started planning for this, we were wondering how the turnout would be. Of course, you don't even know at that time whether there'll be a COVID wave 3 or whatever. So I think we are done with all that. We've had an amazing turnout for the event itself, and just wonderful to have everybody here. While this event is happening in this room, I think for me personally and for many of us at NPCI, this is the most important event of the conference, second to the governor's launch, which is happening today evening, so don't miss that. But this is a very, very important event, and I want to speak about why before I hand over to my colleagues to take this event further. So when we look at what's happening in India, with digital payments, and we are so proud of all the growth and the innovation, the kind of applications, the number of users who are on board, the number of merchants who are on board, all of that is thanks to great innovation by the market system, by the ecosystem, and at a phenomenal pace. And that includes the apps, that includes the aggregators, that includes payment gateways, that includes solution providers in the market. It includes what the banks are doing, and ultimately all the technology infrastructure that's powering this. That's crazy stuff, right? Completely crazy. The kind of scale, the kind of complexity, the kind of functionality that we are dealing with in the Indian tech ecosystem, and the pace at which this change is moving forward. So much as we appreciate it, we also know that it's not as seamless as it looks, because when there is a new product or a new functionality that really goes live, I know what we all go through, right? There's a lot of angst on our side, a lot of angst with the banks, a lot of angst with the payment ecosystem, and certainly the technology partners. So they are the sort of hidden diamonds behind all of this, who are taking most of the stress of the timeline, the design, the architecture, the go live, and perhaps are not really as visible and seen in the foreground. So we wanted to really address that, and we wanted to ensure that the partners also have access to everything that's going on in the payments world, especially with NPCI, very early in the cycle. So make it very consultative rather than complete a specification document which then goes to market, and ensure that we are aligned in terms of a roadmap. So today, actually, when we launch something, it could take between 6 to 18 months to be prevalent in the market sufficiently that most of the users can actually use that product or functionality. Now, that's just way too long a time, right? So it's very critical. It's a big imperative to crunch this timeline. And for that, this alignment, this early alignment with all the ecosystem partners, as well as with the with the technology partners is going to be extremely critical. So these were some of the objectives that really took us down this path. And it's a recognition of the great work that our partners are doing. But it's meant to be an ongoing program. It's an ongoing program of partnership that we are launching today. It's the first for NPCI. And I really look forward to this becoming a very, very rich, a very productive, a very impactful association and partnership for the entire industry. And with that, I'd like to launch the nice video that Rajiv has prepared for us. So Rajiv runs this program for NPCI, and I'm sure he's worked with many of you to put this together. So kudos to you, Rajiv, and Nalin and the entire team at NPCI who's been working on this. And thanks for everyone who's participating in the event today. And with that, let's launch the video.
Ladies and gentlemen, I'm sure that deserves a bigger round of applause. Finally, the big reveal is out, which we were all waiting for. On that note, I'm sure there are a number of questions related to this. To answer it all, we have the right person coming up next. Ladies and gentlemen, can we please have a round of applause for Mr. Rajiv Agrawal? I'll request him to please take the stage forward.
A very warm welcome to everyone. Can we have the presentation up, please? Okay. Thank you everyone, first of all, for joining us for the launch of NPCI Partner Program. We've been talking about it from the last 6 months or so, and finally we are here for this launch. And can't thank you enough for your support, right from the designing piece to the onboarding piece, which we concluded with your teams recently. There are a lot of questions on what NPCI program is, how it is going to work. So just to set the context, NPCI so far has largely been a bank-facing organization, right? They are our primary customers, and they are your primary customers as well. With this initiative, we wanted to open up a channel of communication, or rather formalize that channel of communication with the financial technology service providers, so that we can have the information going out in the market in a more seamless way. So this is the spirit behind the program, that we wanted to reach out and work more closely with the financial technology service providers. You could be providing any kind of a tech service to the banks or the issuing side, or on acquiring side, or a PPI or a fintech. You have some kind of a tech stack on the offer which can make a difference. So it could be a switch, it could be a core banking system, it could be a card management system, It could be, you could be into aggregation space or a payment gateway, any kind of tech, any kind of value addition which you are doing to the overall customer journey or the customer management for an issuer and acquirer. We would be happy to collaborate with you, to work with you, to develop new products, innovate, offer better service to the banks who we serve, and ultimately the end customer who uses our products. So that's the philosophy. It's a new channel which will help us to have the communication more seamless. So what's the value proposition? What exactly is there in store for everyone? I think before I start talking about the value proposition, I just want to thank all of you, because you helped us to design the value proposition. We visited your offices, we sent you surveys, we made phone calls to your offices, right, from top to bottom. And once we had that information, we analyzed what is the need, right? Where is the gap? How we can add value through this program, how we can make this program more meaningful. So few things came out, and we shortlisted the top value propositions which are required in the market to start with. So thank you so much for helping us out to design this. So the first one is the e-marketplace that will serve as a platform where buyers can meet the seller. So if there is any bank who is looking for any kind of a service, and you are onboarded on our platform, we will put you on the e-marketplace. So it will have a list of fintechs or service providers who are providing some kind of a service which is certified on NPCI product. And if there is any issuer or acquirer or any fintech, PPI, NBFC who is looking for that kind of a service, can get that list. They can reach out to you through this e-marketplace. So this was the top rated proposition which was expected, and we have put it in the program as the first priority. We have testing and certification. We realize that sometimes you face that issue in the market, wherein, and this is especially in the case of new startups who are starting up their journey to serve on the B2B side for some kind of a tech stack, but they are asked a question, are you live, are you certified, right? And NPCI's approach so far has been that we onboard a service provider only if they have a bank with us, right? So we want to solve that problem through this approach, wherein we can have you pre-certified on NPCI product directly, regardless of a bank. And then it will make it easier for you to make a pitch to the issuers or acquirers. So that will really help you to approach the market faster. We will organize exclusive learning and training programs as per the schedule, which we will receive from your product managers, from your HR department. We understand that people come, they leave and there is an attrition problem. So there is a knowledge gap that appears every now and then. So we'll try to close that gap with a scheduled training program with all the service providers. And then, of course, once you are onboarded on the program, we will give you an accreditation that you are certified as an NPCI partner. Depending upon which category you fall into, we'll talk about the categories in the next couple of slides. And yes, we want to work it out as a community, a community which is standing together, which is building new products, which are solving each other's problems. So this is not only your dialogue with us, but also a platform where you can interact with each other more openly in a very constructive way. And yes, partner series. So we will provide a platform wherein you would get to talk about your products, and we'll try to get the right audience wherein you will get a platform to showcase what is the value proposition, what are your strengths, and we'll try to get the right audience for you under this partner series platform. So you want to launch a new product, or you want to talk about the additions or upgrades that your product has done, and you want to highlight that information in the market, this platform will serve you. And portfolio page, yes, it's a part of e-marketplace only, but e-marketplace, if they want to get more information about you, who's who, where are your offices, how long it's been you are working, so we can design a locally hosted portfolio page, so they don't have to get redirected to your website. I mean, they can, but still that information can be provided locally on our website. And last but not the least, information on the RFQs, RFPs. We know that there is a demand which comes up from the banks every now and then. They're looking for new service providers for their new products. So we'll try to collate that information and put it on our portal. So it will help them to get the information faster. It will help you to get the information who's looking for what kind of a service. So that information will be consolidated on the platform, which will be on offer for you. So that's the value proposition largely. And then these are the partner categories. So there are 3 categories that we are starting with: certified partner plus, certified partner, and value added partner. So I'll just explain the certified partner category first. So this is a category in which you will be onboarded as a certified partner. You will get the accreditation as a certified partner. And the requirement is that you complete certification, a complete certification on a complete product. So if it is RuPay, BEPG, then you complete all the features of BEPG, S2S, SI, and other remaining 7-8 product features. So you complete one round of product certification entirely on one product, right? So that's the first requirement. The second is that, yes, you agree to the terms and conditions of the program. And the third is that you are compliant to the various regulatory guidelines. It could be PCI DSS, PADSS, data localization, ISO, Payments Act, etc., etc. So we'll take proof of those documents. And once you have completed all these 3 requirements, then you will be onboarded as a certified partner. So a level up to the certified partner is a certified partner plus. The difference between both of them is that in certified partner plus, we will evaluate the technical capability of your solution stack, of your hardware, software, or firmware, whatever you're providing. So of course, with your due permission, if you allow us to carry out that assessment, which can give more sense about your stack to the market, you know, how robust it is, how agile it is, how flexible it is on the functionality side, on the technical side. And if that works out well for you, you know, we'll onboard you and accredit you as a certified partner plus. The last category, but not the least certainly, is VAS partner, which is value added service partner. Here you are not, this is for those players who are not providing, who are not playing a role as far as the authentication or authorization of a transaction messages, but they are playing a very important role somewhere as far as the customer management of an issuer or an acquiring bank or a fintech or a PPI is concerned. So they could be a customer service agency. It could be it could be collections agency. It could be customer onboarding. It could be fraud management or anything. So there you don't have to get certified on NPCI product because the transaction message does not flow through you, right? But still, since you are going to provide some value added service in the whole customer journey or the customer management, we'll onboard you as a partner. So these are the 3 categories we want to start with. Yeah, and this is a slide on the evaluation framework. So yes, you need to be compliant to the industry standards, which are required in the payment industry. Then product certification has to be completed on one product. Your tech assessment, like I said, with your due permission, with the third-party agency will carry out the tech assessment and the program terms and conditions. So this is a very simple evaluation framework that we have created. And this is the onboarding process where all this process, you know, which we carried out right now will go completely digital. There will be a portal and which we will launch soon. And you can sign up through that portal by giving out your information of your certification requirement, of your organization details, and we will validate some part of that information in the form of which product are you live on and when did you go live on. So that simple validation will be carried out. The registration will be the second step based on the information that you will provide, and the sign up will be completed. So it will be a digital process, very, very simple and straightforward. Yeah. So so this platform again is going to help us to create a stronger relationship for a new set of entities, so to speak, like financial technology service providers. We can collaborate, we can work on different, we can innovate, we can co-develop. We have our open platforms in the form of UPI or Beam or card-based platforms like RuPay or batch-based platforms. So we can co-develop, we can enable partners which will help you to go live faster in the market, and reach out to new customers. Yeah, we want to reach out to new customers, joining hands. It could be new geographies, it could be new market segments. Yeah, so this is what the value proposition is. I hope that it will create a really meaningful impact for all of us here. So thank you so much. Thanks for participating. Thank you.
Thank you so much. And yes, ladies and gentlemen, on that note, yes, of course, we would like to grab this opportunity and felicitate to all our partners in the house today. So, ladies and gentlemen, here we present the trophies and certificates under the Express Achievers category. This category is to recognize the efforts of the partners in taking the bank's Fintech and PPTs live on the NPCI's products faster than anyone else. Ladies and gentlemen, to do the honor, first of all, we would like to welcome on stage Mr. Avinash from Axis Bank. He's a CTO. Ladies and gentlemen, can we have a round of applause for him? And we would request each one of you to definitely go ahead and encourage all the awardees coming up here on the stage with your big round of applauses. So let's go ahead and welcome our first awardee. Let's go ahead and make some noise for M2P Solutions Private Limited. Can we have a big round of applause for Madhusudhanan Rangarajan, everyone? Congratulations. Can we have a bigger round of applause for him? Presented with a trophy and a token of appreciation certificate from our side. Congratulations, and ladies and gentlemen, once again a big round of applause for him. Thank you so much for joining us on the stage. Moving on, can we please have a big round of applause for Fee Commerce Private Limited, everyone, and we would like to welcome on stage Mr. Joshdev Thatil. Ladies and gentlemen, of course, he deserves it all. Can we have a big round of applause? Congratulations. And of course, he is being felicitated with a certificate and a trophy from our end. Thank you so much. All right, ladies and gentlemen, moving on, let's go ahead and give a round of applause for Olive Crypto Systems Private Limited. We would request Bhairavi Gare to please join us on the stage. Finally, we have Olive Crypto Systems Private Limited here with us on the stage. So please, can we have a big round of applause? And yes, we are felicitating them with a certificate and a trophy in the house from our end. Congratulations, ladies and gentlemen. Let's go ahead and encourage each of the awardees coming up. Thank you so much, Mr. Avinash, for joining us on the stage. Moving ahead, we would like to call upon Miss Anjani Rathore, CDO from HDFC. Can we have Mr. Kunal Kalavati on the stage for us to do the felicitation? Ladies and gentlemen, moving on, we would request Miss. Yes, we have Mr. Nalin Bansal here with us on the stage to do the honor. Can we please have a round of applause for him? Well, it's time to have the InSolutions Global Limited on the stage with us. A big round of applause for Adelia. All right, so we have Mr. Anup Nair joining us on her behalf. A big round of applause for Team InSolutions Global Limited. They have been felicitated with a trophy and a certificate from our end. Please, once again, a big round of applause for InSolutions Global Limited. Congratulations and thank you so much for joining us. Moving on, it's time to have on stage with us Mindgate Solutions Private Limited. Can we please have a big round of applause for them? Ladies and gentlemen, they have been felicitated with a certificate and a trophy from NPCI. Can we have a big round of applause for them? Ladies and gentlemen, moving on, it's time to have the team Infrasoft Technologies Limited on the stage. Please, can we have a big round of applause for Team Infrasoft Technologies Limited. Thank you so much and congratulations. Thank you so much, congratulations, and thank you so much, Mr. Nalin, for doing the honor. Ladies and gentlemen, it's time to call upon Mr. Kunal Kalavatia, who's the Chief Product Officer of NPCI. Can we have a round of applause for him? Thank you so much for joining us. Yes, it's time to have Mr. Debi Prasad Sarangi from the Isserview Technologies Private Limited on the stage. Can we have a big round of applause for them? Congratulations to the whole team. Ladies and gentlemen, can we please have a big round of applause for them? Well, I'm sure appreciation in the form of a round of applauses from the audience definitely motivate all the awardees coming up here on the stage. Let's move on and call upon Finacus Solutions Private Limited on the stage. Let's give it up for Mr. Bhushan in the house. Ladies and gentlemen, a round of applause for Team Finacus Solutions Private Limited. Congratulations. Congratulations and thank you so much, Mr. Kunal, for joining us on the stage. Ladies and gentlemen, it's time to call upon Ms. Anjani Rathore, CDO from Mr. Anjani Rathore, CDO from HDFC Bank on the stage. Can we please have a big round of applause for him? Let's go ahead and make some noise for Euronet Services India Private Limited. Can we have Mr. Pranesh Zaveri from Team Euronet? Ladies and gentlemen, a round of applause for Euronet Services India Private Limited. Thank you so much and congratulations. But I'll request you to please stay back on the stage, Mr. Anjani, for the next few words. Moving on, ladies and gentlemen, let's call upon Jaspay Technologies Private Limited on the stage. I would request Mr. Vimal Kumar to please join us. Finally, we have the team Jaspay here. Ladies and gentlemen, can we have a big round of applause for them and congratulations to the whole team. Thank you so much for joining us on the stage, for doing the honor. Moving on, yes, we would like to call upon Mr. Neeraj Thrashwala, Head Payment Solutions from ICICI. Ladies and gentlemen, our next awardee is all set to come up. Please give it up for Financial Software and Systems Private Limited. Can we have Mr. Jay Shankar AL to please join us on the stage? We have Mr. Kiran in the house. Can we have the team, Financial Software and Systems Private Limited, please on the stage? Everyone, can we please have a thunderous round of applause for them? Thank you so much. Ladies and gentlemen, moving on, it's time to have Team Hitachi Payment Services Private Limited to please join us on the stage. Can we have Mr. Anuj Khosla from Team Hitachi Payment Services Private Limited to please join us on the stage? All right, moving on to the next one. Can we have a round of applause for Worldline India Private Limited, everyone? And we would request Mr. Deepak Channani to please join us. Yes, ladies and gentlemen, we have the team Worldline India Private Limited joining us here. Congratulations and thank you so much for joining us on the stage. Moving on, we would request team DigiLedge and Emergotech to please join us on the stage. Ladies and gentlemen, a big round of applause for them. Congratulations. I'm sure that all we need in the house is some energy to pass on to all the awardees. Everyone, I'll request, can we please have a big round of applause for them? Thank you so much, sir, for joining us to do the honor. It's time to have Nupur Chaturvedi on the stage to do the honor. Well, we are delighted to have you on stage. Ladies and gentlemen, let's go ahead and move on and call upon our next awardees. Please make some noise for Transaction Analyst India Private Limited. Congratulations to Team Transaction Analyst India Private Limited. Can we have Team Setu Technologies next on the stage? A big round of applause for them. Ladies and gentlemen, it's time to have Maximus Infoware India Private Limited to please join us on the stage. Can we please have a big round of applause for Team Maximus Infoware India Private Limited. Can we have the team Pay Global on the stage? Can we please have a big round of applause for them? Ladies and gentlemen, a big round of applause for them. Congratulations to the whole team once again, and thank you so much for joining us on the stage. Ladies and gentlemen, on that note, let's go ahead and welcome Team Infibeam on the stage. Can we please have a big round of applause for them? Congratulations and thank you so much. Moving on to the next one, please make some noise for Sarvatra Technologies Private Limited. Ladies and gentlemen, please can we have a big round of applause for Sarvatra Technologies Private Limited. Heartiest congratulations and thank you so much to the whole team for their input and efforts. Congratulations once again and a big thank you to Ms. Nupur Chaturvedi, CEO NBBL for joining us on the stage to do the honor. Ladies and gentlemen, moving on to the next set of awards, we would like to welcome on stage Ms. Praveena Rai, COO NPC. I am sure we are looking forward to have her on the stage. First awardee to join us here, and of course we need to see some energy back in the house. Everyone please, let's go ahead and give it up for AGS Transact Technologies Limited. We would request Mr. Ravi Goyal to please join us on this stage along with his team. Ladies and gentlemen, can we please have a round of applause for him? Thank you so much. Moving on, it's time to have the CH Technologies Limited. I would request the team members from CH Technologies Limited Mr. Rahul Kulkarni to please join us on the stage. Ladies and gentlemen, last few more awards in the house, and let's go ahead and do not bring the pace of the house down. Please, can we have a round of applause for the awardees coming up here? Moving on, it's time to have Network People Services Technologies Limited. Can we have the team Network People Services Technologies Limited on the stage? Ladies and gentlemen, let's give it up for Mr. Deepak Thakur. Thank you so much. Last but not the least, can we please go ahead? Let's go ahead and give a round of applause for Saraswat Infotech Private Limited. Can we have the team Saraswat Infotech Private Limited to please join us on the stage? All right, so I think, can we have a round of applause for them? Unfortunately, they are not there with us today. Do we have? Of course, this is a photo opportunity. You will have to come at least, even if you're taking on their behalf. All right, thank you so much, Praveena ma'am, for joining us on the stage. Ladies and gentlemen, once again, can we have a big round of applause for her? A big thank you to all of you for joining in. But yes, it's time to have with us on stage, ladies and gentlemen, yes, we're talking about our Chief Relationship Management and Key Initiatives Corporate Business, Mr. Nalin Bansal, to please join us on the stage.
Thank you. I know it's been a long event, so I won't take much time. I just wanted to just go back to what Praveena was talking about. All of you. This has been the last 2 years, actually, 2.5 years, has been extremely challenging for all of us, especially the fact that we've all had to manage not just our systems but also our people, given the spate of innovation that have come across in the whole fintech industry. I like to call ourselves, this group, as a payment tech, not fintech in general, because to me, I think this group has been the harbinger of everything that has happened in the last 3-4 years. We are what we are because of you. It's a thankless job, eventually. And all the heavy lifting, the NPCI certification, going through all of that steps, I think nobody kind of tends to notice and talk about. To me, this is the silent innovation, pretty much like our team sitting out of Hyderabad and Chennai, managing those data centers, Satish, all of them. I think these are heroes and folks that we don't talk about. I think this was an opportunity to say, all of you, that we cannot thank you enough. This has been a journey over the last 13 years. It doesn't start today. We just did not get enough time to sit back and say thank you. And I think that's what we wanted to do today. We also wanted to take a lot of feedback that we got from you over the years. This is one small, step from our side to say that we put that trust in you, and we hope that you are with us, in moving along in this journey with passion, pride, and some responsibility. So thank you for all that. I just wanted to also add, you must have seen some trophies. So while you've got certificates, those certificates are for specific platforms that we are operating. Those certificates are valid for a year, and there are benefits that Raji spoke about that come with those recognitions. We also gave out some trophies. These trophies were under various categories. We wanted to make sure that we wanted to recognize you for some of the extra legwork and that extra hard work that some of you have put in. For example, for 5 on tokenization, making us live first. ISD, MindGate, you folks are getting us RuPay credit card live on UPI. So just wanted to make sure that we are able to give you a thank you note on that. So thank you so much for coming today. Like I said, the journey starts today, at least the recognition starts today. We've got a long way to go, so thank you so much.
Thank you so much once again, each one of you, for joining us for this wonderful session. Ladies and gentlemen, as we started off on a note of working together, we would like to end this session on that note itself. As we say that alone we are something, but together we are everything. So let's definitely make this world a better place. Thank you so much, everyone, and have a great day ahead. Thank you.
La noche no se durmió. La noche no se durmió.
Session, ladies and gentlemen, is a special address on the topic innovations in cross-border payments. May I request all of you to please take your seats. Thank you. Our next session for the day, ladies and gentlemen, is Innovations in Cross-Border Payments. It's a special address which will be given to us by Mr. Mehdi Mana, who is the CEO, Buna Arab Monetary Fund, the Regional Payments Clearing and Settlements System. Please welcome Mr. Mehdi Mana on the dais, please. Thank you.
Yeah, good afternoon. I'm very happy to be with you today, and I would like to thank very much our partner, NPCI, the National Payment Company of India, for the invitation to be with you today and to share with you some thoughts. First, maybe a small introduction about Buna, and then some thoughts on how we can contribute to create a more fertile and more productive space for innovation. What is Buna? Maybe some of you hear about it for the first time. Before being operated by an independent organization that I have the pleasure and honor of managing, Buna is first of all an initiative of the central bank. It has been initiated by the Council of Arab Central Bank and Monetary Authorities governors, and it was with the idea of creating a payment system that would support and the integration between the different Arab countries by empowering their economies and favoring or promoting the use of the national currencies. that had also an international dimension or a global dimension from the beginning in its inception, because it did not been conceived to be focused only on the Arab region, but it had from the inception the aim of also building better rails between the Arab world and the rest of the world, and mainly the major trade partners of the Arab regions. One particular aspect of it, which is very keen to our heart, is also the financial inclusion dimension, which has also been part of the vision since the beginning. So that's Buna in terms of idea, in terms of inception. In terms of practicalities, Buna is, as I say, the payment system. It's a centralized payment platform. Its aim is of simplifying the process. So by getting within the same ecosystem the set of payers and payees, and to process the payment directly between them in the easiest possible ways. So that, of course, can be easy and can be efficient if it is facilitated by a different feature to secure the payment, to eliminate any credit risk, to provide a real-time dimension in the settlement process, and also to have the legal setup that is allowing to provide the certainty for the settlement. I'm referring here to the finality for the payment that are processed in Buna. So we ensure with our setup, again, immediacy of payment and the reduction of the chain between the payer and the payee. So of course, when it comes to cross-border payment, as I said, Buna is focusing only on cross-border payment. One key aspect of it is the whole effort that is now being supported by the G20 to enhance cross-border payment in order to reduce the cost, enhance the speed, increase the visibility, and also facilitating the access. So these are the 4 deficiencies or areas for improvement that have been identified by the G20, which has started with the G20 presidency and has been followed up from one presidency to another. So we are looking forward to the Indian presidency that we expect it also to be very productive and providing tangible result at that level. Buna, with its simple model, is a strong contributor to that, because with the simplicity, again, with the centralization, with the elimination of friction that could exist, you see a traditional model, how it looks like today from bank to bank, relying on complex chains of intermediaries. All that is reduced to its maximum simplicity, with Buna. Again, processing payment directly between different actors without intermediaries and without any burden in terms of technicalities. So actually, Buna, although it has been initiated prior to the effort of the G20, we realize when discussing with them, when we exchange views with them, that we are meeting these different objectives and contributing to the 19 building blocks that they have identified. So if we try to enlarge a bit the ambitions and what Buna is trying to achieve, so I refer to financial inclusion. I also could mention, this is what's one of the most important objectives as well, is to enhance the level of compliance. Because when it comes to payment, in particular to cross-border payment, compliance is key. And if you want to deliver something efficient and reliable, and recognized by partners and by regulators, we have to be strong on compliance. So Buna had put that in the core of its design. So we are still probably one of the first payment system that has embedded all the compliance checks, AML, CTF, etc., in its own design, while normally it's more with the financial institutions. Interoperability, yes, this is very key. So again, this was part of the vision from the beginning, to be open to the rest of the globe and to strengthen the ties with the major partners. So interoperability was also part of the design since the beginning, and that, again, is being further supported by the G20 agenda these days. We had other ambitions. So when you have an efficient payment system, you can think about different use cases that could be supported by that. So supporting for trade finance, supporting security settlement or security or debt issuance, which is also now being more and more critical these days. And finally, also acting as a direct facilitator for innovation and the contributor to innovation by either innovating ourselves or providing a new space for innovation. So the good thing is that Buna is providing results on all these streams. So when it comes to the interoperability in particular, we have different discussion and different MOUs with strong partners. So NPCI is one of them. We have others being in discussion, but the same is being achieved on each and every element. So when it comes to the connection also with other continents such as Africa, we have PAPS as partner. And when it comes to Europe, we have had in particular an experiment with Banca d'Italia. That was part of the G20 agenda under the Italian presidency. So they proposed to Buna to initiate an experiment to make sure that two instant payment systems could be interoperable between Europe and between the Arab world, and indeed we managed to process payment in less than 15 seconds cross-continent, cross-system, cross-currencies, with all the feature that would allow the delivery and the confirmation of the payment end-to-end with the whole loop. So what is good? What is good in terms of innovation and space for fintech, just to loop with this topic of this conference, is that all of this is new, and all of this is a space for innovation. So all these initiatives that we are taking here need support. So we are not the one building the whole solution end to end. We are again creating the space to provide innovation, to provide solutions. From time to time, we are compared to a fintech, and I'm asked whether we are competing with fintechs or not. No, I don't see personally competition. So what I see is really this collaboration. The same question is being asked regarding Buna vis-à-vis the bank. Buna does not function without the banks. Buna does not function without solution providers. And what we are doing is, again, creating a space, creating a full large ecosystem that is not covering one country, but a large region, and also building bridges with other regions to create more space for efficient services and more space for innovation. So of course, this innovation should have a name. Again, we are driven by our objective of simplifying the payment process and making it smooth and making it less costly. But of course, this cannot be achieved without challengers and without the technology providers that are providing the right solution to the end users. So interoperability, again, I said that it's an important topic in the context of Buna and its setup, and also in the support of the G20. We are achieving that because, again, of the fact that we are using simple processes, but also because we are relying on standardization. So all what we are trying to do is as standardized as possible, from the message standard adoption to the technology to the different aspects. That combined with the 24/7, at least in terms of trend operating hours, are key facilitator of interoperability with other systems. So we have many initiatives, but today I'm here to focus on one in particular, which is our partnership with NPCI. So this is a partnership that makes absolute sense for different reasons. We have really a lot of common in terms of setup, in terms of vision, referring to the aim of streamlining cross-border settlement, referring to the aim of increasing financial inclusion. So this is a strong aspect that is in the DNA of the two organizations, the harmonization and the contribution to the G20. So we are very often, both of us, attending their sessions and providing the input for the whole groups. It also makes sense in terms of potential, because when we discuss with other regions or other countries, we speak sometimes about remittances, in other cases about trade. When it comes to India and the Arab regions, all use cases are applicable and all use cases are very meaningful. So in terms of corridor for remittance, it's one of the largest one that exists globally between the Arab region and India. When it comes to trade, it's very, very important, and it's getting even more important these days. And the same when it comes to hopefully digital commerce that is being developed further and further. And maybe I should also have included the investment that is getting stronger between the two countries. In terms of actor as well and potential of users, it's significant. So the number of banks on both sides is sizable. In terms of also final users, so when it comes to population, we are speaking about millions of people that could benefit from the development of efficient services for payment between the Arab region and India. As well, I mean, I mentioned here the list of currencies, so we have 6 currently being offered in Buna. 2 international, the US dollar and the euro, in addition to 4 Arab currencies. Why not the Indian rupee as well in the near future to facilitate even further this partnership and making it even more efficient than what we plan at currently. So this is nice to have on paper. Maybe the question is how are we progressing? Where is Buna today? Buna is looking good, so we have started our operation end of 2020. And since then, the growth has been constant. So you've seen 3 curves there on this slide. So the first one is about the currency, again, 6 currencies. That was the priority of our first year of operation. So 2021, it was mainly focusing and having as objective to bring all meaningful currency in Buna, which is today mission achieved. Because with the 6 that we have, we cover about 90 or even more % of the intra-Arab trades. And again, whenever we look to new partnership, we consider additional currencies as well. When it comes to the participant, I referred in the previous slide to more than 200 banks in the Arab region. We are in contact with all of them, and 80 of them are already participating in the system today. Actually, more than 80, because the figures move fast. So now we are closer to 90, and hopefully we'll exceed the 100 by the end of this year. So we are getting there also in terms of coverage. Our aim was to cover the whole region, and this is step by step being achieved. Finally, again, what is very important to us, it's the interoperability I mentioned, which is also growing fast since we have demonstrated that we are delivering. So after including the currencies and starting to onboard some critical banks, we have demonstrated that we are reliable partners, and we started these type of discussions, again, in particular with NPCI. Yeah, maybe my last slide just to reinforce the idea that we have also a strong ambition in terms of product roadmap. If I try to summarize, our vision is to provide a single window that covers different regions, multiple currencies, and all the meaningful existing and future product. So our first release was focusing on large value payment and RTGS services, but now we have also the instant payment available. And this is 24/7 real time. We are in the pilot phase today, and that should be very quickly followed by the PVP functions, again, to try to fertilize or to make maximum use of this multi-currency dimension to optimize even further the liquidity utilization within the system. This is ready, and it's being tested today, so the launch is expected by the end of the year, hopefully, if we manage to bring some of the participants up to speed. And that will continue over the upcoming years, to extend little by little to additional services. But again, payment system globally have a high potential, so payment is critical to many economic activities, and when you have the right setup, you can support a bunch of these activities, and when you have the right setup, we can also initiate different partnerships with, in particular, again, the one that we are proud of, which is our partnership with NPCI, and many thanks for the invitation again. Thank you. I don't know if the session is open to questions or not, but if that is the case, I will be happy to take a few questions, and if you still have time.
The digital gold savings platform. If I want to offer that to non-resident Indians overseas, is there any way that we can tie up with Buna on it? For the payment processing part of it.
So as I indicated, we are at the current setup of Buna, we don't go up to the final user. So this is not a space that we invade currently. For sure, there might be room for you, and this is why I wanted to create the awareness around Buna, to create awareness around the potential, but it's not something that we are involving ourselves in today, so we cannot facilitate it directly.
Hello, hi. So these rails that you've created, are they only for banks, or can fintechs also use them?
So the participation in Buna currently is limited to licensed banks. Okay? So we don't have offer participation to non-banks. It's something that could be considered at a later stage, but again, the compliance dimension was key in the setup, and to provide maximum reassurance to the different regulators at the beginning, it was required to take it easy step by step in terms of participation criteria, and this is why we are limiting it to licensed banks for the time being. Once this confidence increases, we will be ready to consider extending the participation criteria.
Got it. Thank you.
Any further question? No? Then thank you very much. Just to give final reassurance that, one last question, sorry.
So what are your plans in the trade finance?
For the trade finance, we are at the initial stage of discussion now with a few partners, but we are in an exploration yet, so we don't have any concrete solution that we are developing at this stage, but we hope to have it not too far from now, let's say within a time frame of 2 to 3 years, we should have something. So we are more in partnership exploration now at this stage. We are much more ambitious when it comes to our partnership with NPCI, so we are working very actively, the two teams, to bring this service live as soon as possible, so hopefully early next year. Okay, thank you very much.
Just stay on stage for a minute, yeah. So thank you, Mehdi, for that insightful session. We have a memento that needs to be presented to you. So, from NPCI.
Should I put this again?
Thank you so much. Yeah. So, thank you again, Mr. Mehdi, for speaking about how Buna is simplifying the process of cross-border payments by reducing costs, increasing speed, transparency, and access, and also how compliance is something that is at the center of your entire operation and your objectives, and how Buna is also creating more space for innovation. Nice points coming out there for all of us. Thank you for doing this with us. Our next session, before we go on to our next session, it's only appropriate that we thank our partners, WhatsApp, our theme partner, Amazon Pay, who is a co-powered partner, spend management partner, Encash, in association with Perfios, our payments partner, Cash Free Payments, and our CEO's dinner partner, HSBC. Thank you, partners, for making this happen for all of us. As we move forward, we now have a welcome address for Netherlands participation, and the address for this will be given by Mr. Bart de Jong, Consul General of the Kingdom of Netherlands. May I request him to come on stage, please, with a warm welcome. Thank you so much. Thank you so much. All yours.
Thank you. Good afternoon, everybody. It's an honor for me to speak here. I think it's great to be here to see that for the first time in 3 years we are able to have a live event again. And I'm excited because the Netherlands is a partner country to this Fintech Fest 2022. Of course, in the last 3 years we've had basically virtual meetings. We met online all the time. And of course there's an advantage to that, but when I logged into the conference opening yesterday morning, I was looking at a black screen for 15 minutes. And so I think there's definitely an advantage of being able to meet live again. I'm also excited because we had our Queen, Her Majesty Maxima, speak this morning in a video message to the conference. And she did so in her capacity as a special advocate for inclusive finance for development as an advisor to the Secretary General of the United Nations. Now, the Netherlands is a relatively small country, but we have a very large economic footprint. We have a population of 18 million inhabitants, but nevertheless, we were the 5th largest investor in India in the fiscal year 2021. And FDI inflows were about 2.8 billion. And the other way around, in the same period, the Netherlands was the 3rd largest destination for overseas investment from India. That amounted to 1.2 billion. We at the moment have 300 Indian companies in the Netherlands, and a considerable part of them are startups. Startups also in the fintech field. Amsterdam is ranked as the 3rd best European city for startups, and the 3rd in venture capital funding in Europe. Now, when it comes to countries having an important and thriving fintech ecosystem, the Netherlands consistently ranks 2nd in Europe. We are strong in payments, e-commerce solutions, I should say, capital markets trading, and banking platforms. And Dutch fintech names that may ring a bell are Adyen, Bax, Molly, and Bank. Now, I always think the fintech world is fascinating. It's capable of not only improving and simplifying ways to conduct financial services, but also opens up a whole new array of possibilities in payments, transactions, asset management, and so forth. And besides, fintech also provides opportunities to emerging economies like India to leapfrog and to avoid the mistakes that we have made in the West in the traditional financial system that comes with inefficiencies. But with fintech also comes the risk of systems being hacked, misused, and of fraudulent transactions, with a loss of millions of dollars as a consequence sometimes. But as we've also experienced, especially in Rotterdam, these hacks can actually disrupt a complete economy at a very large scale. This session here this afternoon, and it's not only this session here now in the room, but it will continue virtually as well, that will concentrate on mitigating those cyber security risks through initiatives specifically aimed at fintech. In the Netherlands, we have a very strong cybersecurity ecosystem. We have established, the government has established a public-private partnership which is specifically aimed at digital security, and we call that the so-called Security Delta. that was established in 2013, and over 275 companies, governmental organizations, and knowledge institutions are working together in this consortium, in this delta, I should say, to make a difference in securing our digitizing economy. Now, the focus of this security delta is primarily on cybersecurity and resilience, smart, secure societies, artificial intelligence, and intel. This security delta, these 275 companies, actually created a consortium, a smaller consortium of companies that is actively looking to integrate security business with India. And the goal is increasing the cyber resilience and cybersecurity of implemented digital systems, notably in fintech, of course, but both in India and the Netherlands, and from there worldwide. The objective is to further increase linkages between academia and researchers, and to foster businesses and market access for both Indian and Dutch companies. It gives me pleasure to share with you that in this conference we have 3 companies from this consortium that are participating in global fintech, and they are Eclectic IQ. Mr. Ujjwal Butcha, who is here in the room, will shortly give a presentation on what Eclectic IQ is doing in this area. And then we have 2 other companies, TMSPL, they will join us virtually at 15:35, and X-System, and they will give a presentation virtually also at 1600 hours. As I said, they will be speaking to you shortly, but they also have a booth at the exhibition, and I encourage you to visit that. I would like to thank the organizers for giving me the opportunity to speak here, and I'm looking forward to interesting discussions today, also looking forward to visiting the exhibition. I wish you a fruitful conference, and thank you for your attention.
Thank you, sir, for that introduction. On the same topic of cybersecurity for fintechs, may I now welcome Ujjwal Butcha, who's the product manager for Eclectic IQ, to share some light on this session for us. Thank you.
Thank you. Can I get the remote? Okay, I've got the cue. All right, cybersecurity for fintechs. Loads of banks, loads of fintech companies over here. And here we are talking about your safety and security. So my name is Ujjwal. I'm a product manager for Eclectic IQ. And Eclectic IQ is a cybersecurity company which was founded in 2014. We've got offices all across the globe, especially in Europe, North America, and India. We're a 100+ employees company, and we have a range of cybersecurity products. And today, as I was telling you, financial sector. Now, why do attackers love this particular sector? For obvious reasons, right? One, they get huge amount of customer information, be it their bank account, be it their card details, be it their personal information, right? And other part is direct stealing of money. You've got loads in your bank, why don't the attackers come and go ahead and steal it, right? We've seen with Bitcoins being stolen right from the wallets. We've seen money disappearing from the banks. So that's one of the biggest motivations, again, for fintech industries to be more susceptible to the attackers. Also, indirect stealing of money. What do you mean by indirect stealing of money? Simple, ransomware. You go ahead, click a link, a virus gets downloaded, your screen gets locked, you need to pay a ransom so that you could be up and operational again. Indirect stealing of money. Creating disruptions. Creating disruptions basically mean that there are some nation states which want to bring your financial systems down. So they try to go ahead and create disruptions. How? By attacking the place where it hurts the most, which is financial sector. Now, as you can see here, I have various screenshots of attacks which have happened across different places in the financial sector, be it Capital One, where CEOs, CISOs have been fired because of data breaches, and you see another graph where it says that the fintech sector is the most attacked sector across the globe. Seeing another one like a group called Lazarus, which is a threat actor or an advanced persistent group whose focus is purely on fintechs because it's easier to go ahead and try to hack them and get some details, get some money out of it, right? So these are some of the various examples. You've seen ATM skimming attacks. You've gone ahead and seen SWIFT systems being disrupted from all these various cybersecurity attacks, right? So this makes a huge impact on the financial. Now it's time for some myth busters, right? Do you feel you're secure or do you feel your company is secure? Let's go ahead and think about that. Now you may be a startup, you may be a mid-sized company, you may be an enterprise, you may be a government companies, right? Everybody gets swept when there is a cybersecurity attack, right? You may be thinking here, sitting in your head, probably not even bothered about cybersecurity, or thinking that, oh, we've got some basic security in place. We've got firewalls, we've got antiviruses, we've got proxy, right? What kind of a risk I'm in, right? I've got basic things in place, but no, my friend, you may be prone to some regulatory risk if you're not going to comply, right? Some of you may think that, oh, we don't need full-blown cybersecurity practice. You know, we're not there yet. You know, right now we're just building the company. We're just probably in Series A or Series B type, right? But imagine that one attack to your company, your chances of M&A, exit, valuation goes down the drain, right? Another great school of thought people think is, let's completely outsource cybersecurity. Is that good enough? In my opinion, nope. You have some crown jewel systems, which probably you should secure it with your own folks, right? Everything, if you're going to go ahead and outsource it, may not be good. Sometimes you may have a business continuity risk because of it, and some financial or brand risk. Now, another aspect is a lot of fintech companies are coming up, so they may feel that, you know, who or why would anybody attack us? Like, we're just starting up, right? But trust me, it does not matter whether you're a 10-employee company, 50-employee company, or a 5,000-employee company. If there is an attack which is targeted to an industry, everybody gets swept on the way. So again, your M&A, your exit chances reduces. And final, and this I think I've heard mostly, oh, we don't have budget for cybersecurity, or we have very less budget for cybersecurity. We spend it all in marketing or acquiring customers or product development probably, right? But again, trust me, a simple attack can ruin your brand before it even flies off. So you need to start thinking from a standpoint that it does not matter what stage of company you're in, just try to feel secure with better practices. Now, which stage are you in, right? A lot of you would be having your own company, or you'd be working in a company where you'd want to know which stage of cyber preparedness are you in. Are you reactive or are you proactive? Obviously, logic goes that you be proactive and not be reactive. We've seen recent attacks on Uber, right? It was a very reactive approach. What happened? A single 18-year-old went ahead and got into all the systems of Uber, their G Suite, their Slack, everywhere. And people were just being reactive and trying to mitigate that risk. It pays to be proactive so that you never come to a situation like this. And that's the reality check, which is the other diagram over there, right? This graph tells you where you basically stand. Are you at the starting phase where you're just trying to secure, or you are in the anticipate phase where before you're even attacked, you kind of know what is going to happen and you mitigate everything. You need to be at that end of the graph, my friends. Now, you would be asking that, how do I become proactive, right? You've given the steps that, oh, okay, I should no longer be the person who, if being attacked, the company is being attacked, I go ahead and I do a quick remediation. No, You need to be proactive. And what are the steps which takes you to being proactive is stop being product and vendor reliant, right? We're not gods to go ahead and give you a solution which is going to solve everything. As manpower, as an investment, also you need to put in there, right? You need to start gathering intelligence. You need to start analyzing the intels which come from various sources. For fintech folks, for banking folks, you have financial sector, ISAC, you've got SWIFT, you've got RBIs, you've got CERTs, various places from where you're getting intel. Now start using that intel, start analyzing it, and start trying to draw meaningful insights out of it. Learn from various attacks which have happened in the past. Start observing what these groups who attack these fintech companies or these banking companies, right? What do they do? What is their modus operandi, right? Start preparing an action plan before they can even strike you. And there is where you will achieve the most proactiveness. You need to start building your CTI practices. You need to detect things very early, and you need to have immediate response for all of that. Now, afterthoughts. You may think probably cybersecurity is like a term insurance, like, I don't, when you're young, like I remember a few years back when I was supposed to take insurance, I was like, yeah, I'm young, I don't need to take it seriously. What's going to happen to me? I'm invulnerable, right? I used to think like, oh, there's a pinch of my salary which is going ahead if I do a term insurance, right? I don't see any returns out of it. I don't feel like I should be doing it, but it's a part of my responsibility and hence I'm doing it, right? So that's the wrong thought. You need to start thinking of cybersecurity as an investment. It's like, I'm investing for my health. I go for walks daily, I eat healthy food, I do exercises regularly. Similarly, cybersecurity, right? You don't take it for granted. You start working towards continuous improvements. You don't need to be in the nirvana stage on day one. You start slow, you start small, but then you keep on continually investing it. You try to invest just like in your health. You start doing like 10 reps. You start putting in some amount of your manpower as well as your budget for cybersecurity practices. And eventually, one fine day, you will get there where you would want to be being proactive. You may not see an ROI today, just like with your health, right? You don't see an ROI immediately on day one when you hit the gym. It's only eventual when you start seeing it. And that's what is going to happen with cybersecurity also. You will not see the results on day one, but then eventually you will. Now with that, Eclectic IQ, us as a company, we believe in intelligence at the core. We have various platforms for threat intel. We've got endpoint, we support myriads of use cases, right? So we truly are intelligence at the core company, and we help you be more proactive in your cybersecurity approach. Now, if in case you are looking for some demo, please visit us at booth A17 to see some of our products live in action, and reach out to us, we're here. Any questions before I wind up? If not, then I wish all of you bon appetit. Have a great lunch. Thank you so much, everybody.
Thank you, Ujjwal, for busting some of the myths in this space. Thank you for doing this with us. As we move on to the next session, which is a panel discussion. Before doing that, a big thank you to some of our partners. Thank you to our communications partner, Kalera, our banking partner, Standard Chartered Bank, our diamond partners, PayU, AWS, Kia AI, Infrasoft, Paytm, and our networking partner, Buddy Loan. Our next session is a panel discussion. And for the panel discussion, if you have any questions after the session is over, please keep them for the end. If there is time, we will ask the panelists to take them. We'll just wait for the panelists to come in and then announce the session while my colleague is getting them on stage. We might want to put some chairs on the dais, please. Okay, we start with the next session. It's a panel discussion on how to increase trust in the use of digital financial services. And we have with us on this panel Nishant Kumar, co-founder of Lakshya, Rafe Mazer, who's the Director, Consumer Protection Initiative, Innovations for Poverty Action, and Mr. Srinivas Rao, who's the Director, Digital and Emerging Payments, AWS Payments. And the session will be moderated by Benny Shug, a research manager at Dwara Research. May I request all of you to please come on stage, please. Thank you. Benny can take over from here.
Am I audible at the back? I've been told one good advantage of a small room is people get to talk. So please stop us, please ask us questions, because that's how we can make the most of the few numbers that we have here. I'm Beni Chuk. I head the digital finance practice at Dwara Research. Dwara Research is a not-for-profit, non-partisan think tank working on issues of financial inclusion and social protection. It's quite interesting for us. This panel has been top of mind for the organization for a few years now. Back in 2017, we found that, on a field study, we found that one instance of frauds in digital payments dissuaded users from not just digital payments, but also formal finance. This year's Global Fintech tells us that one of the leading reasons why Indians do not use bank accounts is because they do not have trust in the institution. What we also found on the field more recently was people are not able to distinguish between genuine KYC requests and disingenuous ones. What that means is they would never, at least the people we spoke to, would never try eKYC online. They would much rather go to a bank branch and undertake their KYC processes. More recently, some observers of digital payments industry tell us that for all of us, for those of us for whom the first digital payment transaction is actually a failure, 75% of us do not return to digital payments for at least the next 1 year. Looking at all of this data together, there seems that there is one hurdle that we need to cross when it comes to adoption and sustained usage of digital finance, and that seems to be the hurdle of customer trust. How do we become more trustworthy as providers of digital finance, as stakeholders invested in digital financial inclusion, in responsible digital financial inclusion? And to unpack some of these questions, I have with me a stellar panel. I'll quickly hand out to Nishant to introduce himself, and we can take it from there.
Thank you, Benny. And thanks, GFF, for this wonderful opportunity. Everyone I know on the fintech world is here, or about to be here, right? So, my name is Nishant, and I'm the co-founder of Lakshya. We provide, we are a fintech. We work with the informal segment, providing them macro savings and micro insurance products. Typically, our customers include farmers, artisans group, weavers, communities, gig workers, auto drivers, and all. It's a very interesting phase where, for the first time, perhaps we will be able to reach out to them with suitable financial products at a cost which allow us to serve them better. And we have been able to do it because there is a digitization of the whole process. But as we will discuss in this panel, it's the journey we have just begun, because one of the key elements which we still have to sort of crack is how we build the digital trust when we reach out to these low and moderate income segments and provide them better and suitable financial products. Thanks.
Thank you, Benny. My name is Srinivas, and I'm from Amazon. My background is mostly outside of India, so I'm hoping that is something that we can talk about that brings this discussion to bear. I've been with Amazon for a long time. This is my 17th year, and I worked in both US. I was part of the payments team here in India from 2011 to 2016. And now I currently manage payments for multiple emerging countries in Asia, Middle East, and Latin America. And what I see here, obviously, first of all, this whole conference is amazing, just in terms of how big it is and how many people are here. And as Nishant said, I ran into a few people that I knew 6 years ago who said, "Oh, you're here." It's like, so it's also a good place to connect. But other than the networking part, I think that the topic today is also very, very important in terms of how to drive adoption across consumers. And some of the challenges, some of the questions that you may have also apply to other parts of the world. And I think there's something for me to learn and hopefully to share that can help this whole discussion. Thank you.
Thanks, Benny. My name is Sugandh, and I represent Fintech Association for Consumer Empowerment. It's a newish association amongst the youngest, I guess. You can call it a startup association if that resonates well for you. So we are a Fintech association for Fintech lenders. So this is our focus. So most of our members are Fintech companies which have their NBFCs or web aggregators. And collectively, they represent more than half of the market in India. So in terms of volume, it's very sizable. We work in the area of policy advocacy, SRO, sort of self-regulation, and also knowledge and research, with the idea that digital lending ecosystem has to work for everybody, bringing value, but above all for the customer, because eventually there's no point of all this song and dance that we are seeing if it does not benefit the customer that we want to serve. And I think our core agenda is really to ensure that whatever we are doing should work for the customer. So that's our mandate. I'll pause here and really look forward to these interactions. And thank you all for coming for this session.
Okay, thanks everybody. Sugandh, since I have you, we've been trying to understand who are the people who use digital finance, and I know you can speak to a little bit about digital lending, but what is the average customer? What are the average customer protection concerns that are coming up in digital lending?
So I'm also new to this, this base of, I was very equally intrigued by this problem, that who is this customer who goes on the app and take loan for 2,000 rupees and 10,000 rupees. And we tried to scratch this problem because we really wanted to understand this whole digital journey, which is so anonymized, but who is this customer who is actually coming? And we are talking about millions of customers. Our members themselves last quarter itself disbursed close to 10 million loans. So who are these customers? So we did, we scrubbed the data from the credit bureau and also from our members. So if I have to do a caricature, not funny caricature, but just a caricature, is a very young customer. 70% of the times it would be less than 35 years of age. So this is a typical 18 to 35 year is where the customer is. Mostly male, unfortunately or fortunately, 90% of these customers are male who are taking loans. Third distinct element of them is they are also very educated. So, 2/3 in our sample or in our customer segment we saw were graduates and more. So it's very, upmarket, urban customer base that we are serving to. And they're also, in terms of salaried and unsalaried, it's a mixed bag. So I think both kind of people are there. So that's a, sort of physical or the demographic phase. And obviously these are more urban customer, perhaps more in the west of India and south of India, and less so in east and south. This is how we see at the market right now. But if you see, they are very tech savvy, they're comfortable with the technology, but they're also very new to credit, right? So 1/3 of the customers are taking their first loan not from a financial services formal provider, but through an app, which means that they perhaps don't know the discipline which is required for the credit. A lot of these are, even if they are not new to customer, they are still very new to credit also. They are taking first or second loan very early on their journey, so that makes them vulnerable. And if you look at income-wise, they are actually 60% or so are less than 3 lakh, right? So they are earning less than 25,000 rupees a month, which essentially means that overall they remain, vulnerable to the income shocks, and they remain. But they also come with a lot of aspirations, right? So they want to buy things. They want to deal with, shocks that is coming. So it's a very fascinating story going on. If you think about that person, which is, say, 30-year-old, lot of needs in terms of what the credit needs are, but also a lot of things to deal with in terms of emergency. And if I have to go a little more beyond, and why are they taking loan, right? Okay, this is the customer, but why are they taking loan for? And our survey showed that most of the time it's because of the emergency and medical reasons. And another big use case was actually education. And it's, if you think about it, it's very intuitive, right? If you look at the cost of education in India right now, or health, or emergency, is very, very high. And how does one really fund this kind of emergency? There's no alternative. I mean, no bank will give loan for, if I have to do a emergency procedure in a day, right? Nobody will give me. So where do I go? Perhaps earlier people were going to family and friends. That was the only alternative available, or to so-called money lender. But now I think there is a formal way of meeting those credit needs, which are very, very important. I know consumer lending is often associated very negatively, but actually these are very genuine credit needs which are being full. And customer is exercising that choice because, one, it gives them very dignified way of taking the credit without compromising on their privacy, without telling the whole world no, that they are so vulnerable that they can't fund their personal needs. So that is very important for the customer. And then I think digital lenders have done a great job in reaching out to this unmet demand of the credit, which was obviously not fulfilled at this point. So this is how I would see the typical customer segment. Of course, within that, there are a lot of variation. I can also use fintech kind of a thing, which is just for the convenience sake, but there are a lot of people who need it for the very genuine needs. So, yeah.
In the whole privacy aspect of it, and I'm going to come back to you in a while. But this is very interesting, Nishant, that one of Sugand's use cases is actually funding for health issues, while you, on the other hand, have been trying to create a market and appetite for insurance, for saving culture, and your experience has been, let's say, slightly different from what Sugand's is. So can we go into what are the behavioral or even perceived challenges that people face in accessing digital savings, digital insurance? What has your experience been like?
So, in general, forget about the digital piece. In general, savings and insurance is hard. On the market, on the understanding from the customer side, from the seller side, building out for this segment, it's hard. Even if we don't consider the digital channel as a medium to reach out to them. What digital does is it adds to the complexity of it, because we don't yet understand how customers are interacting with that digital platform. Okay, when you remove the person who was perhaps interacting with him before in order to sort out the issues or in order to make him understand the product, and now you expect him to understand a fairly complex product where he has to he has to have the trust, because unlike credit, the point of consumption for insurance and savings is not at the point of purchase. It will be delayed after 3 months or 6 months or 1 year down the line. And in case of insurance, there might not be any benefit for him at the end of the year, right? So how will you convince him? But, we have to look at more from an opportunity side of it also. As I said in my beginning introduction, that this is perhaps the first time we have the opportunity to reach out to them, provide them customized savings and insurance products, which basically means that it will be beneficial for that auto driver, which will be beneficial for that blue-collar worker. The cash flow of an auto driver versus a blue-collar worker is very different. In a traditional approach, this was never feasible, right? But me and my co-founder always discuss, trust is the common currency, which is lacking when we approach them digitally. The reason is that when we talk about the savings and insurance products, it has happened, but it still needs to be evolved when you are designing the product with a digital first approach. Okay, what we are doing today is we are sort of cutting it away, copy-pasting the traditional product designs, what we have been doing it traditionally, and maybe at the point of onboarding, we have made some APIs and calling it digital at the point of onboarding. But for savings and insurance to really pick up, you have to look at the whole product life cycle, okay? And it's very important for two reasons. When it's not just about the communication piece. of course, the communication needs to be simple. The way you are constructing the product, that needs to be simple. But more importantly, when the whole aspect of reaching out to the customer digitally, it's important that what mental models he is creating about the product is what you are delivering. Because at the end of the day, if he perceives that he has been cheated, not because the product was designed badly, but because he has perceived it in a very different manner, then the trust is broken, right? So that's point number one, how you design the product with a digital first approach. And it's difficult for the legacy companies who have been working on the traditional front to suddenly ask them to change their whole approach and make it completely digital, suitable especially for the low and moderate income segments, for whom the interaction with the digital platform is not as smooth as for perhaps for you and me. The second piece is in all of this, how you are creating a two-way feedback mechanism with the user. See, the technology has made it very simple. You can be bombarded with the SMS and the WhatsApp messages, but how many times customers are actually reaching out to you? Have you really built out a system where it can be a genuine two-way feedback, right? And I'm not saying that I have the answer for that, but I felt that it was very, very important that you don't interact with the customer at the point of sale and at the point of resale of the product. There has to be a constant interaction with the customers in order to take his feedback about your product, about your features, about whether your product is actually solving his requirements or not, what he is perceiving about the product, and what your product is actually delivering, right? So yeah, so I will just say that let's have a first on the savings and insurance front. Credit and payment has seen a 100x or maybe a 1000x growth, but if unless we are able to build or fill this gap of digital trust, the growth on the savings and insurance side may be muted.
Sure. Thanks, Nishant. I think we'll come back to that nuance that exists between feedback and grievance redress, right? Like having a two-way communication, and how are some ways in which providers are actually doing this. I think Rafe's clip will speak to this, but Srinivas, quickly turning to you, I know where you sit, you have perhaps a more global perspective of, what are customer protection issues, what are the markers of trust, if any, in the global side of things. So quickly turning to you, what are some things that you are seeing in your work?
Thanks for the question. And I think, as the other speakers have said, so trust is kind of paramount when customers have to think about their personal information, their financial information, and I think that is the single most driver of how you can build an engagement with your customers in the future. From what I've seen at Amazon and across multiple countries and regions across the world, is we start with making sure that we first provide the confidence to the customer that their information is safe. So you start with that, where the customer says, I feel safe in saving my information, because then that leads to the next set of things that you can do with them later. So we take safety very seriously, and we want to make sure that the customer knows what information is stored and how is it going to be used. So we start with that. Other thing I see across the world is there needs to be transparency about offers, about products, and making it clear what the customer is signing up for. So you need to find opportunities to make it clear to the customer. And I do understand that the digital wave with the young customers and new customers is new. And sometimes people are just like clicking the button, not sure what they want to do. They just can get to the end of the process. But I think even in those, I think it needs to be very important to kind of share that information with the customers. The third thing I see is we need to make sure that the customer has the confidence that we have their back. So you need to make sure that there's a guarantee and the customer feels safe that if anything goes wrong, this company, this institution, this lender, this startup has good customer practices. And I think that's something that we take it very seriously to make sure that both from a safeguarding the customer, but also from protecting their experience. So there's no negative reaction after that. And I think you talked about like having like a closed loop system to see, are you looking at the customer feedback? And we talk about looking, we have this notion called voice of customer. So we look at what are the top 3 complaints that you heard this week, and what are you doing about it? So it becomes very important. And I think the final thing is we want to make sure that across the board, the products are accessible, which means you don't create this product set for a small group. You need to be inclusive. You need to be offering this for everyone who could qualify for it. So you also need to think about building trust in a way that people will say, yes, I can go and interact with this company because they're for me. So I think those are a few things that I think hopefully are universal in nature regardless of where you are.
Srinivas, one thing that you said really jumped out at me, which is assuring the customer that we've got your back, or guaranteeing the customer that we've got your back. What are some ways that you've been seeing providers do that in? How can providers really send across that message that, hey, we're here for you, and then follow through that promise?
Yeah, and so that's a great question, right? So I think providers have to think about how their business model also takes into account how to respond to customers who may have problems, complaints, and challenges. If your business model is all about trying to maximize the revenue that you have and not think about there may be cases that you may have to make a decision on behalf of a customer that may or may not be aligned with your profitability or a business model, that's why you need to keep in mind. So some ways you can do it is you could have at least we have a system called an A to C guarantee, which says, okay, if anything goes wrong with this transaction, we will solve it. And we would always look at the case, but we would make the decision in favor of the customer. But we should also tag that customer so that it doesn't end up creating an abuse pattern later, right? So again, having both the mechanisms to collect the data, act on the data, and make sure you have systems in place so you can protect yourself, but on behalf of the customer. So I think those are some things that companies can think about, having openness to also resolving issues on behalf of the customer.
I'm going to come back on that A to C guarantee in perhaps a couple of questions. But Sugandh, I know we spoke about this before the panel, that there is this whole aspect of customer delight, but perhaps it's not imagined through and through the customer journey. So what can providers really do? Where are the bottlenecks? And what are some measures that they can put in place to kind of foster trust and win trust? Or should I say earn trust? Sorry.
Yeah, so, I think trust is a very fascinating subject, right? I really like it when these old style words are, interspersed with this kind of conversation, and especially in the digital world. And, but again, just like happiness is different for different people, right? Trust, what it means for me, it would be very different to somebody else. So when it comes to digital lenders, I think why they have been so successful is because the customer trust is also what their expectation is, right? So if they expect that I want money now and anytime, anywhere type of expectation from their entire life, then they trust a brand which is agile enough and responding to that need. Therefore, they trust fintech lenders perhaps more, who wants to go to a bank where they think they would not be treated very well, they would waste time, and they don't know. So they need money now. So I think this is where I know convenience is, often most overused word to say that, and ease part of it. But I think for a lot of people that is very important ingredient or marker of trust, because I need money. If I don't get it, then why would I trust an institution which is not that? Second thing which I just wanted to sort of add to what Srini was saying was this whole concept of customer champion. I saw this in few institutions where, they have very dedicated team and no product and nothing could happen unless they sign off. So their thinking is to think from the customer point of view, which I thought was very fascinating because they were like, if you have not done anything for this, my customer, no, they were like my customer. If any team, any product does anything, they would not like it, because it doesn't work with the customer. So they would have this very high yardstick that how this will, anything which you are launching would help the customer, because I think that orientation is important, because I don't want my company to be offering product which does not work. So I think in some ways, if you can have, sort of dedicated teams who can really go deeper into what the product design is and how it sort of helps, I think might help. The third thing which I think regulation has done is, and this is something which Shini talked about, is really, is there a back available? Is there a resort available? I think this is, even our survey shows customers struggle a lot, because when things go wrong, they want to talk to people, they want to, get their grievances heard and see that problem. And I think there's no secret about it that this is a problem for them. So for example, this new thing which, Fintech digital lending guidelines have done, where there is a concept of cooling off period. While it might look operationally for a lot of lenders very overwhelming, that, it would create further friction and people might drop off and so on. But think about it, it will create such a powerful incentive for customers to actually take a loan, because they know that if they have doubts about it, after 2 days they can exit the thing. And when we were having this conversation, I think, the way e-commerce has worked in this country is precisely by giving this small comfort to the customer that, okay, you don't like it, just return it. Is something which is very powerful for eventually for all of us to trust those, buy those products. If we can replicate some of those successes, which I think e-commerce has done in India in terms of building those trust, whether it's a cooling off period or giving this assurance that if something goes off, there's a process to restructure. People, we have to be realistic about 80% of the India, which remains very, very vulnerable to these shocks. And it's very elitist to say that, they have to pay every time. They won't be able to pay. We have to take it as is. And therefore, it's important to have those mechanism to give them that comfort that if something goes wrong, there is a way to restructure the product or something like that. I think these are the important thing. And as we navigate our customer, I think we have to listen what the problems are they are facing and tackle them.
So Nishant, I know a lot of conversation has been about ex post. Once the customer has decided to choose a product, what is their journey, what are their hurdles? But when we were talking, there was this notion of confidence versus trust, right? There's a hurdle to be crossed even to get the customer on board, perhaps it still exists. So what's your notion, your distinction between confidence and trust was something I was personally interested in. And what are the measures that speak to each of them? How do you increase confidence? How do you increase trust?
Okay, so I think before I jump to that question, let me tell you a story. I was in Sundargarh district of Odisha, and I was talking to one of the Asha Didi who provides first aid or PSC, before PSC services, right, primary health care. And this was a time when there was a lot of miscommunication about the COVID, this whole vaccine thing. And government actually deployed the Asha Didi workers to sort of mitigate those miscommunication. So when I asked her why she was able to do it, because she said, sir, if I tell in this village that this is not a mango tree but an apple tree, people will believe. Okay. Why this has happened? Because he has built that social trust, right? And she has rendered some very quality services in that village. Because of that, villagers have the trust. And in India, we somehow sort of always look down upon what we have in plenty, which is the social trust, right? Even before the digital trust, we have social trust, which is there maybe because of certain compulsions. We share a lot of things because of our economic situations. And some are by designs, the kind of festivities, the kind of family values that we have. And I think if we have to really sort of leverage or build the digital trust, right, First off, somehow we will have to leverage the social trust first, right? What I want to sort of convey here is that even before people use a new financial product or a financial systems, the trust is implicit, okay? So when you go and talk to a low and moderate income segment, that sir, this is a very good product for you, he will look at the product second. First he will look whether the person or the channel, he has the trust or not, right? And I think this case is in point where the distribution becomes very key. The phygital approach becomes the success stories for anyone who wants to deal with the low and moderate income segments. If you will see, even with all the digital lenders, they have not been able to penetrate maybe the top 25 cities in India. And the growth of whatever 8 million, 10 million customer base, they have been able to do it only in the top 25 cities. Beyond that, you have to go towards with the phygital approach, not because they can't reach it, but because it is difficult to build a standalone trust without leveraging the social factors, right? And coming back to the difference between trust and confidence, and I'll go back to the story of that Asha Didi. So we were interacting with this Asha Didi to see if she would like to come on board and provide Lakshya solutions in the villages, micro insurance and macro savings, because she has the reach and we wanted to leverage that. The confidence of the villagers will come on Asha Didi for the financial products if she is able to deliver what she is telling or what we are providing day in, day out. That will build the confidence in order to use the financial products via that Asha Didi. But the first time uses of the financial products or the channels, the trust is implicit. You can't buy the trust of the users simply because they don't have the surplus to experiment, okay? They are buying your product. In case of lending, maybe it's a little different story because this is a more of a pull, more of a requirement. But for other financial products, they are associating with you because there is an implicit trust either on the channel or the person.
Yeah, that also reminds me of two research studies that we've recently encountered. One is from CUTS, the Customer Unity and Trust Society. And what their work showed, I'm forgetting the numbers, but I'm sure it's somewhere on their website. But the small experiment basically showed that appointing community women champions led to an uptake in digital payments. And the whole idea was that the social collateral that Nishant has been pointing us to, that it comes to bear in very tightly knit social communities where people know that there is a person they can go to. The other thing on a similar format that we are seeing currently in our study of UPI users is also that in a product range where product is almost undifferentiated, all UPI providers provide almost the same service, what makes a person uptake a particular service as opposed to the others? And we've found that social proof really plays an important role. So if people in their network are using a particular service, customers or first-time users would actually kind of gravitate towards that. So I think there is a component of social proof, there is a component of social collateral, which not only digital, according to me, digital providers need to mimic, but also learn from, because these social champions are really institutions of themselves who have consistently upheld the people's expectations like Nishant was referring. So it's not just how can we in form or content mimic what social champions are doing, but really provide consistently the same level of experience, the same level of personalized experience that a social champion is able to. Quickly, if I can come to Srinivas. Srinivas, in India, frauds in UPI is a theme. And we're going to kind of surface that when we play Rafe's conversations. But are you seeing digital frauds or digital abuses in other parts of the world? Not just those related to data, but even perhaps financial. And what are some measures that perhaps other regulators are contemplating or other parts of the world are experimenting with?
Yeah, that's a great question. I think so. With the growth of digital consumption, I think it leads to a growth in digital fraud as well. So obviously, it's something which kind of with all the opportunities that are created, it also creates risks, and there are what we call as bad actors who are trying to use that loophole to kind of go and find ways. So absolutely, digital fraud is an area of concern across the world. We've seen lots of statistics about online consumers who experience a digital fraud are unlikely to go back in certain point in time. I think you referred to the study. Similarly, we see that in for example, in Latin America, I think the rate of fraud is one of the highest in the world. And I think some of it is also stems from, there's a lot of like sharing of information, and I think that kind of leads to people not knowing what they are sharing, and that results into fraud. So that is the problem, but I think in terms of how we should be thinking about it is to look at what can be done to safeguard the customer's interest, and then also think about balancing that with what the customer intent is supposedly. So I think if you look at things like GDPR or strong customer authentication in Europe and some of the other countries which have followed, I think the intent is not to make every transaction hard to complete. The question is, how are you using risk models to challenge transactions which may be fraudulent? So I think what we observe is there should be investment both on internal processes that companies have to kind of do detection, prevention, and then kind of having a closed loop mechanism to make sure it doesn't happen again. So it's, you talk about machine learning and all the technologies that you can put into place. So we see one push to where there needs to be more technology solutions. Secondly, we see the regulators also coming up with authentication mechanisms that have the intent of preserving customer trust, but at the same time, you need to balance that app with how many clicks that the customer have to do, what information do they need to provide. And then finally, I think there's a responsibility for the regulator, the businesses, the associations to kind of come up with framework that allows improvement of the technology if it's going to solve the problem, but also in terms of like, what are some practices that can be shared and that can be general purpose that can be applied so everyone can learn from it.
Sure. I think we're running out of time, but one segment that I do want to get in is from someone called Rafe Mazer. Rafe heads the customer protection wing at the Innovations for Poverty Action Lab, and he's been at the helm of customer protection for several years now. Rafe is unfortunately able to join us real time. We do have a clipping of his which tells us about what are some interesting experiments that are going on to surface frauds, fraudulent apps on app stores, and what are some things that stakeholders such as Play Stores can do about it. Can I request the organizers to play the clip, please? So Ray, thanks very much for this recorded conversation. My apologies for not being able to get you onto the panel in real time, but we really did want to get your thoughts on what are the things that we need to start doing differently, or we need to start doing actually to kind of address this digital spread of frauds.
So I want to highlight just three things that we've been working on. The first is, you mentioned, fraudulent, fintech apps. Working with Mrinal Mishra and Jonathan Fu at the University of Zurich, we tested a model that could use machine learning to predict the probability that an app on the App Store was fraudulent. And it looks at things like reviews, it looks at, but it also looks at other metadata, like, is this developer has done previous apps that were put on the market and quickly removed, because you see that a lot. Repeat fraudsters, they launch an app, they defraud people, it gets bad reviews, they pull it and do another one. They also look at, is it a company or just a Gmail address, things like that. And their model was actually highly successful in predicting what are most likely fraudulent apps. And so you think about in India, a lot of important steps have been taken to try and clean up the app stores. But how do you do that on a continuous basis without overwhelming your supervisory staff? And so where we have these solutions where it can give you, instead of a list of 1,000 apps, it says, here's 100 apps that we think may be fraudulent. And then you, of course, have to query them individually. You don't want to, mark it as fraudulent without making sure that maybe the machine made an error. But this is how we can sort of do a better job of I guess it's narrowing the kind of initial universe that we have to look at through the assistance of machines. We also are doing a lot of work looking at social media data because it's become a really important outlet for consumers to express concerns they have. And it also happens in near real time. So we can, with these models we've developed where we scrape and do keyword analysis in social media, you can track trends in problematic issues with different providers as they sort of surge. And you can even set up alert systems, to be notified when a particular topic, like fraud or SIM swap or something like that is trending in your market. And then you can look at the raw social media data and see what is the issue and then engage the providers. And that has the benefit of being more sort of real time than the official complaints data, which often, is reported on a monthly basis. But I don't want to say stop using complaints data. That's the third example. We've done a lot of work, particularly in Uganda and in Nigeria, with regulators where we're receiving the actual customer care records from providers. And it has, the product, the day, the time of day, the location, the issue, the amount of money in dispute, and the status, resolved, unresolved, things like that. And we've started to ask them to add in also demographic variables. And what this does is it really gives you a rich snapshot to contrast with things like surveys to see of the consumers who experience problems, are they all equally using formal redress channels? And one of the things we find is women are underrepresented in complaints data. And I think that that's an issue. We've funded some exploratory work in India, in fact, to look at gender issues and gender barriers in access and use of redress systems in digital financial services. So that can really, it's really basic analysis, but if you have the good data, you can quickly identify things like a gender bias, and you can figure out, okay, what is not working about redress for 51% of the population. And we can also go a step further, and we run predictive modeling, where we look at, okay, the past data, all the consumers who called in with fraud problems, is there anything particularly unique about them versus consumers who call in for any other issue? And in Uganda, one of the things we noticed that was particularly powerful was the time of the month. So middle of the month and end of the month is when you get more fraud calls. And we think fraudsters may be targeting periods of the month when people get paid.
Yeah. And do you also see other stakeholders playing a role in this?
So ideally, app stores would do more about this. So I'd love it, maybe if there are people who work for those platforms that are interested in doing more to partner with governments or with industry associations to identify fraud issues or other consumer protection issues, that would be wonderful. I mean, I think, for example, on one of the app stores, there's a prohibition against loans that are shorter than 60 day in tenor. And I just don't think that's being enforced from what we've checked.
But before we part and I turn to the other panelists, any final thoughts on what are the priorities for customer protection in digital finance?
Fraud is emerging as an important issue because of digitization. It's not like fraud didn't exist. It's just the speed and scale potential that digitization allows for. So I think more than ever, that's important. And the other one is the kind of ever-present consumer protection issue, which is consumer debt. And again, it's not, I mean, as long as we've been humans, we've been living beyond our means when we can, right? I mean, it's sort of human nature. So it's not that digital is to blame, but it again is the scale, the speed of scale. Like I've done a lot of work in Kenya where we have had really concerning issues with the digital credit market saturation there and some of the conduct. And you can see it in the national surveys of financial health a significant decline in overall financial health in Kenya across the last 2 rounds of FinAccess surveys. So those would be the two that I really think we need to invest time in on consumer protection. And then I think we also need to look at the data rights space, which I know it gets a lot of discussion in India. And that's both for consumer protection and for competition purposes.
I think we're up to time. I'll just give a minute each, and I literally mean a minute each, to think about what are the next steps for building customer trust. Sugandh, and SRO seems imminent. What is it that the SRO can do?
Yeah, so I'll just pick from where gentleman left. I think the gorilla is this fake app issues in India, right? We all read about it for past 2 years. We have been working on this, but it's a monster which creates itself, it seems. You bring out 200 apps, and tomorrow perhaps 250 apps are added. So if I have to take one priority, I think that is something which is utmost priority to build the trust, because the biggest problem customer face is how do I identify that app that I'm going to is a trustworthy or not. So there has to be some very commonsensical stamp of approval for the customer to know that, okay, this is the trustworthy app, and let trustworthy app then compete on the product, not on these things. So I think that is something which is very important. Thank you.
I would just say that there should be a partnership between regulators, businesses, and institutions to kind of figure out what is the best offer for the customer and bring the economies of scale and create an environment that will be co-investment in digital infrastructure. Because I think that will allow us to have like a level playing field where everyone can have this access to the same information. And then again, as Sugandh said, come up with the best product. I think that will kind of spur more competition and innovation.
I think, I'm also consulting a few startups which work in the Bharat segment. And one of the key areas, anyone who is working in the insurance and savings field, that they have to invest in the steep learning curve for the customers, right? And it's like everyone they go, and it's not the work of a for-profit entity, so as to say, to invest into that, right? They are there to serve the users, right? But even the basic construct of the financial products, it becomes very difficult to penetrate into such a market. So I think something like UPI, what UPI has actually done, it has created a common payment infra on which everyone can sort of jump in. Something of that sort can be done on the product literacy. I'm not calling it a financial literacy, because then it becomes too theoretical, but something of a product literacy where people understand the basics, construct, what they will avail, what are the benefits, what are the constraints, what are the limitations, especially on the savings and insurance side. That gives us an opportunity to sort of, again, give it a not X, but 10X or 100X growth and go beyond this digital journey, beyond maybe payment and lending.
Quickly to wrap up, equipping customers with means so that they can distinguish between fraudulent and genuine players, providing just-in-time product literacy so that customers are illuminated about the product they're getting into and what to expect of it, having a grievance redressal mechanism that provides just-in-time great grievance redress, but also provides a method or a two-way communication or feedback, like Nishant called it, throughout the customer journey, so that we can keep a pulse on what the customers are feeling. That's a wrap from us. Thank you so much.
Thank you.
Thank you.
Thank you so much, Benny, Nishant, Srinivas, and Sugandh for doing this with us. We will be joined on the dais by Mr. Sumit Agarwal, who is the SVP Product Payments and Fintech, MMT. Nitin Sethi, Senior Vice President, Chief Digital Officer, Consumer Businesses at Adani Digital Labs. And Vikash Jalan, who is the Chief Business Officer, Travel, Paytm. The session will be moderated by Umang Singh Chauhan, who's the in-charge Merchant Solutions at NPCI. May I welcome all of them on the stage, please. The session is Travel Tech, a game changer for the travel industry. I guess the panel is not here yet. So we welcome Umang, Sumit, Nitin, and Vikash on stage, please. Thank you.
Hi, good afternoon, everyone. This is Umang Chauhan. I am part of NPCI Merchant Solutions team, and we have our panel with us. So I would start with Mr. Nitin Sethi. He is part of Adani Digital Labs. Then we have Mr. Sumit Agarwal. He is part of Make My Trip. He manages the entire fintech piece there. We have Mr. Vikash Jalan. He is part of Paytm business, travel and transit. And we have Mr. Jayesh Shetty, who is part of Thomas Cook, Forex card business. I welcome all of the panelists. A very warm welcome to all of you. So the topic we today have is travel tech, a game changer for the travel industry. So as far as travel is concerned, I would like to go back to the days when during my summer vacation, if we had to buy a train ticket, me and my father would visit the railway counter at 8 a.m. and we would be able to get the ticket by around 3 to 4 p.m. That was the time when almost half of the day we would go for one single ticket. Then we gradually moved to a booking agent, and the only technology we used to have was calling him up and getting the tickets booked. And it stayed there for a while, but now the time has come where my father himself can book a ticket in flat 3 minutes from his mobile phone. So that is what travel tech is all about. So that's the massive change in tourism which the technology has brought, is what we are going to discuss over here. Using basically tech to plan your trips is travel tech. Use of IT in travel, tourism, and hospitality, that is what travel tech is. You see, now we have AI and chatbots for answering customer queries, FAQs, 24/7 customer support is there. So that is what travel tech is all about. Even before planning your trip, you can actually visit that place virtually by VRs and augmented realities. That is what travel has now been up to. What we are trying to achieve with this discussion is, I have made it in two parts. One is B2C, one is B2B. In B2C, we would like to understand that how travel has enhanced, what is the enhanced role of travel when it comes to travelers, how are the bookings happening, and second, how the payments happening. So my first question would be around post-COVID session. Post-COVID, now we see influx of travelers from tier 2 and beyond cities. And they are not only doing domestic, but international trips. So my question would be to Nitin, you, that because you are managing a lot of airports which are, of course, tier 1 and tier 2. So how do you see the trend post-COVID has been as far as, and how how technology has enhanced in this?
Sure. First of all, thank you very much for having me here. Let me take a minute first introduce what Adani Digital Labs is and how we, Adani is representing this forum. So Adani Digital Labs has been formed 18 months back to digitize all consumer businesses for Adani Group. Adani is the largest private airport operator. We manage 7 airports in India, including Mumbai, wherein close to 85 million passengers fly from our airports. Now, quickly jump on to how the pre-COVID and COVID scenario is. Overall, we are close to 75-80% bounce back on the travel numbers. And most of us will touch base on that. But an international is still bleak for obvious reasons. But if you look at the spread, and I have my cheat sheet so I don't go wrong, I've been told that this session has been recorded and YouTube, everything remains there. So let me use the numbers wisely. So on data points, let's say cash. And let's make it conversational because there are not many folks here, so we can actually have a conversation. Post-COVID, we still see 32.6% cash usage on our airports. We thought that India has gone through the digital revolution and the whole transformation piece has been done. But 1 in every 3 customers is still using cash. The second spread, which is a credit card, debit card, is close to 40+ percent to be precise. Then, of course, the forex and currency exchange, we see 16.4, and UPI, the Bharat brand ambassador, is still at 5.6%. Now, this is on an average basis. If I just go to airport, you'll be very, very surprised that the numbers which is happening on Mumbai are very different from numbers which are happening in Lucknow. That is the power of diversification which we have in our country. Let me take another. So cash for F&B in smaller airports. Any guesses? 80% plus. I got this number verified 3 times. I said, boss, something is not right. Get the POS data right, get the mapping right. Is it a pre-COVID number? But that's the number. As of yesterday. Though with a lot of government initiatives, with Digi Yatra coming in, with the whole touchless experience on airports which is getting enabled, and of course with players, all of us sitting here, we will try our bet, having a great loyalty program for our consumers, having a more customer-centric programs, self-service, but we still need to have that penetration going. It's just not about payments, whether it's about Wise payment, it's about credit, it's BNP. I think it's everything put together. We still need to work very, very hard to change the number spread from the cash to credit card and credit card to the UPI. That's my initial thing, and of course I'll add.
Thank you, Nitin, for those numbers. We are still yet to grasp that because we thought that after post-COVID, the payments are almost contactless, and especially at places like airport, where we think the people who are visiting are more credit card and debit card users. So we should definitely work towards that. Now, my next question is to Vikash, who manages the travel and transit for Paytm. So Nitin gave us an idea about how technology has helped in the payment side. Can you give us what is the enhanced role of technology in travel booking? What changes you have seen pre and post COVID? How is Paytm Pay playing a role there?
Hello. Yeah, thanks, Umang. So I think Nitin definitely brought up a very interesting perspective, but I'll give you a slightly different twist to it from an OTA perspective as to how do we see the entire travel industry changing, right? So as you would know, and I will take you 2 years back, that when the COVID lockdown happened, right? So at that point of time, obviously everything was shut, but there was a whole lot of migration that was happening around the country, right? People were moving back to their hometowns, people were moving back to wherever their base locations were and all that. And we saw that play out very interestingly for us at that point of time was, and obviously we always had this thought in our mind, but it became very, very evident when this phenomenon happened, was that, what is the power? So obviously I look after the travel business at Paytm, and Paytm is ubiquitous with, payments and everything. And what we started realizing that obviously payments is the most common use case for any person who was going into the digital journey. For tier 2, tier 3, tier 4 cities, Paytm was the main app of, that was probably one of the first apps that they had from digital journey perspective. And they started realizing, because offline bookings were closed, and there was all the travel agents had either ramped up their businesses or closed down their businesses, or they were just not available. So they started figuring out that, okay, how do I make a transaction? And everybody had to move back. Obviously there was a supply constraint, there were trains which were closing down, flights was obviously off, but they were still figuring out what are the best ways of doing it, whether it's just bus, trains, or any other mode. So interestingly, the spike in tier 2, tier 3 cities at that point of time during the COVID made us realize that since they had this app accessible to them, through which they were able to make their transactions very, very seamlessly. So I think the point here is that, and that change has not gone back, in the sense that they have continued to use those transactions on our platform. Obviously, IRCTC had made it mandatory for people to always make a booking, and there were no offline bookings happening as well, so that also gave their huge bump into the numbers. Interestingly, I don't know if you know, but IRCTC did during COVID, once the thing started cooling off, 130-40% of their pre-COVID numbers in online, or even higher. Right? Yes. So their online share had gone sky high, obviously because the offline was closed, so it was kind of a forced thing that happened, but what it led to was people using technology to book their tickets. And that gave them access, and that's what trend is continuing. And I think that's the power that we see all these consumer internet, consumer-facing apps is, to make the technology accessible to people. So, and that's the role that we have been playing, and we see that not fading away very, very easily. And other thing that also happened was UPI penetration, thanks to you guys. So there was this whole thing. So what happened was a combination of this accessibility, UPI, all that being there, it just grew very, very, very fast. For my platform, the numbers are like 35-40%, which happens on UPI. And if I take trains, that number is even higher. It is like 60% transactions that happen on UPI. So it is very, very interesting that, so the combination of these two things led to the adoption of travel tech as a consumer-facing app that we see today.
Okay. I would like to add on what he said, not from maybe what I've experienced at my current assignment of something which I've done in my previous lives at Indigo. So I've witnessed the whole pandemic at Indigo. I was leading the digital transformation with 60 Digital, and suddenly one day there was a lockdown and millions and millions tickets got cancelled. There was no regulation, nobody knew what needs to be done, OTA was clueless, airports were clueless, airlines primarily on the consumer, and no airline could actually refund the amount in one go to the consumer directly, because you'll shut shop. And 3-4 data points again. I love data-oriented perspectives. So a web check-in which was close to 45-50% pre-COVID, just when the things resumed, it was 95%. a seat attachment rate or a meal attachment rate when the meal presumed, which was again 1 in 3 consumers used to opt in. Suddenly, on direct to channels, we saw close to 70-75%. And the direct market share for a lot of these airlines have gone up in that time because for self-service, for an answer without any ambiguity from the brand, it was a direct channel which demonstrated that grip. And all that is now resulting into the constant behavior. So the consumer, what he said is absolutely right. The consumer is not going back.
Right.
They are waiting for more and more,
So
convenience-driven things.
technology adoption, which could have taken
10
years,
absolutely.
happened in a very short period of time.
And we see that trend even now at airports. People now paying more online. Of course, we're seeing upward trends.
Yeah, yes, sure. Thank you, thank you. Sumit, would you like to add, because you manage one of the prominent OTAs?
Sure. First and foremost, thank you very much, Umang and GFF, for inviting me to this panel with these eminent colleagues. Let me just take your question back, wherein you are saying that post-pandemic, there is a lot of tier 2 aspirational travelers who would want to make maybe an international trip, and then how is travel tech or maybe payments tech helping that, right? So the way we look at it, I think travel tech can play a critical role at 3 different junctures of travel, which is before travel, during booking and travel, and maybe after travel. And at all these junctures, tech is coming in a very, very big way, right? So we are investing significantly behind before travel, whether it is in terms of content, whether it is in terms of search being voice-based. If you are a Hindi consumer and if you want to travel to Dubai, can you just say that "Mujhe Dubai jana hai," right? Or the entire funnel being vernacular, or the entire package being a DIY kind of package, right? So there's a lot of tech which comes before travel. There is a tech which comes during travel, right? So during travel, why don't we simplify the lives of consumers? I mean, as Nitin basically mentioned, that maybe 95% of consumers are doing a web check-in today. And as travel tech players, it is our responsibility to ensure that when they're booking their travel ticket, can we just ensure that the web check-in happens in a single click, right? Or when they're checking in a hotel, why do they need to stand at the reception, right? Can they just upload their documents and the web check-in is done? Or when they are in a foreign land and they're in some kind of trouble, let us say that they are sort of a currency, can we provide them assistance, right? So all of these will help in increasing customer confidence. And maybe post-travel, can we provide them an ability to maybe share memories, share photographs, ratings, reviews, right? So they are the various places, whereas travel tech partner, we are adding a lot of value, and we hope that this will help in bringing a lot more consumers into the travel domain.
Thank you, thank you. Jayesh, would you like to add?
Yeah, so I just kind of add to what Sumit has said. I'm representing an organization which is pretty much unique in the sense that it's largely a brick and mortar organization which has over a period of time kind of evolved into having its tech aspect of it built. So Thomas Cook is one of the largest integrated travel companies in the country, right? But principally it's always been a brick and mortar organization with large branches. I think the point that all of us have made so far, and if I were to take a key word, it's behavior, right? Whether it's about how cash is being used over other forms, whether it's about how they want to travel, which is destinations that they want to travel. So the behavior has changed. We all saw during COVID, everyone putting a Maldives picture, right? That sound like, because that's was the only place that was available. So the behavior was also in some senses replicating that side of the business. We saw post demonetization, the whole aspect of how non-cash transactions really took off. So behavior is critical for us to be able to kind of move any form of tech going forward. Now, what is it that helps you push that behavior is the simplified method with which you can actually push any technology. The minute you make technology difficult, cumbersome for the individual, you won't see that kind of adoption. And in that sense, just taking that entire journey, which is nicely put by Sumit, which is pre, during, and post, Pre-travel, fundamentally, customers are now looking for assistance, right? Where are things that have opened up? What are the places where now you can get quickly visa? Can I actually travel to certain destinations? Are there any changes in terms of restrictions? And all of these, if you are now able to put to the consumer in a more simplified, easier way, which is one-click available information that you need, that helps that consumer there. During the travel, clearly, you still have certain countries which are still not very open to the idea of bringing in passengers from outside, but can you make their entire journey a little more contactless, which means that, which is where, airports, we have seen a lot of airports across the globe which are now moving into biometric, which means that you don't need to touch, feel anything. You do a biometric and you run through. I think that process simplifies a lot of things. And I'm again going back to social media because we saw a lot of these posts come through wherein people are actually putting photographs of long queues where they're waiting to actually do check-in and check-outs. I think that, if you simplify on the travel side, makes huge difference for a consumer to actually operate. And the last part is, while he's on the travel, while he spoke about post-travel, we also are one of the largest Forex players within the country. And Forex has interestingly also seen evolution in terms of how you pay. From initially being, those Amex travel checks, to the evolution of actually saying cash, to now moving into cards and potentially moving into digital cards and maybe even push to account. Now, all of these transitions is what is also helping a customer make payments for their travel, or when they are on travel, that much more easier. And I think that evolution is fundamentally down to the point of behavior. So we need to push behavior, and the only way to push behavior is through tech, simplified tech.
Thank you.
On the behavior bit, another interesting thing that we started realizing, and all of us might have gone through it, that there is, and good thing that Jayesh brought it up, and also Smith highlighted pre, during, and post. Post-booking, people have started realizing what are the other things that people need to be cautious about, right? Especially during COVID. Like, there was a lot of these products that started getting sold additionally, whether it is insurance, whether it is refund policies, whether it is things like that, because people had, like, once bitten, twice shy. So they have, like, they went through that cycle of what happened during that time, and how they need that comfort, and everybody is now doing their own bit in making sure that the money is secure, the refund policies are sorted, the insurance products, there is an uptick in insurance products attaches that we used to see earlier. And the behavior is also started appreciating the fact that it cannot be always a risk-taking situation. We have to be slightly more informed about what we are doing, and if technology can help in achieving those things, I think that is what the focus is.
So there are many cross-sell opportunities for you now to, yes. So to this B2C, what we can say to summarize this is that simplification of technology is what is required. Consumer behavior has changed, is changing, and COVID has been a good enabler in that. And the simplification is what is required for more adoption of technology in travel. Thank you. So now I have my next question. We spoke about B2C. Now I want to talk about what happens behind the scene for the players where B2B travel is happening, and who are the big enablers like GDS, which was launched in last century. And today the industry is still heavily dependent on it for its billing, for its itinerary thing. And with new age payment solutions like tokenization. So I would like to understand that how is the industry upgrading itself? Sumit, if you can throw some light on that.
All right, sure. Let's spend maybe 10 seconds understanding what is GDS. Not many may really know. While at times we end up, so GDS is basically the system. There are 3 large GDS globally, and maybe a couple of more, who have connected with maybe thousands of airlines, right? And any kind of booking search that you do today, lakhs and lakhs of offline travel agents and all the online searches that you do on all the app, right? It is basically the GDS that powers that, right? Which means that it is a large body It's a private body. I mean, as we speak, while I've spent 15 seconds, maybe GDS would have already served close to 1 million hits on its platform and have given the right kind of information globally, right, on various things. Now, a mammoth like that, to Umang's point, fair point, they do not move very fast. But they are coming up with systems like maybe NDC, which is the new distribution capability, right? So our dependence on GDS is definitely there. Anybody in the airline industry will be dependent on that. But it is in the right direction. Let me also go beyond. As an OTA and as a large OTA, it is also a responsibility to give the right kind of innovation to our consumers and not be stuck with maybe what a GDS does, right? In a flight booking journey, everybody, whether it is an airline or it is an OTA, is trying to capture the entire value chain of the consumer. So while you're booking a flight ticket, you may want to eat food, you may want a particular seat, you may want XYZ, and this is what GDS and airlines provide as a combo and as a fair family, and we promote it heavily and say that you pay X and you'll get this, you pay Y, you'll get that. As an OTA, we go a step further and we say that, can we unbundle it now, right? So a consumer may not be looking for that entire fair family while we will promote it to our consumers. But if your only worry is, I want to buy a ticket at the cheapest possible price, but I'm worried that in case I have to cancel, there is a penalty, right? So can I cover you for that? Can I give you some kind of assurance product and say that cancel for any reason and your money will be refunded? Or maybe if your another worry is that the price will keep on fluctuating. Can I give you a price lock or a fair lock as a feature, right? So you are browsing, you pay an X amount, you lock your price. If it goes down, you pay less. If it goes up, you pay more, right? Or why do you need to buy food while you are within the flight? Right? Can I buy you a food at the airport, you pick it up? I mean, we have Adani and others who are now managing all these airports in a very digital manner. Can we just type, you pick up your food and you go? Why do you need to carry your luggage while you're in the flight? Can we tie up with somebody and the luggage will get picked from your home and will get delivered via courier or via cargo, right? So the larger point that I'm trying to say is that travel tech, GDS is helping immensely the entire industry. But all the players, whether it is airline or OTA, is going beyond that for all kind of innovations.
So you mean to say that dependency on GDS is reducing?
I would say that GDS will always be there, but when it comes to innovation, yes, the dependency is reducing. By the way, before you pass it on, you had a very interesting take on tokenization. I missed that part. See, you basically said that tokenization is around the corner in 10 more days. I mean, all the saved cards will get deleted, right, which are non-tokenized. Now, over there, GDS does not play a role as far as the B2C commerce players like us are concerned. So we collect money from the consumer, and then we settle it with the GDS in a very offline-ish manner, right? That's a settlement process which is called PPS and stuff like that. So we become the ones who will be responsible for tokenization. As we speak, we have already tokenized more than 80-85% of our saved card base, right, of our regular travelers. I mean, there was an article by Visa which said that more than 100, and that's dated, that's almost 2 months old, which said that more than 100 million tokens have been created in India. There are only 76 million cards, which means that maybe as we speak, there are already a couple of tokens against every card, right, on an average. So GDS doesn't have a role to play on that, right? And it is our responsibility, our owners, we are the token requesters, and we ensure that that seamless journey is given to the consumer.
So GDS, I guess, will play a larger role when a booking is happening directly through the airline portal. Over there, GDS is also involved in the billing.
No, again, there the airline is responsible because they are the merchant. See, please understand the responsibility of tokenization lies with the merchant or its payment processor. So so therefore, it's never the GDS which is going to look at it. Technically, I mean, for the lack of a better example, GDS would probably tokenize Make My Trip for me because we are the direct consumer, but it doesn't because that system of payment is very different. So it's the consumer and the person who's actually taking the details of the consumer that is responsible for the tokenization of the card or the details of the card. So you know, just adding to what Sumit has said about tokenization, it's a very interesting space because I believe that that's again a technology which India has really done really phenomenally well on. The principles there, we all saw the teething issues that we have given the mammoth number of merchants that we have within the ecosystem, and therefore I think that's again another evolution that has happened across the board, that merchants like, say, a smaller merchant who has an online presence may not have the bandwidth to be able to kind of tokenize themselves, and therefore are working with players like, say, a Razorpay, Avenues, and so on and so forth, who have the capability of doing this on a large scale, and therefore you just take that service as a plug and play model, but make sure that you are able to then align yourself to the guidelines that are there. Again, the guideline has changed over a period of time. Earlier, sometime back, it was about recurring payments. So anyone who comes to, and you know, that's again down to the kind of merchants that you would see. A Make My Trip will actually see more reason in the erstwhile setup where it was about recurring payments, that they would need to do it because a customer would actually come very often and buy an airline ticket with you, right? He could be traveling every 2 or 3 months, twice a month as well. But traditional players like us, which are largely looking at package stores, right? You would probably travel twice a year, but you would also buy other allied services. But principally, you were talking about recurring payments. Now that changed very quickly to say, irrespective of whether it is recurring or not, you need to tokenize the payment, the details. Now that changed in terms of the scope of people that were going to now come under the gamut of transactions to be validated. But again, there, coming from a Forex space, the ecosystem actually says all transactions that are originating and culminating in India need to be tokenized, which fundamentally means that Forex cards, which are largely cross-border payment services, are actually, you can't use those cards in India for payments, right? Therefore, they don't need to be tokenized. And therefore, coming from the travel side of the business, anyone who's actually taking an Indian card, a Forex prepaid card, fundamentally when he travels abroad, he doesn't have to worry about tokenization with those merchants. Because the interesting leg of tokenization is, it's not just the consumer who needs to be comfortable because his bank needs to manage it for them, but it's also the merchant who needs to be equally on board and needs to have that service onboarded. Therefore, a Forex card services kind of is kept out of this gamut because neither is the transaction going to originate or culminate in India. So I think that's where the tokenization is an interesting one from the travel side of payment side of the business.
Sure. Thank you. Do we have any questions from audience on regulatory requirement, new age payment solution?
Let me plant a question to my fellow panelists. The travel tech a game changer, right? Treat me as a consumer here on this table. And when I'm looking at things when I'm traveling on a corporate travel as a one product. I really don't care where the ticket comes from, who manages ABC or GDS or whomsoever. And when I'm traveling with my family, I'm looking at unbundled, tailor-made experience. And a lot of technology, whether it's Cleartrip, a company which invested, Adani, Make My Trip, Paytm, Yatra, everybody comes in and do their share of bet. And consumers buy for the convenience. What is that one common element in game-changing, futuristic, forward-looking technology trend and that convenience? What we need to do as digital leaders, future leaders, to carry this transformation? Paytm.
I can get started, and I really like the way how Nitin excluded himself from this question by asking that question. So I don't think the answer is like a simple answer. It's a combination of multiple things that has to work in unison to make that happen. Obviously, we talked about B2C side, which is the consumer side. We also talked about airline side and all that. I think these all technologies have to come together to make it happen, right? So when we were talking about GDS's, and sorry, I will expand it a little bit, because GDS's role was to help distribute airline content, right? And what was happening was that All the airlines used to give different kind of feeds and all that, and GDS said there is the value that I can come in and I can make it standardized for an end consumer who can take the data. So now, but what it led to is that it led to building a lot of middleman in that way, that led to airlines shelling out a lot of money for distribution to these companies, and that's where we said the regulation comes in and says that, okay, we can disintermediate that a little bit, and we say that, okay, IATA came up with saying that do this NDC, which is NDC is nothing but LCC. It's not a technology, it's a framework where it says that this is a standard protocol based on which you can interact with each other and build that. If that happens, then so that is one part of it, which is how the distribution of content happens. And distribution of content means that you can unbundle, to your point earlier. You are able to more, the flexibility is completely in airlines' hand. They can give you very, very customized offers. They can give you very, very customized content that you're looking for, unbundling it and all that together. And that will be distributed through OTAs. And then on the OTA side, as folks were earlier saying, that you have to continue simplifying the funnel for the user, where they are able to make the best choices by either making it one-click things or making it very, very simpler funnel. Again, that unbundled set of services will come and consumed by the consumers, right? So I think this has to be, it cannot be just one thing. It has to be the entire ecosystem that needs to work together on all these aspects. And see, every travel industry is different in the sense an airline has its own challenges, and when you talk about a bus business is absolutely different. The kind of challenges, and of course I did not touch upon payments because we already talked about, because tokenization will take care of it itself. Everybody will ultimately tokenize, and that will simplify the process. So, train business is absolutely different. So on and so forth. So every business will have their own challenges to make it a game changer for themselves.
Sorry. So, when we were talking prior to this conversation, one of the things that came out very clearly was that there is no one single individual that can get up and say, I can deliver complete. When we speak of airports, airport says, hey, look, I am just a pathway for somebody to travel. But the real guys who need to deliver is the airline, right? Airline says, look, I have done a great job of getting the consumer. It's the airport which is causing problems in terms of logistics. OTAs and travel companies like us will say, look, we don't own any of this, whether it's the inventory or otherwise, right? It's actually the tickets are airlines, hotels are somebody else's, and therefore the uniqueness of travel as a category, and therefore I think we don't give it as much credit as we deserve, is that travel has already integrated a fundamentally large product wherein it's not one single product, it's multiple products that are integrated to give you one service. And therefore, when you look at how was your travel, that principal question that one asks, how was your travel? The answer when you give as a consumer, you actually in your mind have gone through hotel check, airline check, my service to and fro check, and finally receiving home with memories check. And in all of this, you've actually interacted with multiple other players. So I think there is element of it, but I think there is more that can be done in that space. The question is, how much is each individual stakeholder willing to work with the other to say, you know what, I have this solution, but can you walk a little more with me to be able to build that extra mile for us? Once that happens, I think that's far more fruitful. Right now, I think personally, there is still a transactional conversation that happens with most of them in terms of, say, an airline saying how much inventory will you sell, hotels say how much will you book, I'll give you a value, and so on and so forth. Maybe on the payment side, there's another element of it. Airport says, look, I'm no more interested in traffic. You figure out how you get it. As long as there is some element of transitional value that you create between the two, that's where you will see the oomph factor, which you're looking for as a consumer.
You said it absolutely right. Right now, the journey of these 15 so-called touch points, the 10 touch points has been digitized, whether it's booking a air ticket, booking a cab, booking a hotel, right? But in between 5, none of the Indian airports have fully digitized. That you talked about how much time to the gate, which belt, very basic. Can I get a guaranteed cab? Can I check whether my card work on the lounge or not, right? All that is still not been done. Not even a single player has done it. And that's where I think the ecosystem needs to come together and, do it. Whether
Collaboration is the key word.
Absolutely.
All the stakeholders, all the ecosystem players will have to come together right from the point when a person starts thinking about travel, then booking, making payments, actually taking the travel and coming back and sharing the memories. All the stakeholders involved have to work together. And now we have seen that the tech has actually made the travel very, very convenient. People have now they stay connected all the time. The language barriers have been broken because of the technological advancements, and which collectively gives a personalized, unforgettable experience to the customer. And with the enhancement of travel, I am just wondering that what the next chapter is going to be and what's in the store for us. And whatever it is, I undoubtedly it's going to be brilliant for all of us. Thank you. Thank you very much.
Thank you. Thank you. Guys.
Thank you. Appreciate that. Thank you.
Sorry.
Yeah, thank you so much for doing this with us. While they take the group photograph, if there are any questions in the audience, we have just time for 2. Any questions, please, to the panel? There's one there.
Come on. I'm not taking
this. Okay.
Thank you. Hey, my name is Adnan, but I'm from Munich Re. Quite an interesting session. Thank you for that. Is it better now? Yeah. So my name is Adnan, but I'm from Munich Re, a reinsurer. I have an incident to share. Last time when I was traveling from Bangalore to Bombay, so there was this little kid which was sitting on the middle seat, and the mother of the kid was on the aisle seat, right? And there was an in-flight magazine. That kid actually took that in-flight magazine out, and while he was looking at the picture, he was trying to zoom it. And he was wondering that why is it not zooming in? He was quite perplexed. So that is when I got to know that even I spoke to her mother, and she said that, she actually has an iPad back at home. And I could at least understand that the way digitalization is happening, be it across travel or the other industries, it is now in the DNA of everyone, right? Now, my question is slightly different from this. I wanted to understand, while you talk about the travel tech perspective, while you talk about build versus buy, what do you think is the right strategy for you, and what parameters do you consider while you decide whether to build or buy, be it travel tech or something else related to this?
And sorry,
Thank you.
I had a link question. I actually wanted, a lot of fintechs who were very interested, and I wanted to ask, what do you guys feel that fintechs can play a role in that journey that you guys are looking at going forward? So whether it is you folks building it yourself or partnering with some of the fintechs, what role they can play is, I think that's the important.
I think on the convenience front, fintech is a backbone. There is not even a single consumer journey which can be done without a simplified fintech platform or a solution. I think with what you guys are going to do with the credit card tokenization is going to really change the game. Look at the number of debit cards and the credit cards, it's disproportionate. If we balance that out, we have at least 10, 15, 20 unicorns right here. Maybe 5 of them are sitting in this room. So that's the role I think fintech going to play. Fintech going to merge the boundaries between Bharat and India. I think it's up to you guys.
I'll just quickly add, I think at Make My Trip, definitely fintech is at the core of our entire strategy. So much so that the youngest brand that we have launched is Trip Money, which is a fintech brand, and that is what I take care of. But then coming to your question specifically, I think when it comes to build versus buy, open to everything. I'm presuming that maybe we can have a meeting maybe immediately after this. If you have something very interesting, more than happy to explore. Thank you.
Handshake is better.
Yeah, just to add to that, actually, I also do it quite often. So the kid is not very surprising. Sometimes when I'm reading newspaper and my eyes are slightly getting old now, so I like, oh shit, the screen is so good. Sorry about that. The screen is so, I can do it so easily, but I'm not able to do it. So I think that behavioral change is happening, and that kid is just learning from that. So I don't think that kid is to be blamed, but I'm pretty sure we'll have digital pads on all the screens, and on the airport, in the flight and everything, even digital newspapers for that matter. Coming back to build and buy, I don't know if you're talking about build and buy from an OTA perspective, whether you have to do that business or you take that supply through an aggregator, you own the consumer. I don't know if that was the context of that discussion. So obviously everybody starts off as an aggregator. Everybody starts off by taking supply from a intermediary, and then they slowly want to improve the margins or improve the experience. They start connecting directly with all these, whether it is airlines or any kind of business. That is bound to happen, natural progression. So I think that decision depends on at what stage in the game you are. If you are launching something very, very new, it will always make sense to do a buy and get the product market fit, try it out, and then see, okay, it makes sense for me to improve margins. I know the skill, I know the business, I can make those pipelines build now. So I think that would be the step, again, depending on what stage the business is. Coming to your question about fintech that you specifically asked, what roles will fintechs play? As you said, I think that I had already answered a little bit of it, what role Paytm plays in that, right? Because payments is the best acquisition channel for a consumer, and that is the most easiest thing for a consumer to do. And once you have that consumer on an app which is doing payments, they would ultimately latch into other use cases for them. So that is what we have seen. That is what we have seen. And the good thing about it is it has worked from end to end. So companies like Paytm and other fintechs have started owning the consumers on their platform. And things like UPI and tokenization, all that makes the end journey of payments even more seamless. So I think it's a fantastic journey that is happening. And then if you are able to plug in with the content and things like NDC, GDS, all that is happening in the background, I think it's a wonderful thing to happen where the entire experience is only going to get better and better.
With that, gentlemen, we come to the end of the session.
Sure.
Yeah?
Sorry.
And you have something?
Sorry, I had to say something.
Okay.
So I think I was just sharing with Sumit just a while back that I went out with my daughter recently. She's around 4. Right? So I went out with her and she suddenly said I wanted something, and I happened to just look at my pocket and say, "Beta, I don't have the wallet." And she smartly said, "But you have the phone." Right? So they're actually seeing you do transactions in a certain way, so they're actually much smarter than we think they are to that point. We are a 100-year-old company. Thomas Cook is a 100-year-old company. And if you see in that large 100 years space, travel has evolved, tech has evolved, so has the fintech side of things. And I think personally, it's a question of what size and scale you are, and are you willing to invest that time to build it yourself, or you're happy to kind of go with somebody who's built it, tested it, and you want to go to the market as quickly as you want. In certain cases where regulatory elements are involved, you may want to go with somebody who's tried it, tested it, got certified, and therefore it's easier for you to adapt. But in places where you want to keep that entire ecosystem proprietary, then you may want to build it rather than relying on somebody else. So that's the answer to that point. And coming to the fintech side, like I said, 100-year-old company, we've evolved over a period of time. We're happy to kind of meet and speak to anybody who has a great idea for us.
So Jayesh, next Forex card could be on UPI?
We want to. The evolution is something that we want to work with.
Sure,
yeah?
sure.
Thank you.
Thank you, gentlemen, and that was quite an enlightening session. A lot of interesting points came out of that, particularly what Vikash said about how every business within the travel business has its own challenges, and working in unison is the key. And Jayesh brought out the fact that behavior is fundamental and integral to create tech solutions in this space, and how working a little more with other stakeholders makes more sense in the next phase of innovation. And Sumit spoke about the pre, during, and post of travel, and how the entire spectrum can actually be brought together in an integrated manner. So thanks, gentlemen, for a wonderful session. Take care of yourself and all the best. Yeah?
Thank you, thank you. Thank you very much.
Our next session. Our next session for the day is an address by Mr. Ramana Kumar, who is the Chief Executive Officer of Magnati. He will be speaking to us on embedded finance and power of platforms. While I call upon Mr. Ramana Kumar, I request all the gentlemen and ladies in the room to take their places.
Good afternoon, ladies and gentlemen. I'm Ramna Kumar. I am the CEO of Magnati. Magnati is the largest, one of the largest payment companies in United Arab Emirates. And we have like 4 typical businesses. We are the largest acquirer. We have the government solutions, proprietary government solutions. We do issuer solutions. And we have the third-party processing where we process for the banks. More than that, our key or our mantra of success is to create a platform what I call and our organization calls to be the App Store of payments. We want to be the App Store of payments. And why is the App Store of payments, or why to become an App Store of payments, so important and so exciting? I'm here to share some of the stories about why embedded finance is going to happen, whether we like it or not, and what does it mean, and why there is a need to create platforms, and what are going to be the game changers in creating these platforms. So what are those 2 tools in my opinion, which are going to completely transform the field of embedded finance. So I'm going to talk about evolving landscape of embedded finance. We'll talk about power of platforms, what are the game changers. We'll talk about what we have done recently, the metaverse, and how metaverse is going to reshape the platforms. And we'll talk about how data is becoming part of the whole story of embedded finance. What is happening now is you go to a bank, you ask for a product in a conventional style, and then you go to a merchant or to a service and use your product, whether it's bank account, whether it's credit card, whether it's debit card, whether it's any other service. So bank is your point of contact before you go and interact for your requirement or a need. What is happening, and it is happening today as we speak, is a model where someone is coming in between. You know, Starbucks is a great example. Many other brands are coming in. IKEA is a great example. So one day you would go to Starbucks, and when you go to Starbucks, you tap in, and Starbucks says, do you want to open a bank account? Or do you want to have a credit card? And it will be a Starbucks bank account or a Starbucks credit card, and Starbucks decides which bank they are going to bank with. So now, suddenly, the model has changed where the banks are no longer the point of contact for the customers. It's actually the embedded players, or what we call the modern platforms. So in the future, the customers will be approaching brands, not the bank. So it doesn't matter how great you emphasize your focus on building a nice front end, if you don't have a platform and you don't offer all the services, a bank is not going to be the first point of contact. The brands are going to be the first point of contact. There's a recent research done by Bain, and this is specific to the US market. Already 5% of US market, which is 2.6 trillion, has moved under embedded finance. So it's already happening. A lot of people think, when will a Starbucks open an account? It's not going to happen. When will, let's say, you know, in the current brands, let's say Reliance is going to open a bank account. When will an Adani as a front end open a bank account? It's going to happen soon, and it's going to happen very near future, today, tomorrow. And the expectation is that it's going to be 10% of the market in the next 4 years. 10% of the growing market is phenomenal shift. And what's in it for each and every one of us? If you are a fintech, there is a tremendous opportunity. If we are a bank, there is a tremendous opportunity to reshape ourselves. If we are a technology company, let us be ready to move away from a product approach to a platform approach. So what is important is the customers have complete choice. The customers have the final choice to decide whether they want to go to a brand A or to go to a brand B. There is no longer a protected market. If you are a bank and you think I have so many customers and this is my protected market, you don't have a protected market. Your protected market is gone. Your market is finite, but the possibilities are infinite. If you can think of an idea and become part of this platform, the infinite possibilities. Scale is the name of the game. Do you want to be an app store? How many of us actually thought when we go to an app store, why wouldn't iPhone just put their applications? They don't put that applications because they want to be the platform. They don't want to be the app provider. They want to be the platform where their apps and competing third-party apps both sit, but the platform is owned by them. The same with Google. It is all about platforms. Products are gone. And the availability is again the game changer. So what is important is, it doesn't matter what you build, but how many times have you seen a Play Store or an App Store going down? They don't go down. They don't just go down. But you can see, for example, a banking app going down, a POS machine not working, etc., but a platform never goes down. That is the power of where the embedded platforms are going to look like. So when you look at the future embedded financing platform, it's going to be a platform where not only their applications, a lot of third-party applications are going to come and sit. And when they sit, the platform provider is going to be the one that drives embedded finance. It is customer who decides whether they want to go to platform 1 or platform 2. Because in future, it's not that individual app that will have 100x valuation. It's the platform that is going to have the 100x valuation or a 15x valuation. Individual app is going to go and become part of what you call, there needs to be a house for every app, and that's where they're going to sit. What did we do as part of it is, we went back to the drawing board and looked at the same model of how we're going to become part of that embedded finance. So we launched what we call payments as a platform. Today, you don't need to be a proprietary system to accept payments. Our APIs are available for an acquirer in India to consume and launch their platform. For an acquirer in Vietnam to consume our API and launch a payment. So it's all about building a payment as a platform. Today, as part of our platform, we have integrated with 5 buy now pay later players. So when we go to a merchant and we tell them, you want to offer buy now pay later? You got 5 options you can choose from. It's not only that, it's a single API integration. So what happens after 2 months? Let's say the merchant chose option 1. After 2 months, they don't like the option 1. In the current context, you need to reintegrate with option 2. What we tell them, you don't need to integrate with option 2. We route the payment or we route the transaction to option 2. It is all about platform owners redefining or synchronizing the flow. And that's what merchant likes, because they don't spend a single dollar in terms of integrating to this. Card as a platform, tokenization as a platform. Everything is now a platform where I can issue a card tomorrow if I am an end customer. I can issue a card tomorrow if I am a bank. I can issue a card tomorrow if I am a wallet. But it is all as a service or a platform I consume and issue. Open ecosystem. So we have the largest sandbox model where if you are fintech, please come and work on our sandbox. You can integrate with our sandbox. You can integrate and launch these solutions. And these are all available as part of our sandbox system. And the last is what we call the value-added services. If you are an existing acquirer in any part of the world, or you are an existing payment service provider in any part of the world, you can take some of these services and put it as part on top of your platform to start issuing these services by default or by a single API integration. This is the power of how fintechs come together to launch this ecosystem or the platform. So what happened as part of this is, we have the full range of products, and it's all built on cloud native. It's all built on API, microservices. It's all about data centric, and it is about bringing in the new tech like AI and machine learning. But what happened is we didn't stop there. So we looked at this platform and we said, what is going to change? So you have given an app store, you have given your work on a Play Store on your phone, right? What do you think is going to happen in future? What if the phones vanish? Have you all thought about what is going to happen when the phones vanish? When your goggles become your mechanism of interaction with the world, or your chips on your fingers become mechanism of interaction? How would you get this embedded finance integrated into that? And there are two major game changers which we have already banked on, and we are banking on what we call metaverse, the first game changer, and the data, this is the second game changer. Let us talk about what we launched recently, which is Magnati MetaV. When we book the hotel room, how many of us go to the likes of hotel.com, booking.com when we book the hotel room? Raise of hands, please. Right. Can I pick you, the lady in the middle? Sorry. So when you go to booking.com, how do you book? When you go to booking.com and ask for a hotel, what do they show? Great. So what do they show you? They show you a standard room, a deluxe room, and a twin room, right? There's a study that shows the moment you tap, you can sit, sorry, I'll come to you in case of. How many times have you felt, now that I'm on you, how many times have you felt once you checked into the room, what the heck moment? How many of us felt that? The moment we opened the door and we walked into the room, hotel room, we felt, what is this? I didn't pay money for this. Why did you think that you have that experiential gap? Because the hotels for last 20 years haven't changed those pictures which they show on either booking.com or on a hotel website, right? Do you think it's going to continue? Yeah? No. Let's talk about what it is before we go into that. So just watch this video and then we'll come to the specific examples of what hotels do. Welcome to the world of experiential commerce. How about you experience the room before you book, right? So that's where our MVP started. Experience the room before you book. Now let me take you through where we have reached, right? And I'll come back to these slides, but I just wanted to show what happened in the hotel booking now that we're all glued into the hotel booking example. So you looked at these pictures, you booked the room. Now let's go through this. Keep watching the video. As you keep seeing, how many of us, when we enter the room, see that working table, the office table, and think, what is this office table doing in my room? And I haven't used it for the last 15 years I've been visiting hotels. How many times have you used that office table, right? Now imagine a scenario where You go in with your friends and you replace that office table with a foosball table. And you look at the menu when you are experiencing the room, pick a foosball table. I don't know if you guys observed, there is a foosball table in the menu you can pick, right? And you drop it in the room where you are experiencing and sitting instead of the boring working table with that tube light or the lamp which signifies 1960s, right? Now imagine you go with, you are an avid music guy or artist, and you go into the room and you're spending in the room. Why don't you have a guitar on rent or a piano table? The possibilities are endless. Now suddenly the hotels have started realizing the experience and the current e-commerce are very outdated. So what are you doing now? You are embedding the new relationships, the new requirements, and the new opportunities of making money into your existing e-commerce. That's what we call experiential commerce. That's exactly what the future of, for example, hotel booking is going to change. And by the way, the same applies for many industries. How many of you have bought and sold on Flipkart's, Amazon's? Not sold, returned. Almost all of us. You don't even need to raise your hands. Why would you return? How many times would you return, and what are the major reasons? Too small, too big, this is not the color I wanted, this is not what you have shown, this is not what I visualized, right? Now imagine you experience the product before you buy. There is at least 50% chance that you can reduce your returns to sales, 50% reduction. Imagine if I am an Amazon or a Flipkart or anyone, I may be selling 100 million in a day, but actually there is a chance that all the 100 million may be returned tomorrow. But imagine if we can provide experiential commerce to reduce 50% of the returns, we have hit the bullseye. That is where embedded finance and metaverse are going into. Your customers, our next generation. How many of you have kids at home who interact with their friends on Fortnite, Roblox, or Minecraft? That is the generation, and these are the generation who are going to be our customers in the next 3 years. Are we ready for the next generation embedded finance? This is where you need to visualize products, you need to experience products, and that's how you create new revenue opportunities or the backdrop of what we call experiential commerce. So, ladies and gentlemen, this industry, what I gave example of hotel, can be expanded to real estate. How many times you bought a house looking at a PDF document that is 60 pages, 70 pages of different plans, and then this beautiful looking models running on the beach. Every property I saw, I live in Dubai, which is the place where everybody sells properties, and everyone sends the same video of people running around on the beach, right? And that's how you bought your properties. But imagine now you go and you buy your property looking at exactly what you're buying. People say all 07 facing apartments are beach view, but people don't tell you that 2207 has a different beach view to a 507. And you visualize this product before you buy. And this is how embedded finance is reshaping. And the question is, whoever we are all in this game, are we all ready? Are we all ready to capture this opportunity and move? And the next part of it, this is my last focus area I'm going to talk about, is how data is transforming the embedded finance. So we did this live, and by the way, this is live. If you ever happen to come to UAE, you can visualize this. A customer walking into a merchant taps the card, and we have our artificial intelligence tool that identifies based on the card number the right opportunity or offer, and that pops up from the POS machine to give to that particular customer the offer, where the customer can then go into and utilize that offer seamlessly at the merchant, right? And this is nothing to do with SMS, nothing to do with emails. The other two things that are going to die as part of new embedded finance are the SMSs and the emails. Nobody is going to look at them. People who are going to look at them are the new intelligent ways of how you're going to add all your financing models as part of the life cycle of your platform. On that note, ladies and gentlemen, I hope at least I've added a bit of value to your time sitting in here. Thank you so much, and you have a great time at the Global FinTech Festival. Thank you so much.
Questions for Mr. Ramana Kumar?
Go ahead. I think it's not.
Yeah.
These videos, these are all captured videos, or it will be live streamed? Because I want to know how it looks now.
These are not live streamed, these are not captured videos. These are actually the hotel we built on Metaverse. So you can actually go around once you put it can be 3D, it can be 2D.
No, my question is, let's say practical use case, right? So I am actually going to book, and you are going to give your platform which will enable the hoteliers to market their products. So when I look at the hotel, I should be seeing the live stream of the room, which means I should, because I don't, again these videos will also become
No, there is not videos. You actually visualize the room.
So which will be
This is the live room. You would visualize.
No,
not the live room. You won't see the people inside the room.
No,
this is like the live room.
No, I'm saying the experiential part has to be now, in the sense
I
should
By the way,
know
hotels don't change every day, right? And
so-
it's not the hotel room change.
So I don't want to see an outdated.
That 1205 room has been there for time immemorial, and it will die when the hotel gets,
demolished,
collapsed or demolished.
Perfect.
So yeah,
Thank
so you would see the actual room. By the way, the hotels can now actually add a booking fee or guarantee fee saying I will get 1205 room, and I pay $20 extra.
Got it.
It's a new revenue opportunity.
Thank you. Thanks.
Any other questions?
Okay.
Thank you so much.
Thank you so much. Yeah.
Thank you so
Thank
much.
Thank you, Mr. Kumar, for doing that. The office table example and the guitar on rent were quite compelling and must have really touched a chord with someone or the other in the room. So, yeah. So our next session for the day, ladies and gentlemen, is on a panel discussion on the use of AI and big data in creating sustainable digital financial services. On this panel, we have an eminent speaker panel here. We have Pat Patel, who is the Executive Director of Elivandi, Nanaya Karangada, who is the Managing Director, Equifax Credit Information Services. We also have Nitendra Rajput, the Senior Vice President, AI Products MasterCard, Akshay Mehrotra, Co-founder and CEO, Early Salary, Suchetra Mahapatra, Managing Director, India Branch International, and the session will be moderated by Nimilita Chatterjee, who is the partner at EY India. So, may I welcome them all on stage and give it off to Nimilita Chatterjee for the moderation and to take it from here, please.
It for this session. In many of the conversations that we have at EY, I think AI AI is an oft repeated word. I myself work in financial services, and the extent to which financial services is adapting, and benefiting from the use of AI, given the amount of data that gets collected in financial services, as everything that we do gets sort of recorded with our financial services provider. I think most importantly, for many of us in this room who are probably existing to credit, and I'm going to the credit side or the lending side of things, people who are existing to credit and have a bureau footprint probably find it easier to get a loan. But think about somebody who's just coming into the ecosystem, somebody who's just taken on their first job, somebody who's just started their self-employed journey, and the way and the amount of hoops they have to go through to get themselves any kind of financial assistance, right? Or I wouldn't really call it a loan, various other things. So I think the important part of AI and making the use of data and making it really important, and a very important piece of conversation today, is our ability to be able to use AI and data in the world of financial inclusion, improving access to credit, and all of those areas. And that's sort of what we'll focus upon today. Thank you very much, all of you. This is a great panel. I think each one of us brings a lot of gray hair to the panel, and many of you don't have gray hair, sorry about that, but the rest of us make up for you. So thank you very much for joining me today, and I'm sure we're in for a really enriching discussion. Thank you all the audience members for listening to us. If we bore you, just put your hand up and say, just let's move on. We know all of this. So thanks everyone, and welcome to all my fellow panelists. So I'll start with Nitendra. Nitendra, you at MasterCard, we would love to hear some real use cases, right, as to how we've used the data that you collect at MasterCard to be able to land some real use cases for, say, new to credit, thin on credit, that particular segment, and whatever else you would like to probably enlighten us on.
Absolutely, sure. And thanks, Nilimita, for setting the context. It is interesting if we use the term AI in the finance world, especially when the world is moving towards digital finance. And as Nilimita was saying, that we leave a digital footprint of what we do in this world. And that is what helps us collect large amounts of data about specific customers. And it's not very surprising, to be honest. I mean, forget AI, look at us using, our own brains, right? I mean, we can see that in this room, none of us look the same, right? Everyone looks different. And similarly, every one of us who reached here in this room came through a different route. None of us actually came at the same time, following exactly the same route and so on. So now, the same thing happens if you look at the financial background of all of us. All of us have traversed a different trajectory, a different path, which is unique only to us. Which is where actually AI helps, because AI does not build rules that everyone who is X feet high, Z weight, and so on should get this kind of credit, should not get that kind of credit. If that's the case, that's when we start to paint things with a thicker brush. What AI can do is that it can personalize, it can look at your history, and then it can actually figure out what decision needs to be made for this specific person in this situation, which, as we see, all of us are unique. But coming back to your question, what you said is that what if there is no footprint? The person just landed here and I don't have their background in some sense. What do you do to those? In the world of AI, so now most of the standard problems in AI have been solved. So in the world of AI, this is a very interesting problem that you do not have a strong, in the finance world, a digital footprint of a particular person, and you have to take a decision whether it is related to credit or whatever. the AI world looks at it from a point of view of what is called as zero-shot learning, which means with how less data of a person can you actually understand what could their trajectory would have been and therefore make a particular decision. So we at MasterCard, what we do is that we use such techniques to figure out whenever a new card comes to us, there are additional information available to us about that particular card. As soon as a card starts making transactions, which is the first merchant to which you make transaction, what is the location where you make transactions and so on. And then go back in the past and see what are the other cards whose first transactions were like this, and that's why we can figure out how their future would look like in some sense. So a lot of work at MasterCard used to be about, specifically in the risk domain, about when you swipe your card, is this transaction a fraudulent transaction or not, and so on. So making on-the-spot decisions. Now we have some real-world use cases where we use our AI-based algorithms in products. Specifically, one of the products is account intelligence, which looks at an account, which means a card, and tries and figure out what all can happen for this account in the future. Is this card going to go and use a lot of contactless stuff? Is it card going to do a lot of chargebacks and so on and so forth in the future, looking at the past behavior of other cards in that particular similar scenario? So all of those things, both from a technology perspective, from a core AI perspective, irrespective of fintech, within the fintech domain, trying to understand and learn from other cards, a short duration of theirs, and trying to predict how their future has been for the cards that have been there for a while, and then trying to figure out that when a new card comes in, use least amount of information and try and figure out what the future is going to be. So all of these things are in some sense merging to help make decisions using AI for cards which are not even, for which we've not seen enough actually. Yeah.
Thanks, Nitendra. That was really insightful, and probably, at least as an analytics professional, I heard a few words that really resonate. Number one is you're getting to a segment of one, which has really been what we've always wanted to do. And I think the other thing being the fact that the look-alike, right, the whole look-alike modeling area, which is something that probably we use a lot of, but maybe don't talk about it that often. So Akshay, coming to you, I think in the same vein, you in business have practiced a lot of, lending to the early in somebody's, in an individual's life. And you're probably seeing a lot of such real use cases coming to life. So we'd love to hear from you some of the problems that you have solved or how you've used various sources of data to create, this whole segment and build so beautifully this segment.
I would look at, if you look at a young person, right, there is little data about him. Maybe he's 22 to 26. He's not exposed to too many credit instruments, and typically you're expected to lend on, let's say, looking at bank statement or bureau data. Now that makes it very difficult for lenders to take a hard call whether that person is good or not. The second part is you need to grow to build algorithms which can run in real time and decision at mass scale. Now, as you're building a business, you have to differentiate yourselves, and we said, what more can happen? At one side, data is getting restricted. You need to make sure that you work within the realms of PII data. You work within what is constructed well for banks and NBFCs to run businesses. At the same time, you're disrupting the technology to say there is a newer way of underwriting a different segment. Now, we added two new variables to our decisioning science. One was sound, and second was visual recognition. Now, most people will capture a picture. We said, let's go beyond the photo, let's go to a video, let's go to ambient visuals and say, can we build a sentiment not just at the time of origination, but whether the person's placed where, does it have more variables coming out of it for decisioning. The second we noticed was large number of people have to be spoken to, which means voice and voice modulation can also become another indicator of risk. When you marry these back, what is the large output you could detect? Today, let's say at a proximity level, we are able to get 3 times higher efficiency in predicting churn, repeat rates, cross-sell rates, delinquency, and propensity to upgrade to a consumer hearing his voice. Now that changes the way you build a company, right? You move from saying, I have a few data points, versus I'm building proprietary data, which is going to be very different. I'm now working beyond regression analysis to actually use AI in my decisioning, and I'm moving from a one-time lending instrument to a perpetual lending product, which means I can now grow with the consumer. Today, as a company, we don't lose our customers to traditional institutions. We make sure that our consumers stay continuously with us. And that is because we are hearing to him. We understand his life cycle. We are able to upgrade him from one product to another product to another product. And that is a intelligent science getting built in because of additional variables built in runtime as the customer grows along with him.
Great. I think that's, it's almost eye-opening for at least many of us in this room to know that so many other variables get, so many other sources of data get added in to create models, and the results are pretty fantastic, Akshay, honestly. We've all heard about the power of non-traditional data, but I think you've really brought it to life at Early Salary. So that's amazing. So I think I'll go from one end of the spectrum to Nanaya, being really, running a bureau, having really the quote-unquote traditional data source, the very powerful traditional data source for thick customers specifically. But I think the question is that how do you use bureau data along with other sources of data to bring financial inclusion, new to credit, thin on credit? How are things like that working? We'd love to hear from you.
Thanks, Nimi. Bureau is a classic example of, textbook example of a big data and analytics, right? Our ability to leverage data to solve for use cases in the market is phenomenal. The journey that we have done in the country so far to build a very healthy growth of credit is running at the back end of bureaus like us. There are two classic cases in the lending landscape, right? One is existing to credit, and another one is new to credit. Now, in existing to credit, a lot more data is available in the bureau, so we are able to predict the potential default rates effectively well, and we strongly believe use of AI, more importantly, use of explainable AI, right, will enhance the power of this predictability. When I say explainable AI is that if you reject somebody's application for a loan, telling him the reason why it has got rejected is phenomenal, right? At the moment, nobody gets to know why an application for a loan got rejected. Now, by use of explainable AI, if you're able to tell the consumer your loan application is rejected for the following 5 reasons or following 2 reasons, it gives an opportunity for that individual to work on their credit history, improve the credit score, and be able to access credit back. So, extremely powerful in Equifax. The neural decisioning technology for the credit decisioning has been patented, wherein you're able to potentially give back a reason as to why a particular application has been rejected. This is truly financial inclusion, right? In terms of how do you help enable access to credit for those who need the credit, right? Those who get rejected because of lack of credit history or lack of good credit history is very, very important. So that's where I think we see the AI, the ML layer running on top of our database to be able to help lenders make those effective decisions. At the bottom line, Akshay keeps telling, lending is a very simple business to be in. It's a very simple business, but the complex process runs beneath the entire decisioning journey to ensure that they don't lose money and they make money. That's very, very important. So risk has to be contained. And while we contain the risk, I think how do you ensure that the borrowers also are able to access capital on a regular basis? So that's on the existing to credit, how explainable AI can be very effectively used. On the new to credit is that use some of the non-traditional, Nimi said bureaus are a traditional data, and she went on to expand it a little better to say that very strong data, but that's good. But there is a way we can bring the non-traditional data with the traditional data to make sense out of the non-traditional data to do the underwriting decisions. See, the point that Nimi mentioned is about mirroring, right? So whether you could look at non-traditional data like usage of telecom services or rental payments or whatever that data that is available out in the market, for those borrowers who don't have any presence in the bureau. When I say no presence in the bureau, they're first-time borrowers. So how do you bring in that set of data, mirror it with the data in the bureau to see how they were to, if they were to borrow, how will they behave in the marketplace, right? So those are all the values that we could bring to the table for all the lenders in the country. I think, with the data that we have in the bureau to solve for existing to credit, solve for new to credit, enable access to credit, and also there is a large use case, I don't know whether we have time to discuss on that. How do you potentially use AI to predict fraud risks in the marketplace, which is another, there are only two risks. When Akshay defines business as so simple, there's credit risk and fraud risk. I think we can use data and AI and ML very, very effectively to protect lenders from some of these risks.
Sure. And I think that's very nicely put to say that how can traditional data sources be brought together with alternative data sources. And the line is getting blurry between what is traditional and what is alternative slowly and steadily. And alternative data sources are really changing from customer segment to customer segment. So I think that's sort of the bottom line. That's where the magic happens, where you bring together different sources of data, bring it together for the right set of customers, and that probably works, the entire micro segmentation and hyper personalization. And sorry, I'm a consultant, I have to use all the jargon that is in the market right now. Otherwise, you'll go back from here thinking, I didn't add any value to the discussion. So that's sort of what, so Sucheta, that brings me to you in terms of, again, I think similar to what Akshay said. We'd love to hear from you how you're using, these data sources. How are you using AI to really land better risk in fraud, in credit? How are you using it in real life?
Yeah, I think, thanks Nimi. We've spoken a little bit about making more sort of, what does this really mean, right? Like, what are the real examples? What does this really mean? And Nanya spoke a little bit about financial inclusion. So here's where the rubber hits the road, right? We have a really, really ridiculously large portion of our population that even today remains either new to credit or frankly doesn't have the kind of access it needs to formal sources of credit. That's where I think AI or these machine learning models that we are all sort of talking about right now are making the difference. We are suddenly able to offer a loan to a customer, to a woman in rural India who is either very thin file on a bureau or just doesn't have bureau presence, right? Banked for sure, but they do not have the access that they need to start that tailoring business, to start that first small entrepreneurial venture, right? We spoke about the youth. Most large institutions haven't yet figured out how to economically underwrite, for example, youth, right? I mean, there's ways to underwrite, it just doesn't work out, and that segment remains sort of underserved. And we have many, many such segments in India. That's where I think these machine learning models, this new analytics is really, really game changing. Via this information that we're able to process real time, process very, very efficiently, and process very economically, I must add. We are able to offer financial services, in this case credit, to people when they need it instantly and make it, we are adding dignity and respect in their lives. To many of these segments, the business of standing in the bank and then, probably not getting served the right way was very, very demeaning, right? Here, on their own smartphone, they go, with a few clicks, they get access to credit just when they need it. Now this is so game changing, it's not funny. I have example after example where someone's managed to pay a medical bill just in time, it saved someone in the family, where someone started a small business, all they needed was 12,000 rupees to make those early sort of raw material investments. So I think these are the ways in which it is very, very real, and personally I find it very fulfilling to be able to be part of the customer's life and journey in this way.
I think that's, it's humbling in some form, and it's also eye-opening in some form that all of us together probably, this larger forum and the segment that we're all trying to address is so much larger than what this room or the people who come here are. And I think that's really where the data and the AI and all of that starts to make a difference. So thank you very much for that.
And also just see the social side of it, right? You're helping build credit history
yes.
for those who never had a credit history. I think that's a phenomenal work.
Yeah, absolutely.
I'm making note that Nana is asking us to report back on time and not mess around. Yes, that's noted.
Yes, each one interprets what they want to interpret. Yes. So, Pat, coming to you, in terms of the fact that, I think the elephant in the room or the question on everybody's mind is on data privacy. How do you use this data? What is right? What is wrong? What is gray? What really is consent? All of these kind of things, especially in this segment of customers, right? And having your exposure in the UK and, where GDPR norms, etc., are so strong, what would, some of your experiences on how data privacy is impacting the space, or what all of us need to think about as we use various sources of data?
Sure. I think there's been some great comments so far, and I think just to kind of build on this, it's one thing getting loans and getting credit is one element, but it's that responsible element, and I think there needs to be some consideration around that, because just because you want a loan doesn't mean you should have a loan. So I think there needs to be some of this, and in the UK there's been lots of examples of payday lending years gone back, the Wongas of this world. Then it's been reincarnated into the buy now, pay later space, and you've seen a lot of debts rise. So there is a responsibility element, and maybe AI can play a role in that as well, the propensity to actually pay back that money. And so there's something there I think needs to be dug into. But I think around the data privacy and protection, and we had that conversation about an hour ago, and I said, is this a loaded question? For me, it feels that AI models need to bake in data privacy and protection. That seems to be a given. And a lot of it boils down to the company's values that's building those AI models. And so how are they going about this? What are the values that they have? What do they stand for? Otherwise, you can get a lot of bias that comes into some of these models. I think more broadly, when you think about, say, the Web 2 space, and you think, Web 2 come around when mobile, social, and cloud all kind of come together. And similarly for Web 3, everyone's talking about crypto and blockchain and decentralization, but they're missing two fundamental pillars as part of the decentralization space, and that is the AI element of that and the quantum computing, which enables more processing power. So these three in combination should build this new Web3 world. And if you subscribe to that, then you own your own data. So you're responsible for sharing that data, monetizing that data, and it's a paradigm shift away from the Web 2 models in which you could use services largely free, and these companies would monetize your data and make a killing out of that and advertise to you off the back of that. So I think this new space that we're kind of in the early stages of, we're probably closer to a Web 2.5 world. I think that whole data protection and privacy should be down onto the consumer, and you own your own data, you decide what you want to do with it, and no organization should be able to have your data for free. And then when you start to think along those lines, it may change business models as we know it today. So you can kind of dig into that if you want to.
I think super interesting, again, the product is you, right? Each of us is a product of ourselves, and you own your own data. You can probably monetize your own data for your own benefit, as it may be, right? Whether it may be discounts or whatever that may be. So I think that's that's amazing to sort of bring this whole discussion together. I think we've heard multiple views. We've also heard multiple facets of using data, and as we sort of come to the closing end of this conversation, I'd like to just go around the table to understand from each one of you in terms of what is that one thing that all of you that you are watching out for going forward, right? In the space of AI, analytics, use of data. Just one thing, privacy was one thing that came to our mind, but is there one thing that you're watching out for as we look at exploration of all of this data? So we'll start with you, Nitendra.
Thanks, and I will say two things, not one. I think from a finance perspective, there are two things that are really important, and there are surveys that have said, what is it that makes sure that your customer sticks to you? One is ease of use, convenience. Sucheta mentioned that you have to have real-time decisions and so on. And the second is actually trust. As soon as you lose trust, and that's why perhaps Nani was mentioning about explainability and data privacy and so on. So those are the two really important things, and that's what we've also realized while working at MasterCard, like having the ability to process like 1,000 transactions per second because there is a real-time requirement. People are waiting and making important payments which need to be processed right then and there. You cannot deny a transaction which is supposedly supposed to go in some sense, but at the same time you need to worry about fraud. So how do you make those quick but really important decisions so that the convenience is still there for the customers? And while AI is being talked about from a responsibility, ethical AI and blah blah perspective, but as soon as it is being applied to the finance industry is most watchful about it being trustable by its customer, because that's what keeps the businesses going in our world, and that's why I think these are the two main important parts for us.
Great. Sucheta?
We're talking about the models and AI, right? I think our models have really become great. They have learned, they have become very, very powerful. That said, I think we need to be careful. Pat referred to privacy and so on. I think we need to be careful what we input. The regulator does not want us to ever get into a space of discriminatory practices. So we have to be careful what we feed into this model, lest it come to a place where we are intentionally or unintentionally discriminating, right? And I think that's a big sort of moral responsibility for all of us, right? As these models mature, we have to keep an eye out to make sure none of that happens. That's usually the regulators' sort of big advice to us, and I think it's our obligation to keep doing that. Also, I think when the model gives us a bunch of outputs, what often we miss doing is applying just business judgment and the smell test to some of the stuff that comes out of this model, right? And then we try to step back and make the models even finer, where some degree of deep customer understanding, some degree of business judgment, and a simple smell test would have told us, okay, boss, this won't work, right? Just go back and rebuild this part of the model again, or like junk this. So I think that is something I obsess about never forgetting. Both of these things, I think I obsess a little bit about never forgetting. So those are two things I would, watch out for.
Akshay?
So, I think for me, the most interesting things is coming from a very simple perspective. Our analysis shows need for money goes up between 21 to 29, and affordability of money comes down post 29 to 40, right? Once you're 35, you can afford buying an iPhone because I earn enough, I can pay it in monthly mode. But when I'm 26, I want the iPhone, but I may not be able to afford it. So that's the difference. And I think that particular perspective will only get answered if the analysis capability on data available can be done in a more rational manner at a more frugal cost. Right? Many of the time we don't realize that the amount of data into churn at a customer level is phenomenally large. And models like ours only make money if we keep the cost low. Right? I think the disruption now taking place is computing power is really going up. Right? There is more data available sheerly because you have now decisioned millions of people. Now when you build a model for very young people using previous analysis, you can actually bring out capability of, let's say, giving a 24-year-old a capability to buy an iPhone on his own. And when you build that power, you build a much larger consumption economy coming in. India is on the verge of building consumption. When you add these 3-4 parts which I spoke about, computing power, understanding consumer behavior, availability of data, you actually bring the beginning of consumerism. And once that happens, you have actually, let's say, 20 crore more Indians where access to credit can open up in the next 18 months. If these 4 parts add up, the industry will actually grow by 5 times, not by 10%. Right? That's the changeover. And I think that's what's going to keep us hungry and more willing to invest in efforts to build out larger enterprise.
And what keeps you up at night is how you're going to be able to scale to meet all those. Great. Thanks. That's the problem of plenty is also a problem, but good to have. Yes. Yes, Nanaya.
So I think just building on from a bureau standpoint, our ability to solve for, again, access to capital, the credit penetration, how it can improve in the country, I think it's phenomenal with the data that we have. And with the overlying AI capabilities, I think we can solve for things even better than what we are solving today. To the point that I mentioned, I think explainable AI is very critical to success. To tell somebody why his loan has been rejected, I think it's, must be feeling so bad that his loan got rejected and not knowing why it has got rejected, right? If you're able to tell them, I think that's phenomenal. That's the next wave that I see. Second thing is, while we talk about all the benefits of AI, responsible use of AI is also very, very important, because to Suchita's point, that if AI, if it is not built in a constrained model, it can throw up biases in the decisioning, which could impact access to capital. So very responsible use of AI is also very, very important. So there's a lot of debate between constrained model, non-constrained model building methodology, whereas constrained model is considered to be very responsible. Non-constrained can throw up biases from an output standpoint. I think while AI has real benefits, I think responsible use of AI is also very important.
Absolutely. And Pat, to you.
Sure. So I think for me, and I think this is influenced by 2 young kids, that you start to think about something beyond what you do and how you make money. And I think it's around sustainability. And so one of the big things the world is facing right now is a reliance on proxy data. And so this proxy data is not accurate, and companies are building, their net zero or their tracking based on this data. And I think if we can leverage AI and elements of big data, I think particularly big data, we can move as a society, as a world, beyond fake data to something which we can actually, the real world data that we can use to track, trace, monitor, and see how we do better. So it's ultimately leveraging AI and big data to achieve not just net zero, but net negative. And I think that's probably one of the biggest things that we can do in leveraging AI and big data.
Absolutely. And I think some really, really amazing thoughts. I think the last round was really, it brought out everybody's, I think, the side that all of us probably think about but don't talk about that often, which is about having responsibility as how do you think about growth, but you grow at the right costs, and how are you able to churn and use data to analytics at the right cost and price. And I think very, very well said. I think the closing comments from Pat in terms of saying that what are we leaving behind for the world? How can we make this a better place using all the tools at our disposal as well, right? So I think that the whole sustainability piece is something that we can definitely use. So having said that, I think super discussion and really eye-opening. Thank you very, very much, each one of you, and thank you the audience for listening to us. And we hope to see you soon at this event again next year. Thank you.
So thank you, gentlemen and the ladies on the panel for that interesting session. Some points that really made a lot of sense, what Nitendra spoke about, how trust and how AI can be used to build customer stickiness, which is so essential to future growth. Akshay spoke about how they are using voice in order to decipher probable financial behavior, which is a pretty interesting thought. Nanaya brought out the fact that explainable AI is key to the future growth of the industry, and how it is financial inclusion to the true sense, and that AI also needs to be responsible. Sucheta spoke about how there is still an underserved section in the space, and how we can add dignity and respect to the process, which is a fulfilling experience in many ways. And lastly, Pat brought out the fact that the emergence of Web3 may actually significantly change the way we do business in this space, and the reliance on proxy data and being quite not being quite accurate was a point of concern, and how we can use AI to track, trace, monitor, and do things better in this space. So really interesting points coming out of the panel. If there are any questions that you want to address to the panel, we are open for at least 2 of them now. Yes.
Hi guys, my name is Deepak. I am a lead data scientist at a fintech startup. So, you know, we work in the rural sector, and, you know, one of our main pain points that we have been trying to address is how to use AI and big data for collections, right? We are always trying to close that gap into like, okay, you know, we expect these many delinquencies, these many NPAs, and trying to close that gap of expected versus actual on one end, right? But on the other end, we are also trying to optimize for the collections practices to make sure, you know, we are able to sort of, you know, approach the people and use marketing tactics or communication tactics to be able to, you know, target the people who have high propensity to pay, right? So how do we, so for the latter part, I think we sort of missed that in the discussion. So just wanted to know your thoughts on how can we, you know, leverage AI and
Maybe I'll
big
talk
data
about
for
real
that.
life situations actually. We do this quite efficiently. The collection scorecards are fairly robust today and available. There, I think 3 or 4 rules come into building these. One is, remember in many other fintech models, it's not first time loan, it's repeat loans and repeat EMI payments which have to come in. Right? In a traditional man, you cannot man every response of every customer. But in a digitized world, you can, every record of every response can be measured. For example, there is a propensity of a customer to pay late. But did he react on the first SMS? Did he react on the first notification? Did he react on the first voice call? Did he react on the 7th voice call? Did you have a differentiated person calling to have a response? And when you measure that back, today, one of the clear principles that we follow is how do we reduce at least our calling by 10% every quarter on collections, right? That's only going to happen first by measuring the data, building propensity scorecards on it. And as I mentioned, we are hearing the voice of the customer to say, will he pay or not pay? Right? You cannot have an intelligent person making a recovery call. You can have a caller making a call. The intelligence comes by the AI scorecard which is on the back, which hears and converts to NLP and says, this guy is not going to pay. Stop wasting your time. Right? Because you can only push a customer to a level. Right? Beyond it, the efficiency goes away. That's the intelligence which is actually now getting powered. And let's say we are responsible for at least 500,000 EMI payments a month. Right? And our job is to make sure we collect 99.4% of the money every month. Right? Now that's the efficiency. It comes in because of the collection scorecard, because of the NLP running behind it, because of the sheer measuring and tracking of every tool responsible for connecting with the consumer.
If you don't want to build one scorecard, come to the bureaus, we'll have the scores ready. Yeah.
We have time for another question, please. Thanks. Yeah. Oh, yeah.
I'm Harshit. Thank you very much for this panel. I have a question. I've seen that in most projects that are implemented in banks or financial institutions, while everyone realizes big data and the importance of data, but the one area that receives minimum attention is the quality of the historical data and the data migration. Because by that time, I think there's such a lot of fatigue and everyone has sort of passed the deadline that they say, whatever data is there, let's go with it. And then to apply business models and AI and big data techniques on bad, outdated data, I don't really see the point. So I want to know your thoughts and views on it.
I think so you referred to, yeah.
Maybe I can add before he jumps on one part. See, because the new age industries are learning faster, right? Let's say 5 years, when we started this business 7 years back, we were told a scorecard takes 3 years to train, 18 months to build, just 7 years average scorecard should last. We try to destroy our scorecard every 6 months. Right? That's a tough, bold move, right? But that's the industry changing too. So you're going to rely on old data, it's good for 6 months, something fresh has to get built after that.
Yeah, I mean, you're right that it is a lot of information is available in recent data than in the past data. But in the finance world is one thing that is also very important, which is rare events. COVID was like a very rare event, right? The wars are usually rare events. Now, if you do not use that historic data, you would miss out on how the market, how the customers react on such rare events, for which it is really important to have, and which is why institutions, companies having a significantly large historical data set would be helpful. But of course, you're right that for specific things, perhaps the recent data has more value. And there are algorithms from an AI perspective which look at, which weigh in recent data more and weigh in the more historic data less. But I don't think it's perhaps the right idea to just ignore the entire past data. Yeah.
I think the point we're trying to make is that we probably should not be ignoring. I think spot on. What happens, you've probably experienced it, that's why you have the question. What the organizational fatigue on when projects of this scale are done, there's an element of fatigue. We've probably tried it once, twice, multiple times. It's probably gone through some pass fail, and some like failed sort of stillbirth problems already, right? There's that problem. Also, I think the understanding of the ROI on the benefit of doing this was not very apparent before, which is now getting more and more clear, right? The pricelessness of the data and the ROI of taking the trouble of, for example, migrating larger data sets than, versus just going with latest data. I think that understanding is now becoming clearer and clearer, a little bit because the world's evolved, a little bit because others have demonstrated and so on. So hopefully this becomes more of a trend. But you're right that historically this has been a challenge, and it's not been done very elegantly till date. Yeah.
So with that, we bring this session to the close. Thank you so much for doing this with us. Take care of yourselves and wish you well. Thank you. Thank you.
Thanks, Nimrita.
Thank you.
We shall be moving on to the next session. May I request people to take their places, please? Our next session is a panel discussion on charting pathways to rural transformation with financial inclusion. This session will be moderated by Dr. Supriya Sharma, who's partner insights at CIIE.co. She will be speaking to Dr. Hari Nagarajan, who's professor and Infosys chair for societal development at the India Institute of Management, Ahmedabad. And he'll be joined by Dr. Pawan Bakshi, who's the India lead financial services for the poor at the Bill and Melinda Gates Foundation. May I call upon Dr. Supriya to take it from here, please.
Um, yeah, folks at the back, if you can come closer, that will be wonderful. Seems. So this could be an intimate chat. Great. We have about 45 minutes with us. I have a series of questions for the panel here, but to get started, for today's conversation, there are, in my mind, there are really three keywords: rural, financial inclusion, and rural transformation. And while most of us joining here would know this rural market that we are talking about, this is roughly about 900 million people. About 300 million people have access to internet, which is, to put this in context, the population of US is about 330 million. Those are the number of people in rural India that have access to the internet. The incomes, monthly incomes range between 286 rupees per month to about 13,000 rupees a month. That is really the spectrum of people that we are talking about when we talk about rural markets. I won't take more time and set context. We have a stellar panel. I think in total we have experience about 50, 60 years on this panel working in the financial. Okay. And therefore, I'll quickly get to the questions. We have Hari. I'm going to start with you, and I'm going to ask you to tell us what is. You've been collecting some data on rural households. If you could quickly tell us about the impact of financial policies on rural households.
Yeah. Thank you very much for inviting me here to this event. I have approached financial inclusion. I myself and a couple of my colleagues at Ahmedabad, we have approached financial inclusion with a view to understanding what it does to households, what it does to individuals within households. What the government has been talking about is welfare, that is converting households into spending units. So it provides welfare, and households are expected to use that welfare to spend on few items, mostly dictated by the government. So that essentially means that the household's horizon of planning is immediate. If you are a spending unit entirely, your time horizon is almost immediate. क्या करना है भाई? आप दिखाइए क्या करना है? अच्छा, okay. Simply too many things on my hand here. Hopefully this won't fall off. Yes. Okay. No, I'm all right. Yeah. So. Right. So if we view households as having to react, rural households in particular, as having to react entirely to welfare policies as designed by the government, then essentially what we are doing is that you're converting households into those that need to be planning for the future to those that are actually engaged in immediate expenditures. So our worldview has been, as part of this team and as part of the research program that we are currently in the middle of at IIM Ahmedabad, is to try and explore the extent to which financial inclusion, namely what the central bank has been doing in this country, how that financial inclusion can help individuals and households into expanding or extending their planning horizon. Essentially, we would like for the households and individuals, women in particular, to associate ownership of bank accounts or fintech products with participation in labor markets and income generation. Therefore, linking ownership and use of bank accounts with incomes, with planning for the future rather than immediate expenditures. So in that context, we are trying to explore what central bank policies have done to this thing called financial inclusion. I will also explain to you later when Supriya asked me about what fintech products have done to financial inclusion. So the central bank has been dealing with financial inclusion in rural India for significantly long time, and they have in place a number of policy arms, and one policy arm is the bank correspondence. And it is quite astonishing what bank correspondents have done to incentivize. I use the word incentivize very, very carefully. For me, the term incentive means that it essentially reflects the cost of not doing something. So if you do not own a bank account, there is a cost associated with it. Only then owning a bank account becomes an incentive. Otherwise, it is not an incentive. Right? The reason why women are attracted to PMJDY is because it is through PMJDY that they are able to access welfare benefits. PMJDY is not, according to us, financial inclusion. Financial inclusion is something that is triggered through central bank policies. Financial inclusion is intimately linked to income generation. It is linked to economic activities of households, not consumption activities of households. So if you look at these bank correspondents, the role of bank, what they have done, I mean, you know, one of the things, for example, you know, the impact of bank correspondence on account ownership by women in rural India, in remote villages. That is, you know, how do we define remote? I mean, you know, if an average the distance to a branch, to a bank branch is more than 15 kilometers. That to us is remote. It's 42%. Average impact of a bank correspondent is up to 38%. Huge impact. Yeah, and it is quite astonishing that this is happening, and in public discourse, in public policy, this is not being addressed adequately. And how these banking correspondents can work with fintech is something that I will talk to you about a little later. A banking correspondence as providers of financial literacy. If you look at one of the RBI circulars, it clearly points out that these banking correspondents should work with the panchayats. In other words, it will be amazing if the banking correspondents are able to participate in Gram Sabha meetings, where financial inclusion and literacy is becoming an agenda in the Gram Sabha. Members of the village are able to participate and are able to access information about banking. They're able to understand the benefits of banking. They're able to understand the benefits of using bank accounts. It will be something spectacular. I mean, that's where, I mean, the RBI circular says it, but we don't seem to be talking very much about it. It does other things. It empowers women, financially empowers women. Owning a bank account, using a bank account effectively, that's another finding that I will quickly talk to you about. Supriya, just give me half a minute. There are economic outcomes, significantly measurable economic outcomes due to ownership and effective use of bank accounts. Firstly, it financially empowers women within households. The share of decisions taken by women within the rural households increases by up to 5%. These are not just statistical regularities, these are econometric regularities, these are structural regularities that we have estimated using our household data. One of the most astonishing things that bank accounts do is what rural households are able to do in reaction to adverse shocks. Rural households are exposed to a number of shocks. Yeah? You know, there can be climate shocks, there could be health shock, there could be all kinds of shocks. So they undertake coping mechanisms in response to these shocks. If you have households where women are owning a bank account, specifically, households where women are owning a bank account, there is up to a 2% decline in the need to sell assets as a coping mechanism. 3% decline in having to use starvation as a coping mechanism, reducing consumption as a coping mechanism, right? And nearly a 1% decline in having to borrow from money lenders. So proliferation of banking, proliferation of economic activities as a result of owning a bank account makes rural households less vulnerable And financial inclusion therefore plays this kind of a significant role in economic development of rural India. So I will talk about this when.
Great, thanks, Hari. Powerful, findings, powerful numbers that you've been able to share with us. I'm going to come to you next, Munish. Extensive work that you've been doing with Bharat Banking, particularly in the rural markets. Could you tell us about, some standout things that you see in rural markets, some lessons that you've been able to integrate in how Axis Bank is delivering financial inclusion?
Yeah. So thank you, Supriya, for getting me here. So for us, at Bharat Banking, we're trying to connect the dots in the semi-urban and rural ecosystem to deliver credit and liability products to these markets and to these customers in a seamless digital manner, which is cost effective. So essentially deposits and accounts and also on the other side loans, which include farm loans, microfinance loans, etc. And I'll take up from where Professor left. And I completely agree with him. And the increase in financial inclusion leads to very powerful outcomes. And I am at this end, he's at this end with theory, and I'm at this end delivering this into deeper markets. And I have several experiences which I can go on, but I'll narrate a couple of them. A few things which stand out for us when we look at these markets. The first is that there is a, in Bharat in particular, it's for an institution, for us like us or a bank or a other financial institution, very important to take a very customer-centric view of your segment that you're trying to service, because you cannot take a product or a business-centric view, because you will fail miserably, right? Because if you go with multiple product proposition to the customer, and every time you do a fulfillment, etc., it's just not possible. So you take a customer-centric view and say, here's the customer, here is life cycle, and here's where I start, and this is what's going to happen to this customer over a long period of time. And today, data makes that possible, and that's the second thing. The second thing which stands out is that a lot of in the current scheme of things, the schemes that Professor talked about, and the policies that are going on, and the way this entire ecosystem is being invaded by a number of opportunity seekers who can go and we think we can businesses which can make money in this market. A lot of data is getting generated in the process. A lot of digital outreach has begun, and we work with several such partners. One of which is agri inputs company, Bayer, and Bayer has a set of better life farming dealers or agents or something, BLF agents, and they take a number of services and they deploy or sell those services in those farms or to farmers in the adjoining areas. So what we see there is that once you start getting a lot of data about these customers, coupled with some other data or technology that you can get about the farmers or or households from something around satellite imagery about farms and stuff like that, where you can better underwrite a customer, you actually can go and provide more and more credit to these guys. And once the credit becomes, and we were talking, Pawan and I were talking just now, if it's sustainable, then it stays. If it's not sustainable, then it dies out, because then you will make losses and you come out of it, and then you are just out of it. So data becomes very important. In fact, we did a workshop with Ministry of Agriculture along with World Economic Forum sometime back, wherein we said, how do you create a CIBIL equivalent of data for all farmers or farm kind of activities in the country? And I think that's a big opportunity. Department of Financial Services apparently is already working on tagging every plot of land and every farmer to that plot of land and trying to track their productivity, etc., which will enable financial institutions to go deep in there and start funneling those services to these people. The third thing that I realize in these markets is that sitting here in BKC, we don't have a view of what could be happening in deep markets in this country, right? Because we are all digitally savvy, etc., etc. But you'll be shocked to know as you go deeper into these markets are not, as they are indeed as digitally savvy as possibly all of us are. Digital services, appreciation of digital, appreciation of bureau, appreciation of data, appreciation of technology, smartphone, etc., use of it. If a BC is there in that market, how to deploy or use those services to get financial inclusion for self, etc., it's deep in there. So as a result of which, it becomes immensely possible today to stitch solutions working with multiple parts of the ecosystem, collecting all the data, etc., and funneling those services for these customers. So some of the experiences that I've had, I mean, I've seen. I was in deep Kanchipuram, and we met a BC professor there, and this gentleman was working with CSC as a village level entrepreneur. Okay, and he was providing all the government services to the adjoining or neighboring villages, etc. And what I saw there is that this guy is an ex-cognizant engineer. Okay, he was an ex-software engineer. He was deep into Kanchipuram, some 100 kilometers inside Kanchipuram, providing digital services to villagers in his neighborhood, about 7, 10, 15, 20 villages. Everybody now goes to him for getting all the government services, getting a passport or a PAN card or a voter card, etc., etc. And all the services on the banking side. Standing there, I actually, in deep Kanchipuram, I made my Airtel bill payment for a bill which was due in Bombay, right? And and today, all the banks in those adjoining areas are actually guiding everybody to go to this one guy, saying, don't come to the branch, just go and get services from this guy. And this guy is a one-man army, and he's dealing with, and he's giving us loans, he's helping people, come out of their financial, poverty, and helping them improve income, etc. And these kind of networks are helping, change this country completely, dramatically. And that's the pipe on which we want to ride and say, can we just go in there and work at this level and at this level and at this level and see how do we connect these supply chains to help these guys come out of their income. We also did some study on microfinance borrowers as to over a long period of time, how do these microfinance borrowers, are they really changing their lives by taking credit one after the other? And we saw a large percent of customers, they take for women, again in Kanchipuram, and these ladies are, contract workers for making Kanchipuram silk saris for nearby manufacturers. So they get one order, they take a loan, buy the buy the material and produce one sari. And then 5 saris you can do, and over a period of 3 to 5 years time, you are coming out of poverty. And, and that's the revolution that is happening on the ground. So it's quite inspiring, and it's quite, game-changing for our country.
No, absolutely, Manish. And there are a couple of things that you are, I'm very happy that you're underscoring the need for the industry to build customer-centric solutions, to be able to ride on existing and build for existing supply chains and digitally enrich supply chains. Very, very valid. Pawan, I'm going to come to you next. And as the foundation, you've been doing extensive work and supporting fintechs in various forms. What has been your and the foundation's thesis behind supporting fintechs building for rural markets?
Thank you, Supriya. So I think the first question to look at, and you went in and said this extremely well, is that it's very difficult to reach the people in the rural areas, especially if you're in the frontiers and the oases, and therefore it's also very expensive. So the traditional models of viability don't really work. Technology has gone and changed that, is changing it, can change it even more. To be able to get to those people who are left out right now by the use of tech. And I'll give you an example of this. So let's take the case of Aadhaar. Right? So if you, about 5 years ago, if you went to a telco or a bank and said, hey, I want to do a KYC of a customer, the cost was upward of 700 rupees. That's about $10. But unprofitable for financial institutions. Nobody would want to onboard them. Right? What happened? Aadhaar entered, and the cost of KYC, because of auth and authorization and authentication, dropped to about 10 cents. Right? Suddenly, everybody is profitable. As a result, you see 460 million new bank accounts opened in the last about 6-7 years. Right? Unheard of around the world. In spite of that, we still have about 20% of adults in the country who don't have an account, right? So which is another about 240 odd million. But we also have the largest number of inactive accounts. Right? So the question now is that if you got an account which a regulator says that it has to be in a regulated entity, how do you utilize that to serve the needs of the people in that location, right? So having a bank account is a good starting point. It's not the end point. It has to be able to use the services which can come attached to the account and stuff like that. So our belief is that fintechs as a world which take you on the bridge from analog to digital, right? In a way, you start with the assisted services and then kind of graduate to doing stuff yourself. But that's the world. So it reduces the cost, it increases reach, it increases access. And when we started to work in this space a couple of years ago with IIM Ahmedabad and CII Eco, we realized that most of the venture capitalists were not investing in this field. They all wanted another food delivery app or a cab ride-hailing app and stuff like that, because of quick returns and what the urban market kind of wanted. But as you rightly said, 900 million people is a lot of people to include, and hopefully they won't stay excluded for long. And we started, and there have been some interesting results, right? After we started, some about 9% of funding in India in fintechs now go to folks at ProPoor, right? Which is great, because starting from a zero to reach at just about 10% in under 4 years is, I think, phenomenal. The next phase will come. The other is that the amount of the fintechs who can serve the lower income markets has been limited, right? We've seen in our cohorts at CII about 42 odd startups have been able to serve about 34 million odd people, right? And about 20 million odd from them are women, right? So that's a huge number. It hits two markets, right? One is at the bottom of the pyramid, and the other is a highly excluded other segment of women, right? Who are excluded for the fact that, one, the products are not right. Two, the access is not equitable and not close enough. And the third is that they believe there's no need, right? But I firmly believe that, unlike all of us in the room, the poor have a very complicated financial life, right? So they do a lot more with a lot less, right? In terms of trade-offs, I would probably do a trade-off if my daughter asked me that I want a new phone and I want an iPhone. I said, why do you want an iPhone, right? They probably make several such decisions every day, right? So their lives are complex, but we are not addressing them. And there are several reasons why we are not addressing them. Is because, one, we don't see any startups emerging from rural areas, right? So if people in the cities are imagining what people want in the rural areas, it's not going to work, right? So we have to have people who come from there, who understand that space, who've lived that experience to be able to solve for these things. So I'm glad that at least now we are seeing some more startups which are emerging from tier 2, tier 3, and 4 towns, but that's still not enough. But I think we need to do a lot more to be able to get there. I'm going to stop there and get you on.
Thanks, Pawan. And on that note of fintechs being able to help leverage data, help improve access, I'm going to ask you, Manish, are you co-innovating with fintechs, and what could be mechanisms for fintechs to work with incumbents and sort of large bodies like yourself?
Yeah, so I was thinking about fintech, and we do a lot of work with a number of fintechs in the ecosystem. See, essentially, what does a fintech do? I mean, which a bank cannot do, right? So you are there, you're providing the services, etc. So there are 3-4 things, utilities or benefits that this brings. One is that they work it's not possible for one institution to work on multiple fronts and try to do small tests with segments and micro segments and still micro segments, and then find out a scalable solution in there. So these number of these fintechs which working across the country, they choose their own small ecosystem and they work in there. Somebody's working in farm equipment, somebody's working in milk, somebody's working in silk, somebody's working somewhere else, etc., etc. So they bring the entire thing to a point where a bank can then plug in and start providing the fuel for their growth, etc. So that's one thing. Second thing they provide is reach. Reach, digital, or through some other media which has a deeper reach and which can flow deeply into these markets, which are possibly a regulated entity kind of, or like a bank cannot reach so easily. That's point number two. Point number three is that they bring some data about the customer. They bring the data to a point, it evolves to a point where you can start intelligently make use of their data, right? So, and that data collection becomes, in aggregation, it becomes a bit larger for us, banks, to start making some sense out of it. Otherwise, you go deeper into this market, takes possibly that much longer. But once you have that data, you can start analyzing data and to start doing something with them. Now, once you have this stuff, then what you do is then you say, what do I do now with this entire set of reach, data, and digital delivery mechanism, etc., is that you start doing some tests in the ecosystem. Saying, okay, I will plant a few products here and there, and I will start doing some small tests. And we see how the test behaves during a short period of time. And if the test works and test gives you some learning, etc., then you qualify that that test with a broader solution, and then you deploy it into a larger ecosystem. And that ecosystem could be an ecosystem within that fintech, or you could deploy it to multiple other ecosystems which are of similar nature. Because now you have some understanding of this one ecosystem. You know what kind of data leads to what kind of outcomes, etc. So you take it from one side and then you start deploying it on the other side, and you start making it scalable. So number of players we work with, there are some which only give us reach. There's some where we are working in where they get a lot of data and we are able to do micro transactions. Somebody like a number of fintechs, but I'll name a few. Let's say a fintech like Stell Apps. There's a which is doing something dairy, where they have a system to collect milk from all these touch points, etc. So the farmer gives the milk, he expects money immediately. So you can start giving micro credit on a daily basis, etc. Technology enables that, right? So that's the reach. That's how technology delimits transaction, because the benefit of technology is it doesn't depend on any constraint. You don't have a constraint of putting more people and doing whatever. It's just deconstrained. You can keep doing as many transactions as you want. Or something, we work with a fintech, let's say like a agri-tech fintech in that zone. Somebody like a company which we have invested, like Agrim. Agrim is a company which is a B2B agri-input marketplace, where they sell these products to retailers in these deep markets. So they source for them and they sell to retailers in deep markets. It's an online Amazon, so to say, of agri inputs. So once you get into that ecosystem, then you start financing that supply chain, and then you start doing some work with them. Or you work with some other fintech, somebody which is doing a B2C kind of work. So they have shops, physical infrastructure, and they have a digital platform to sell products to farmers, seeds, fertilizers, whatever else goes into farming, etc. So those guys then start working with us for their cash flow needs, or their customers who come and buy from them, giving them credit on the go, etc. Or somebody like fintech like Rupeek, which is doing gold loans. Again, gold is a massively unleveraged or hidden asset in this country. If you were to just unlock the amount of gold that's lying in our markets, it'll bring in so much of capital into flow, right? And that you can make that work, because today, and Professor talked about it, to keep them away from the clutches of money lenders in the local level, gold is the first port of call, because even if you don't have a credit history, even if you don't have something else, you can actually start building a everyday gold loan. So you start working on that side and seeing how you deliver deeply to these guys with only one caution, and which is this, that these customers are very vulnerable in these segments, right? So it is the responsibility of the provider to ensure that you think of those vulnerabilities, and so that those vulnerabilities don't get exploited to their disadvantage, right? So, and you don't make undue money, because at some point in time, then you'll have to stop doing it. There'll be discontinuity, right? So those are my few takes on fintechs.
Absolutely. I think a lot of interesting models, and we're seeing validation of some of these models out there. Hari, I know your team's brought back data on the impact of fintechs on financial inclusion. Could you share some insights with us?
Sure. But I again want to start talking about ownership and use of bank accounts. And I just want to make two remarks, and it's based on the observations of my colleagues here. You see, the underlying factor is economic activity. sorry, the underlying factor here, the core factor that drives just about, that drives and ought to drive just about anything in the rural sector is the economic activity. So there is something called the night light data. I mean, as maybe some of you are aware, the night light data is basically satellite data on luminosity of different places. So we wanted to explore the relationship between night light and ownership of MG based bank accounts, night lights and PMJDY accounts, night lights and bank accounts. And it's quite astonishing that there is hardly any relationship between night light. The luminosity levels are actually lower when you increase the density of MG based bank accounts or even PMJDY accounts. There's hardly any economic activity there. These guys are consuming whatever is getting transferred to those accounts. Owning a bank account implies an underlying economic activity, whether it is farming, whether the use of technology in farming, whether it is, these are micro enterprises, the sari making business that you're talking about in Kanchipuram is an astonishing example of what financial inclusion ought to be doing in terms of triggering economic activity. I just wanted to throw that out a little bit. I wanted to get it out of my head. It was kind of eating me a little bit. The proliferation of fintech is an example, is an illustration that there is capacity building happening in rural India. Without capacity building, fintech is or whatever a fintech product will be mostly used for redundant activities. Yeah. Now, the fact that fintech activities are proliferating, there is evidence to suggest that it is leading to capacity building. What is that evidence? I mean, let me. This is based on on a couple of rounds of surveys that I carried out across 30 villages in UP. Yeah, we are not talking about Maharashtra or Karnataka or Tamil Nadu, rural UP. Yeah, so let me explain to you what is happening to households in rural UP as a result of proliferation of fintech in these parts. So, fintech products, proliferation of fintech products, the first thing it does, it leads to an increase, a 6% increase. Nothing related to fintech products, unrelated to fintech products. There is an incentive provided by proliferation of these products to open bank accounts. What does that mean? What could that mean? It could only imply from what my colleagues have been talking about, this fintech is triggering economic activity and generating income streams. And if you generate income streams and if households are part of those income streams, then there will be an incentive to own and operate a bank account because that enables them to plan for the future. So owning a bank account is owning and operating a bank account, savings account, for example, is an indicator, one of the indicators that households and women are able to significantly plan for future activities. Increase savings, increase expenditure on human capital, increase expenditure on girl-child education, nutritious food consumption, any number of things, right? It is doing that, right? That is one activity, right? Women that own fintech products, not just use fintech products, that own fintech products and are members of SHGs, for them, there is a 5% increase in ownership of bank accounts. The net of SHG, net of fintech, 5% increase in ownership bank account. It incentivizes savings behavior. Yeah. Probably the most astonishing finding that we found in our research was that the savings rate, not savings level, the savings rate of women, rural women, increases by 5%. This has got huge macroeconomic implications. Imagine boosting savings rate through technology, not through whatever you did in macro policy or whatever you did in fiscal policy. Through technology, through incentivizing women to use technology and linking it with the formal banking process. The core here is the banking system. Without the banking system, this whole thing collapses. We can't, I mean, you digitize, you digitize certainly, but you do it in the presence of a very strong formal banking. You don't digitize in the presence of fiscal policy. I mean, that's disastrous. You digitize in the presence of monetary policy, which is central bank, right? It's a couple of points I wanted to make. There is something called relative deprivation, right? Women are relatively deprived in rural India. How so? You measure relative deprivation by whether women are able to spend on their own clothing. Yeah? Whether women, for example, are able to spend on girl child education, their own children, right? Who is in control of those expenditures, right? It's not just the level of expenditures that matter. Who controls those expenditures? Now, the proliferation of fintech products, use of fintech products, reduces relative deprivation. We are talking about UP, please understand. Rural UP is what we are talking about, which has been touted as, backward, whatever. There's a lot of hearsay baloney that is going on, right? We actually find that there are ways in which you can overcome these kinds of hearsay, casual empiricism, right? I mean, if you increase the levels of technology, if you increase the level of competence of rural women, deprivation comes down. Education expenditure increases. Education expenditure for girl children increases, right? That's only possible if the fintech products, use of fintech products are related to the formal banking system. You see, they have saved part of their income, as a result of which they are increasing expenditure on girl children. And why are they able to save? The fintech products are giving them an opportunity to access markets, to access information, to be better able to access credit, to be better able to use credit, to be better able to use, allocate income streams. Yeah? Expenditure on nutritious food increases astonishingly by close to 12%. But one point I have to make here is this complementarity story between fintech and formal banking. And there is a huge degree of complementarity, and there is a need to boost this complementarity. What happens when a fintech product is created? There is always a fintech entrepreneur behind that. So the fintech entrepreneur finds it useful to sell that product, to explain the product. We call it reducing transactions costs associated with use of the product. People who are likely to use those products know about that product, benefits of use of that product. The banking correspondents have not been incentivized to do that. That's exactly what they have to be doing. If banking correspondence policies related to banking correspondence are strengthened, and they are empowered to engage in extension. You see, there is one thing that, half a minute, Supriya, just a second. You see, this thing I wanted to point out, the second point. There are, some panchayats are reserved for women, some panchayats are not reserved for women. Yeah? In reserved panchayats, the effect of bank correspondence is quite interesting. Yeah? Suppose women are interested in accessing information about bank accounts, and that panchayat is reserved. They are more likely to talk to the elected representatives about accessing information. And one of the RBI circular is suggesting that the bank correspondents work through the panchayats to expand financial literacy. So, what is happening in reserved panchayats? In reserved panchayats, banking correspondents are becoming far more effective in attracting women towards formal banking. 1.6% increase in ownership of bank accounts by women relative to their male counterparts within the same village. Yeah. So I kind of wanted to talk to you a little bit about the complementarity and leave it at that. That there is a need for this complementarity, and that promotes the deepening of fintech in rural India, widening the use of fintech in rural India, and strengthening financial inclusion through formal banking system.
Great, thanks. Thanks, Hari. And in the interest of time, we just have the last couple of minutes, so I'm going to do one round of closing thoughts. We have spoken about, at least in the last 40 minutes or so, we've spoken about things that are happening well, and we spoke about data, we spoke about customer-centric products, we spoke about this complementarity between incumbents and fintechs, the impact of financial inclusion policies as well as fintechs on rural households. But the question I do want to ask all three of you is, what would it take, I mean, given all this is happening at the pace that it is happening at, what would it take for rural transformation to unfold? And I want to start with you, Pawan.
Rural transformation is quite big, right? It's large in a country like ours. You talk about 3.29 million square kilometers, 900 million pop, at least 55% of them as women. It needs to change, right? So let's start with what the initial, so we should step back and look at what are the rails which are needed first to get us there. From my last conversations, I heard that about 40,000 odd villages out of 6.5 lakh villages India has don't have connectivity yet, right? So all the people staying there will not get connected if you're going to do only fintech. So it needs a phygital world where you have some physical stuff and some digital stuff, and you need to do that. I think the second thing we spoke about is the right kind of products and the reach and distribution. I still believe a lot needs to be done to get the rural distribution right. It needs to be viable and sustainable. It needs to be high quality. It needs to be able to serve all sorts of people. It needs to be served, including the women, which we are still far away from there yet. I think improvements have happened. India's, like the BC industry, has moved from about 1 million odd agents to about 3.4 million agents in the last 2 years, which is great. But the quality is still suspect. There is not enough transparency. You can't. If you still go to some BC agents and you want to do a withdrawal of $100, he'll charge you $10, right? So that's a 10% for the poor people, which is really steep. And now I don't know if that is a $10 across values or only for $100 or whatever. So I think that's the other question in terms of transparency, in terms of communication and awareness, in terms of the digital divide. In terms of languages and literacy, the role upcoming of language in terms of dialects like a Bhojpuri or a Maithili, where you have a lot of poor people there and who can't read or write, and they aren't supported on phone. The role of voice. Can you start doing voice-related transactions? So there's a lot of stuff that needs to be done, and we are all in the process of getting there. I think the one thing which I'll highlight, which still needs to be done amongst all these other things, is that there's a huge imbalance in between the compact and nimble startups and the large banks, right? And what we see is that these startups fail to deeply engage with the banks for several reasons. One, they have small teams, and they have to engage at multiple levels in a large bank. And from engaging to doing technology, integrating with the CBSs, there's a whole lot of stuff. Then there's also this thing about underwriting, right? A fintech, standard kind of a fintech will tell you, I've cracked the code. If you give me only 30 data points, I'll tell you if it works or doesn't work. And the bank will tell you, traditionally I've been doing 400 data points. Right? How do I transform myself from such a large data points into 30 data points? And the capacity within the bank to change. I think there needs to be and I'm glad that you guys are working on this, Manish, but not everybody's doing it. So I think there needs to be a very kind of sustained effort to get the fintechs and the large banks to work together. Otherwise, I think we are not going to be as successful as we should be. So I think that is one nudge that I would have for almost everybody to do that. And I think even the fintech piece, while they all do excellently well on technology, they don't have somebody who is into business development, right? So you do need somebody while you are doing all the great engineering and the experimentation on the ground, there needs to be somebody who needs to own that job of doing business development. I think you need to equally walk from the fintech side and the bank side to be able to meet anywhere in the middle, to be able to go out and create the magic, as I call it. It's not transformation, but magic. And I'm telling you, the world is looking at us. It's because we are doing so much on technology as a country, that the world is looking at us for models which work, and we should not be disappointing them.
Great, thanks, Pawan. Munish, same question.
Yeah, so first of all, we don't ask 400 data points, we ask, we ask far fewer data points to do a transaction. So I think for me, rural transformation to happen or will happen in future is not the thing. I think rural transformation is happening and it is here to stay. And I don't think anybody can prevent that from happening in the future. Because if India has to realize its ambition of going where it wants to go, this has to be carried along. Now that's point number one. Point number two, I think a number of things that can be done to accelerate this transformation, right? Because it's already happening in some way or the other. The realization at multiple levels in the government and that there's a need to do this, and on the private side, and realization at multiple levels of enterprise scale, the need to diversify or need to go into the deeper markets and find more different profit pools already exists. So I think that it is an understanding that is already there, and it will continue to move in that direction. I think, to my mind, accelerating participation of private enterprise is one key thing by the government, and there are several things that one can do. Putting the data construct together and bringing it all together at one point so that which can be made use of to underwrite customers better is the second point that I think will help. Third is this entire, encouraging this deepening of financial services of BC network and through other stuff, and having a self-regulatory kind of a model there, which can keep taking shape and keep taking services deeper and deeper and deeper. It will of course evolve over a period of time, but I think that's something that is likely to happen. Fourth, I think the need to look at the entire setup very differently both by the government and by the the use of vernacular, the customization of policies and processes which these guys understand, customization of technology, voice for instance, and a couple of other things that one could do. Education, creating incentives or opportunities for youth of this country to remain deployed there or to remain employed there is very, very important, right? Because if they leave those cities, if the villages, etc., for cities, and if they don't want to stay here, this entire entrepreneurship is not going to come together. And lastly, from my standpoint, since we deal with a large number of vulnerable, customers or people in this ecosystem, always putting them together and creating a stronger core is always better. So, promotion of collectives and is very, very important, and making what happened in Anand, in Amul, is something that has happened to multiple such commodities or products in the country, right? So creating those collectives is very, very important. The collectives, and I went to a FPO in near this place, Tuticorin, Thuttukoti as it's called. So I was I went to spend 2 days only with an FPO to see how an FPO works. And because there are thousands of them, and I was trying to figure out how does an FPO work? Is there a sustainable model or not? And I was I met up with about 10, 12 of them in that area. And there's an organization which is actually doing contracts out there for providing consulting to set up FPOs. And that thing has just got to become bigger, right? Because once you're a collective, then your ability to negotiate, create market linkages, deploy technology, give advice, etc. The behavioral aspect also changes because it's a collective behavior. The credit behavior changes because you're part of a larger group. You don't want to be a standout in that stuff, etc. I think that promotion of collectives, I think, is very, very important. And I think that is what will take it forward.
Great, thanks. Thanks, Munish. Hari, some quick thoughts on what would it take?
Maybe one word or 2 words.
Mike.
Sorry. The point that I have been making, which my colleagues have been echoing from different angles, I think. So there is a supply and demand side story here that triggers rural transformation. I am approaching rural transformation from the point of view of what households and individuals must be doing. So the single important point that I want to make here as to what will trigger rural transformation is that if individuals and households in rural India are in a position to respond to signals, they're incentivized to respond to signals, right? Climate change is a signal. Are rural households in a position to respond to signals and take decisions? Yeah. And how will they be able to respond to these signals? In the presence of technology. That is where the supply side story comes in. Yeah. Households, rural households, have always functioned in the presence of huge amounts of moral hazard and adverse selection. Moral hazard is inferring information asymmetry, not knowing about things. That's moral hazard. Adverse selection, poor design. Banking products are poorly designed. Fintech products for the longest time were poorly designed. So what is the whole point in having these things in the rural countryside in the first place? And how do you expect the rural households to be able to respond and react to incentives? Why were cooperatives successful? They were designed effectively. They reduced information asymmetry about what it takes to participate in these cooperatives. We have not done that with FPOs. Yeah? We have done that effectively with these cooperatives because that cooperatives have been around slightly longer. The business model of a cooperative is slightly more, appealing to the rural households and the policymakers because that kind of, still smacks of old-style socialism. Don't talk about profits. The moment you talk about FPOs, profits come into the picture. So you don't want to talk about FPOs. Because we still think that if farmers make profits, there is something bad going on. Yeah? We still want to talk about farmers as annadatas and not Marutis as car datas, which is quite astonishing. I mean, why would the farmer want to be handing out his fruits and vegetables that he has grown and cultivated with as much care as building a car? Why do policymakers expect that to happen? Why do they expect this of the rural households? And not of the urban households, not of the urban entrepreneur. Yeah? When that starts happening, rural transformation happens. And that is likely to happen if you leave things to the rural households and don't get them to do 100 different things because, your politics dictates that. Kindly don't do that. I mean, if you do that, you're essentially going to be talking about the same thing 100 years later. Thank you very much.
Thank you so much for the patient listening. Thank you, panelists. Thank you very much.
Thank you so much for doing this with us. Yeah, thank you. I ask you to please take your seats. Thank you. Before we move on to our next session, we would like to thank our partners who made this possible. Our theme partner, WhatsApp, co-powered by partner Amazon, our spend management partner, Encash, in association partner, Perfios, our payments partner, Cash Free Payments, and our CEO's dinner partner, HSBC. We thank our partners for making this possible. Our next session, ladies and gentlemen, is a panel discussion on powering business spends with corporate cards. The moderator for the session is Vishwanath Nair, who's the banking editor for BQ Prime. He will be joined by Naveen Bindal, who's the co-founder of Encash, Amarjit Singh Walia, head consumer and commercial cards, ICICI Bank, Vivek Gupta, president and head wholesale banking products, Axis Bank, and Sandeep Ghosh, group country manager, India and South Asia, Visa. May I call upon Vishwanath Nair to take it from here, please.
Hi all. Sorry, I'm the only one in jeans on the stage right now. But we've got our panelists sitting right here. May I please welcome you all. It's Naveen. It's Vivek Gupta, Mr. Amarjit Singh Walia, and Sandeep Ghosh. All right, the topic that we're going to discuss today is powering business spends with corporate cards. Now, to be fair, we had a conversation before this, and I was surprised that corporate cards are not just limited to T&E or what they described as dinner parties. But then there is so much more that corporate cards can do, and that's what we're trying to discuss here with our eminent panel. First, what I'm going to do is give about 2 to 3 minutes to each of the speakers. They can describe their thoughts, explain what it is that they want to pioneer with the corporate card market. Firstly, starting with Naveen.
Sure. Hi everyone, this is Naveen from Encash. I'm one of the co-founders at Encash. I think the key thing to sort of look at when we talk about corporate cards is the need of why somebody really needs to sort of use an instrument like corporate card, right? All of us have seen how commerce has got digitized for consumers, for people like you and I, where, you know, back in the 2008 and 9, there were very few sort of payment options that were available to us as consumers to make payments. And that was purely because commerce itself was not really happening online that much, right? The last decade has seen an enormous amount of innovation that has happened on the consumer side, right? There were wallets, there were UPI, there was auto OTP reads and one-click checkouts and whatnot, right? Why was this happening? This was happening purely because the commerce for P2M, the you know, buying commodities for consumers to merchant was actually becoming, you know, it was moving online at a very rapid pace. Similarly, if you see now business commerce, if I say B2B e-commerce is growing really, really fast, right? Things are getting digitized. I'll probably give an example to talk about it, right? I think 6-7 years ago, it was very common to see companies procuring their IT equipments like laptops, office supplies, and things like that from a local vendor somewhere close to their office, right? But that's changed pretty much now, right? People now go to Amazon B2B or Flipkart wholesale, or there are multiple other platforms where, you know, you could just go buy a laptop of your choice. And for obvious reasons that there are clear benefits. One, you get a GST compliant invoice, you get the laptop delivered at a choice or a location of your choice, you get, you know, a model which is of your choice and probably at the best price, right? So commerce for B2B is moving online, and that is why the reason for, you know, a payment instrument that can solve for all of these challenges, right? So, for obvious reasons, corporate card becomes an easy tool to do that. For one reason that it provides you a good end-use monitoring and a control over what exactly is happening on a company's behalf, right? Because it's, in case of a company, when spends are happening, it becomes very important for the company to know where is the employee of the company or a particular department or a procurement department is spending the money and for what reasons, right? Which is where this card instrument becomes absolutely important in my view.
Thanks so much for that, Naveen. Amarjit.
So I think, you know, corporate cards have come a real long way. If you want to look at something
5 or 7 years beyond. For a bank like ours, the definition was, I would say, restricted largely to travel. I mean, people would, work with the agencies, travel corporates, as also on the T&E side of the business, T&E size being, a little smaller. And come COVID and little before COVID, I would say the whole definition started, in a way, changing. And I kind of agree to what David is saying. It's more about solutioning as to what our self-employed segment requires, right? From, a small merchant all the way to a large corporate here. Clearly, the requirements are such that at every intervention, this card can step in. And for us now, going by the ecosystem approach and understanding every single possibility of a corporate card has really helped us. So just to give you one example, even if you look at healthcare as an industry, starting from the requirements of the hospital and the purchasing of the hospital, the supply side, and also the both payable and receivable side of it, there's so many opportunities today which can be plugged in, right? And traditional way of making payments, NEFT, RTGs, etc., have been always there, but the whole gap of receiving the money on time and paying the money on time had to be bridged, right? Happened earlier, but as we speak, a lot more is happening now. And I think many of our fintech platforms have really provided that agility to bridge this in a very big way. And we see that, as a bank like ours, we will grow this. It's a focus area for us. This would grow multifold in the coming few years.
All right. So that's one banker we have. I'll come to Vivek later. But first, Mr. Ghosh, if you want to spell out what your thoughts are.
Okay. So first, very good evening to everybody here. I must start with a disclaimer. I'm kind of new to the world of payments and digital payments, but my 3 other panelists will keep me honest if I go off track. So to begin with, maybe just to demystify the term, because corporate cards, commercial cards, T&E cards, purchase cards, and sometimes even small business cards can be used somewhat interchangeably. I'm not saying they're identical, but by and large solve the same purpose. And the idea that we're all discussing here is basically digitization of business to business, business to government payments, and even business to small business type of payments. That's what we're talking about. And we've obviously seen phenomenal uptake in digitization of peer-to-peer and peer-to-merchant payments in the country. It is not that B2B payments are not digitized, they are, but largely this runs, cash and checks are getting displaced by RTGS and NEFT. So the moot point here is that, is there an opportunity, or how large is the opportunity to embed cards? They could be plastic, they could be virtual, but to embed B2B, to embed cards or credentials in B2B flows. And we believe as Visa that, and there are the various studies that have taken different approaches, but the overall global B2B payment opportunity is about $120 trillion. And if you bring that down to an APAC level, it's about 50 trillion. And if you bring that down to India, it's about $14 trillion. And there are some other studies which kind of point to a market opportunity of digital payments in the vicinity of $5 to $6 trillion. And the interesting part is, even though corporate cards in India have taken off in the last 5 odd years, the total volumes being processed on corporate cards currently is about 40 to 50 billion. So we've only scratched the surface. And I think over the course of today's discussion, we probably will try and bring out what the opportunity is and why is it that it's only grown to this level, and what's the opportunity to sort of expand this market further.
Sure.
Hi, good evening, everybody. So look, don't let Sandeep fool you, by the way. I think he's a modest guy. Look, couple of things. We've taken a very different stab at looking at commercial cards. 3 things I want to call out. First, see, traditionally the business has been optimized for spends, right? I think it's important where we are today, the lens we are taking to is, can we optimize spends and profitability, right? So that's one dimension that we are additionally bringing on. So I just want to kind of break it up a bit. So the second lens which is important is, do we look at commercial cards largely from the construct of intermediating B2B payments? Is it very transactional, or as a full service bank like we are, as Axis, large anchors, a whole bunch of commercial banking clients and suppliers, do we look at it in a more integrated way from a supply chain point of view? So that by definition has got us thinking, saying, look, it can't be P2B payments alone in a transactional sense. It has to be working capital, right? The anchor, the client is one, and the client has a value chain, right, which has large size suppliers, small time suppliers, and a long tail of very, very small suppliers, right? So if you're taking an integrated working capital solution to the client, I need to solve for the client in its entirety. So how do I fit commercial cards into that constraint? The third thing I would like to kind of quickly add on, slightly different from the others to complement, is, look, proportionality, right? So as I was discussing with the team this morning, like, how do we keep this interesting? So I was told, look, the spends on cards overall in the country is about 7.5 lakh crores or thereabouts. 30% is through commercial cards. Now, proportionality for me and for us as a team at Axis means, look, how do I make sure that a large number of these cards are with the smaller end of town, mid-market, MSME type customers? How do I make sure that it's also reflected adequately in the limits that these customers are therefore utilizing? Now, that is the segment that by intuition needs most working capital. That's where the focus of the government is. That's where basically a lot of the untapped opportunity is to basically make them grow. That's a growth engine for a vibrant young economy like ours, right? So again, it's about saying where we are today, right? The B2B MSME contribution may be X. I think I see going forward the next 3 years that to be a much larger proportion. That's what we are focused on.
All right. Thanks so much for that, Mr. Gupta. First, let me take the bankers for my next couple of questions, and then I'll come to Naveen as well as Mr. Ghosh. Amarjeet as well as Vivek, the question here is, why have banks not looked at it seriously? You said that pre-COVID this was largely T&E. Now you're seeing these opportunities, but these opportunities have existed for ages. It's not something that's new you've discovered. What kept you away from looking at this as a business opportunity?
So as I said, clearly it's not that staying away was clearly, by choice. There were various instruments that the bank always had, right? I mean, whether it was funding basis of collateral, a CC or an OD and stuff like that were always available, right? And also for us as a bank, the whole, the unsecured way of funding, have in the last few years been kind of structured in a very, very constructive way. So in a way that, understanding the business. See, every business is different. Even within the business, you pick up one dealer versus the other. Let's take an example of OEM here. Let's say Maruti dealers, for example. You pick up one versus the other. All the understanding about the business is very, very different, right? So for us, the objective was to get on the on the drawing board and see that should the underwriting be done in a very, very different manner, okay? And what was emerging in the last 5-7 years is like, let's take another example of a fintech owner. Person walks up and says, look, I want to pay for my marketing expenses, right? But for you, the balance sheet is not going to speak the language that you want to see now. It's a very traditional approach vis-a-vis what you see now. Therefore, the underwriting had to be really seen from a very different lens. I think bank like ours in the last few years have transformed ourselves to see this opportunity in a very different way. And while we'll coexist with all the other forms of funding that we've had, but now with our ecosystem approach, we're opening up many such ecosystems. And that's one reason why, as I was mentioning, travel used to kind of be a very large portion of the corporate spends, which isn't now, so to say. There's a lot more that has happened.
Okay. Mr. Gupta, the question I want to ask you is, working capital is a sort of a, overall sort of a broad brush term. But each instrument within that you talked about here, there's an OD, there's a CC, all of these have specific use cases. That's why companies go to these. But if you were to club them to under one, say, product, does that lead to some problems? Is that difficult to sell to a customer?
In the sense, sorry, could you just explain?
My point is that if there are so many various instruments within the working capital umbrella, to reduce it to one product Or are you thinking of, say, a CC card or an OD card, a separate card for each kind of instrument? How are you thinking of this product?
No, so it's very important for us to understand that any product that any bank has this very specific end use, right? A lot of the challenges we've had historically around credit cycles, etc., is the end use is very vague, right? It's not with any particular tenor in mind, right? And typically we don't look at diversification of the book as one more aspect which kind of hits us in the face. So the way I would like to think about this is, look, commercial cards, right, is a very useful adjunct to a traditional working capital provision, right? Why is it very useful? Because it gives a lot of flexibility, right? It is easy to get going from an adoption point of view, especially as clients post-COVID have got used to digitization and they have adopted this, right? Third, it's very important from the client's point of view, which is the only view that matters to us, that it allows an extension of what is the days payable outstanding. But it allows an extension of days payable outstanding without actually making it adverse for the supplier, right? Because of the virtue of the billing cycle and the 45, 55-day odd period that the client enjoys. So the important thing I'd like to highlight is, see, if you want to have a win-win outcome in a supply chain, which is not transactional, that works for the anchor or a mid-sized corporate and their suppliers, it has to benefit all, right? So commercial card from that point of view actually, in my view, fulfills that gap very, very well, right?
Naveen, at Encash, the way you are looking at the product is targeting a specific kind of business, right? A smaller business trying to convert their payment needs into a corporate or a commercial card. I'm just trying to understand how are your customers responding to it and how are you dealing with these questions?
Sure. Maybe I'll also try to link it to the previous question that
Sure.
you asked regarding, what was so different in the earlier days versus now, and how the need is really evolving, right? I think one of the aspects, apart from what Amarjit and Vivek highlighted, was also about the product solutioning. You really can't go one size fits all in this market, where you have to come up with solutions that are absolutely required for segments that you go after, right? So for example, a lot of our customers come back and say, can I create a virtual card that can auto-destroy itself after the transaction is done, right? So let's say I have a new employee joining the team and I want him to go buy his laptop from Amazon, and once he's done that transaction, the card should auto-destroy because I don't want any kind of misuse to happen, right? It's a very specific requirement that the product solutioning has to meet, right? And likewise, there are plenty of other requirements where somebody says that I have an office in Coimbatore and there is a certain type of need of petty cash management, but I don't want them to go do ATM withdrawals out of that or certain other types of transactions, right? So how do you sort of block certain transactions? How do you allow them a certain limit on the card and things like that, right? So I think to answer your point as well, in the mid-market, when we went and saw the gap was also largely because the platform associated with the card was kind of still a little bit primitive, if I may use, where people needed solutions that can solve the real challenge. The card by itself was giving them the ability to use that credit for that 30, 45-day period, but that wasn't really solving 100% of their challenges, and hence the adoption was slow. The second thing that we saw was that people needed shorter billing cycles. Somebody said that, look, I only need to use this card for, say, a short-term capital requirement I have for 7 days. For example, GST payments, right? We briefly touched upon the market opportunity size. All of us know that the GST is at somewhere about $200+ billion annualized, right? Many people, have to sort of tap into their credit pool during the 18th or 20th of a month when they have to pay for GST, right? So can a corporate card perhaps give them, let's say, a 5+5 day cycle or a 3+3 day cycle where they can use that credit to pay off their GST, return back the money in 3 days time, and just get charged for those 6 days, right? Is that something that one can do? I think these solutions were really the requirement of the market, which is what at Encash we really saw, and we started to solve those challenges. Today, I think those are the key things that really resonates with our customers the most.
All right. Sandeep, the question, you pointed out about $6 to $7 trillion market that exists in the commercial card market. What has kept India from reaching there? You said that we are doing only a fraction of it at this point in time.
So already, the co-panelists have kind of touched upon it, but if I'm like kind of, in a way, summarizing.
Summarize it, yeah.
So one is what Vivek talked about is creating a very holistic solution and proposition. Number two, what Amarjit talked about is ecosystem play. So the difference between a traditional consumer card, be it credit, debit, or prepaid, there is, of course, segmentation in consumer cards, but in the corporate world, in the B2B world, every industry segment has very different working capital cycles, has very different players. The bargaining power between supplier, dealer, distributor, and the anchor varies from industry to industry. So you need to have ecosystem level customization. That was Amarjit's point. The holistic point that Vivek made in terms of the solutioning. It's not merely about saying, you are today making a payment in this form factor, I will replace it with another form factor. I'll replace RTGS with a card. Not good enough. You have to embed financing in a holistic manner. And the third point is what Naveen talked about, which is the platform play. So holistic solutioning combined with ecosystem approach, combined with a platform play, where you are not just addressing payment, but you're also providing accounting, reconciliation, MIS, moving a whole host of friction points, pain points. And then if you're able to then, on top of that, like sort of the icing on the cake, throw in certain specific rewards and benefits. They're not going to be as reward and benefit rich as consumer cards, but in throw in certain specific rewards and benefits, then you start to get a very compelling proposition. And that compelling proposition doesn't necessarily replace working capital finance. It doesn't replace RTGS payments. Yeah. It augments, it complements, and a portion of that, be it 5 trillion or 15 trillion, doesn't matter. A portion of that business volume or payment volume will then shift to card rails. So even if you are able to address 20% of 5 trillion or 10 trillion, it's a massively large number. And that's what's going to happen with commercial cards. So commercial cards, and right now our focus thus far has been a little more centered on domestic payments. These cards, and there are payment solutions also for cross-border, because small businesses and mid-sized businesses also have purchases and sales happening cross-border. Right. So essentially, it's about getting solutioning together with ecosystem approach with a platform play, which is where the fintechs come and play a very vital role alongside the banks and networks like us and the anchor client. You get all that together is when you get the whole thing functioning to its full potential. And that's when you get maybe 20-30% of that payment volume that we are talking about moving on to card rails, which is what we see in most of the developed markets in the world.
Let me come back to the bankers again. Amarjit, the question, and feel free to jump in whenever somebody else has a point to compliment. You don't have to wait for your turn for that. So Amarjit, the question I wanted to ask you is with respect to the business cycles that have existed in India and how commercial cards have performed. You said that pre-COVID it was largely limited to a specific use case, right? However, how has the performance been, say now, when you're expanding it, and now that things are coming back at normal?
No, very well. Clearly, as I'm mentioning, the self-employed is no different from salaried in terms of spends, right? I mean, your spends may be slightly different because you're buying, for the corporate side vis-a-vis, personal side of it. In fact, lines were quite similar, and the point that Sandeep was mentioning, the consumer commercial linkage was missing. Okay, people would spend on the consumer cards, and then sometimes during taxation times look for segregating their expenses and stuff like that. So for us, we are seeing a very, very healthy pickup. In fact, the volumes are probably 2 or 3x of the volume that we're seeing pre-COVID, holding very, very well. Very new avenues are getting opened up. While traditional thought about who will pay the interchange kind of a thing is also getting, in a way, moved into dynamic interchange, so to say. And most of the solutions that we're working with the fintechs are being provided basis, what really you're solving for, and therefore, how many bips come from where to be able to construct it in a manner that it's a win-win for all. All right. So Clearly, for us, cycles have been fairly good. There was slightly higher, I would say, restructuring during COVID times for this segment, but we didn't see any adverse.
All right. All right, thanks for that. Mr. Gupta, the question for you is collaboration. Now, what I want to understand is how Axis Bank, as well as the broader banking industry, how are you looking at collaborating with companies like maybe Encash who are in the same business and expanding this offering to newer things?
Look, I think it's not specific to commercial cards. I think that's a reality, right? That ultimately, if you have to solve for a customer or you've got to solve for an ecosystem, right? Today, the reality is customer needs have evolved, are evolving, and that's not going to change. So we have to have an humility to understand that we can't do it ourselves, right? And therefore, partnerships is the name of the game, right? We also have to understand that, look, what are our core competencies and what are not our core competencies, right? I think, to be honest, the way a bank, being a regulated institution, would look at things would be very different from a fintech who typically looks at what is one narrow but big enough problem that I can go after in a very concerted way, right? So how do we leverage that? So specific to commercial cards, look, I think we have our own thought leadership, which we are leading with, and interestingly so, what we have done is, I think we've looked at the business by making it part of transaction banking, which is not the case in most of the financial institutions within the country, right? And even globally, very few. So that we have a full integrated offering. What we're also doing is recognizing that, look, there are large anchors who have, for instance, gone around payments and working with fintechs in a specific way. So, look, if those are common clients of the bank, there's no point in competing. How do we actually work together, right? But the idea is therefore to leverage off, say, an Encash, right? But also provide the other, working capital capabilities to the same anchor client, right? The anchor wants to connect one pipe to a fintech or one pipe to a bank, right? So there's no point in basically saying, look, take 7 pipes and get connected with 7 banks. So simplification is the name of the game for the anchor, right? So we basically saying happy to come along, right? And basically feed off that one pipe, because there are many other things that we can solve for. So cut a long story short, need to coexist. It's an and story. We got to recognize what we can do and what we can't do, and to the extent that others are better than us, how do we collaborate to solve for the client and to solve for the ecosystem?
Right. Naveen, you agree with this, or you want to add something to it?
No, I absolutely agree. I think as a fintech, I think there are certain advantages that we have, whether it's from a product solutioning point of view, our ability to innovate, and come about with new technology, I think is much easier that way. While banks have their own advantage, they bring a large balance sheet, right? And unless you really combine these two things together, you really can't solve for it, right? One of us can't really solve for it alone, very clearly.
And if I may just jump in,
sure.
one other very major area for collaboration when it comes to corporate/commercial cards, especially when you get into the small business segment, is in risk underwriting. Now, a bank, any bank in the country, doesn't bank all customers or all SMEs. So even if you have a relationship with the anchor client, which could be a Hindustan Lever, which could be a Reliance, which could be Novartis, it could be anybody, you may not have relationships with all their supply chain participants. Now, the moment you come with a commercial card proposition and you want to embed financing, you will have to have the ability to underwrite, if not 100% of that ecosystem, but a large proportion of that ecosystem for the proposition to make sense and for it to gain the right level of traction and momentum. Now, how do you do that? So this is where, things like Oaken and networks like Visa with solutions that we have around, business transaction scores and data that we have and data that other participants have can also feed into that underwriting and decision-making process, right? So the collaboration quotient is driven up by a certain set of things that fintechs bring to the table, but also specific partners, networks, and can also bring in a lot of other insights, particularly when it comes to risk underwriting.
Okay. Coming to the underwriting part and the nature or the quality of this collaboration that we're discussing here, How far are you collaborating? Is it just, oh, we can't do this, so you do this for us, or is there something more to it in terms of the bank and fintech?
We've gone far beyond that. So clearly it's just not a forward or a backward integration, so to say, but the whole solutions are being designed and thought through together. Okay, and I'm going back to my example of the ecosystem. When you look at, pick up one such example and see, okay, there are these, 20 different things, and I completely agree with Vivek is saying, a customer desires a 360, okay, approach, and I may require different instruments at different times, but point is, are you kind of giving me a solution there? And how much of a process efficiency is coming in? How much of a convenience am I seeing? How much of my work is being taken over, and at the same time, I have the control of it, so today we work with, a large set of fintechs today, and I think the collaboration goes much beyond saying I do this, you do that. I think that's the name of the game really now. Because that's what the customer really, wants you to come and say, understand my business, give me a solution that works for me.
Yeah.
And many a times you have to do it very customer specific.
Okay. I want to ask each one of you this question. You mentioned RTGS and NEFT being utilized at this point in time. How do you overcome that cost component? Because those routes are free at this point in time. For a smaller company, it's free of charge to send money to their partners. How do you overcome that? I know there's a free credit period with commercial cards, but then how do you overcome this free transaction challenge?
So I let Vivek and Amarjit chime in, but the fact is that RTGS NEFT is free just in terms of the making the transfer. The concept of commercial card is to actually not just make the transfer, but there is a credit period and benefits and other sort of features. We talked about MIS, reconciliation, a whole bunch of things. So purely, that's a conversation that banks have with their anchors and anchor clients and the ecosystem participants. Also, don't forget that the rate of interest at which a corporate borrows is very different from maybe their long-tail suppliers. So there is an arbitrage between the interest rate that a large corporate pays and its long-tail suppliers pays. So there are various things, but Vivek and Amarjit would be grappling with this, I think, more closely.
Yeah, look, I think we've got to look at costs that are end-to-end costs, right? So it's important for us to recognize, to Sandeep's point, if I'm a small end of town supplier, right, what am I interested in? I'm interested in, look, is my key buyer going to pay me on time, right? To get paid on 10 days for my account receivable is a big, big thing, right? To have that certainty. So commercial cards gives you that certainty. Second, the small end of town customer says, look, I'm really interested in focusing on growth. I don't have the mechanism, the wherewithal to deal with reconciliation, invoices, et cetera, right? Give me a solution that solves for growth, solves for simplification, and allows me to get on with my business. That's what card does. So the third thing is from the anchor's point of view, right? Look, I think it's perfectly fine if you're looking to solve for a treasurer that there could be an aspect of, look, can I make some extra, few pennies, a few rupees on the side based on a quid pro quo that I have around making payments, right? So for them, it's like increasing the efficiency of the treasury, call it rebates, right? So hence, I think we got to look at these things in totality, right? The most important thing I would like to say is, does it create a win-win for the supply chain, right? And I think that's the view I think we should take from a commercial card perspective.
Do you want to add something to this?
No, I think what my fellow panelists said is absolutely correct, right? I mean, it's, in my view, NEFT RTGS is primarily just solving for, as Sandeep said, the transfer of the money, right? There's a lot more beyond that which the customer is expecting, right? He needs to sort of solve for credit on tap, and a commercial card product really solves that problem. I need to make a vendor payment, let's say today evening, 6 o'clock. I really don't have time to go get some, documents sorted to get a credit facility availed, right? Credit card or a corporate card just gives me that facility. I get onto a platform, make the payment, the supplier gets the money, and I have the ability to pay this money back in literally like 3 days' time and pay only for the days I use the money for, right? I think those conveniences together with the ability to get credit on tap makes the right solution and the value proposition for the end customer, and hence he's happy to pay for the cost of it.
But is this a point of friction for you at all when you're actually on the field?
No. I think a lot of our customers come in and say that this is much beyond just solving their credit needs. I think there is a lot of convenience aspect into it, which is where they come to us. A lot of our customers come back and say that, look, in the past I have not been able to decentralize a lot of my payments that I make. It always used to come back to my central office. My CFO was always bogged down in handling a lot of payments across different departments, and there was challenges around reconciliation. But if you give me an ability, which is what Encash does as one of its core value proposition, is to decentralize these payments, allow these companies to create cards for every specific department or a specific use case, tie them back to the invoices or the expenses that are being made, automatically reconcile them and show it to the central office, right? That makes the life much easier, and hence the value proposition clearly is very strong there.
All right. We have about 5 odd minutes left, so we'll take a few questions from the audience if anybody's interested to any of the panelists, whoever you want to choose. Give it about a minute.
Before the question comes in, just to add to one more point that, today we get a lot of anchor corporates who come in and say, look, we've been dealing with these suppliers for a very long time. Maybe we're not guaranteeing a payment, etc., but we can tell you here's an A+ supplier or A supplier and B supplier and so on and so forth. Gives a lot of comfort in terms of underwriting. So clearly that started expanding in a very big way.
Any questions out there? Seems like nobody's cleared all the doubts out there. Okay. That gentleman right there. Somebody please pass the mic. Introduce yourself, sir, please.
Hi, this is Akshay Birla here from Bharat Next. What my question I had was, what you guys are doing from a corporate cards and spend management perspective, usage of cards is great, right? We haven't addressed the elephant in the room in terms of, how do we go about issuing these cards as well, right? While corporate cards is great, you have relationship with corporates, right? How do we sort of address the mid-market and the SMB market, right? Which is the MSMEs, the SMEs, right? Because that's where the bulk of the B2B payments is going to come from, right? A lot of them are using personal credit cards to do these B2B transactions. How can we sort of address that market? I know you guys are doing work in terms of digitally issuing these cards, but not enough just yet. Would love to hear your thoughts.
Yeah. So, clearly COVID has in a way provided for this as well, that we had to do a lot of things digitally, starting from, administering the entire form, doing the video KYC and stuff like that. So for us now, as we speak, it's the entire nation and one can apply a card from any place. That's one part of it. Second is in terms of underwriting part of it, earlier it used to be very difficult to, and now the data availability from various sources, and Sandeep mentioned about the modeling that we do in terms of, underwriting just vis-a-vis a balance sheet or the other alternate data sources which are available have gone up significantly, right? So I don't think it's an issue anymore for the right client. The reach used to be an issue because you're not as digital earlier, and it would take few days to gather all the documents and go to the nearest hub and process. All that is a passe now. We're able to, in fact, do many of these things completely end-to-end digitally.
Probably the piece that one is still solving for, and lots more can be done, is last mile acceptance of a corporate/commercial card. So for an SME to receive money is one thing, or that long tail supplier, but if they have money, how do they spend it? So there's again a role that we have to all play as participants in this kind of journey, in also increasing acceptance of corporate and commercial cards. But I think Amarji said it. I think Vivek, you might want to add to that in terms of just SME issuance.
Yeah, look, I think it's well covered. Suffice to say, there are two ways. The other lens I would bring is, do you go after SMEs as a client segment? And yes, the answer is we do, because we have the intelligence to look at the underlying data as a bank, and we can see where the needs are. So we proactively go and basically do the digital underwriting and provide the commercial card proposition. But that's connecting to SMEs one by one. One of the key things I'm very fond of saying is, how do I connect to one to connect to many, right? So I think the point is, I can therefore go down the supply chain route, right? Connect to an anchor, look at the long tail of suppliers that have been unbanked, underbanked, right? Because that to me is a much easier way for us to really solve for the entire supply chain, connect to one to connect to money.
I'll just probably add a little bit there, right? I think the question is spot on, right? A lot of time when we go out and tell SMEs that, look, there is a commercial card or a corporate card or a company card, or maybe sometimes just a business card for that matter, which is available to you to sort of take care of your company expenses, many of them sort of turn around and say, oh, is there something like that? We were not even aware of that, right? So I think there's a lot of education that needs to happen. People are not aware that there is a product like that. They've been sort of putting the expenses on their personal card all this while and then reimbursing it from their finance, right? So I think that's one. The second, which is the whole network effect, right? I think today as Encash, we partner with a lot of these B2B marketplaces. The top 5 B2B marketplaces are already tied up, integrated with Encash, where we go have an ability to look at where these SMEs are, right? Because it's very hard to go and tap into SMEs one by one, like Vivek said, right? So one way of doing it is to sort of obviously go through the supply chain mechanism. The other thing is to go via these marketplaces where these SMEs are actually doing business, right? And a lot of these SMEs are moving from an offline world to online world now, trying to sell more and more things online. And there's a lot of alternative data that is getting created, which tells us and the banks that is this SME really eligible beyond just looking at their bureau score. So I think that's something which is also working quite well for us.
Okay. Anybody else? Okay, I think we can close the session then. Thank you so much, gentlemen, for joining us on this conversation, and thank you so much.
Thank you so much for having us.
So much effort to try and explain everything to us, and thank you so much for sitting patiently and watching.
Thank you.
Thank you.
Thank you so much for doing this with us. We will now have a 10-minute break and we'll be back for the last session. A 10-minute break and then the last session. Thank you so much.
La noche no se muere. La noche no se mueve. La noche no se mueve.
So I think this is put together, we have around 70 years of experience in this room. So try and, we will try and discuss more and more points, and we will ensure that while we will go, we will take couple of more inputs or couple of, tangible points to work upon. So starting with this. If you guys allow, I can sit. Okay. Great. So the whole point is what we are talking. The context here is, while as governor plus a lot of people talk about that few things are for everyone, every time, and it should be available 365, 24/7, right? But still, after even 20-25 years of the hard work, we could see that a segment is still not being cracked properly. And when we say cracked, we've been reaching there, but in bits and pieces. So what are the ways and means by which we will ensure that these guys should be the part of real financial inclusion? And that's what we are talking about. And what is that one or two thing? And I think the panel will also talk about this voice tech. So just to give little more clarification, voice along with the technology, how do we utilize this? So, and how do we unlock the value of this entire thing? So while we doing the lot of study for launching the 1, 2, 3 pay, couple of things which came to our mind, that what are the hurdles which we are trying to solve? So, and what are the hurdles or the barriers in this entire process? So as we all know that in India still more than 7 lakh villages where the network is not good. So when the network is not good, definitely data is not there, right? So, or maybe in some places, phone is possible, but data downloading and all that thing is not that streamlined, right? So I think that's the problem number one, that is infrastructure related problem. Yeah. Second is gonna be that how do we ensure that both the merchant / beneficiary and remitter both should have the intuitive journey, means a frictionless journey, so that these people can come on board with all their trust and they will be advocate of these financial transactions or the digital payments. Third main issue which we have understood is the consumer awareness. I think the set of customer which we have already taken in our foray are the people who are 70-75% educated, but 21st, still. What kind of awareness will work in the kind of customers which we are talking about? The Bharat customer might not understand English. Bharat customer might not understand Hindi, but they speak something. How do we utilize that? So that's going to be third big problem statement which we are going to discuss. And the last thing, the list is long, but the last thing, are we only pushing the app-based solutions, or there are some more ways by which we can create more and more solutions which is non-app-based solutions? So moving on to this, I think my first question to Mr. Ganesh, who is having a rich experience of FMCG plus telecom and now in Airtel Payment Bank. So he is the CEO there. My first question to you, Ganesh, what do you think? How are we handling these situations like infrastructure-based, issues? And what is your thoughts and what is Airtel Payment Bank is doing there?
Yeah, sure. Thanks, Saurabh. So first of all, I personally don't think that infrastructure is a challenge. Of course, there will be 1 or 2 or 3% of population, maybe 15-20,000 villages out of 700,000 villages in the country where internet penetration may not be available. Yeah, but for 97% or 98% of the population, internet is available in good speed in which they can do transactions. I'll give you another statistic. I think India has approximately 800 million smartphones in the country, of which maybe only 500-550 million of them would be using any form of mobile internet. Could be a WhatsApp or a Facebook. And of that, only half of them would be doing a financial transaction. So despite them being active on mobile internet, there is still 200 to 300 million consumers who are not doing a financial transaction. So I don't think infrastructure is the key challenge. My own view is, I think the onus is on us as professionals, as organizations, as strong brands in the BFSI sector, who hasn't done enough to build trust with consumers. Two, you made the point. I don't think we have looked outside of an app-based solution to enable consumers to do digital transactions, and hence I don't think we've been innovative enough in the past in ensuring that we are able to get consumers, whether the consumer is on a feature phone or a smartphone, to enable a transaction in a very seamless manner. So to me, I would think that those are the key challenges. I think one of the things which we are trying to do, with the ecosystem, of course, under the guidance of NPCI, is to have launched a solution for feature phone customers, where with the camera you could actually just scan and sort of make the payment. We are also trying to sort of work where we have an IVR-based solution where, I think the most often quoted example, which I personally am also very excited about, is when a customer calls up, to book a gas cylinder. How do you make sure that just by entering the MPIN you complete the transaction? To me, those are the kinds of solutions I think in retrospect, if we had done it maybe 3 years back, I think we would have sort of gotten the next 500 million consumers on the digital platform. But that said, we are where we are, and I'm quite excited about some of these innovations, not just going live, but also sort of giving all of us, a scale in the few quarters to come. So that's what I was saying.
So I think that's interesting, Ganesh, while you are saying that the infrastructure, because in our mind and the way we perceive that infrastructure is one area which is very still, exist in India, and a lot of villages and the people who are not having that proper internet connectivity. But because you are having the more statistics and you are saying that no, this is the problem might be there, but not up to that extent. So the problem is one, that people are using smartphone, but they are not used to of doing the digital transactions. Great. So I think, and you also made a one pertinent point that we might not have thought the full end-to-end intuitive solutions. So that brings me, to put the questions to the two gentlemen out here, who are the true orchestrator of creating the consumer journeys for these true Bharat customers. So Vishal, my customer to you. So Vishal is the founder of Obona. Obona is working in this, creating the voice-based solutions since last 20 years. And this question to you, and pertaining specific to the consumer side story, Vishal. What do you think that how do we create a story, or how do we create such product which are not only intuitive, but also frictionless, and also adding a lot of trust in the consumer's mind, so that they will not, it is just not one of the transactions, or somebody is adopting a village and all that thing, after some days it is vanished. So over to you, Vishal. What are your thoughts?
Absolutely, Saurabh. So I'll take a step back and give a small perspective to that. And Ganesh mentioned it so aptly, saying that if we would have done this 3 years back, we would have had almost 500 million people. So I'll just give you an example. When we first had an idea of payments, UPI payments without internet, on feature phone, on voice, it was almost 3.5 years back when we first approached NPCI and RBI. And if it was not for COVID, I'm sure that this solution would have been in the market at least 1.5 years ago, if not more. Coming back to the perspective, see, sort of what happens is, if we look at it, UPI has done a fantastic job, right, for around 200 million odd people. That's a certain demographics of people who are using UPI day in and day out, multiple transactions. Now, if you look at India on the whole, right, if I slice it down further, there are people using feature phones. There are people who are still having smartphones but not having internet connectivity. There are a lot of people who are not very conversant with apps. But one thing is common in India, and that is that everybody is very conversant in talking. They are using their phones to speak to somebody in their local language. So one, if you can provide a solution which works on any phone, work from anywhere without internet, in their local language, I believe that it has a massive potential to really reach 1 billion users. And that's what 123Pay will reach. Now, it's a matter of time. If you look at the use cases Ganesh rightly mentioned, Bharat Gas or gas booking was one of the first use cases that we picked up. You get 13 lakh calls a day for booking, all cash, in today's market economy. Even if you are able to convert 20% of that in next 3 to 4 months, you can look at the numbers that we are talking about. Same is for mobile recharge. The loan EMI payments, when we talk to MFIs and NBFCs, they're struggling with managing cash, and they're saying if there is a solution on feature phone which can work from anywhere, it's a game changer. So that's the whole idea. So one is, of course, the customer, where you have to give them the confidence and that this is a safe and secure solution. Second thing is also the businesses are looking for solutions where they can really reduce cash. So that's where we are moving towards.
So thanks, Vishal. So I think one interesting point that you are saying that everybody is looking out these customers, but there is a need to stitch the story in their one common factor that everybody speaks something. So language, how do we use what they have as a local? So local language may be the one common point. Is it?
That's a big one. Allowing a customer to interact with the system to make a payment in their native language is a big one, without a doubt.
And I think that's what the assisted model does, right? And I still remember when I was in city and we used to do sometime, in the month closing, we used to do collections for the EMIs. And the one thing which we have observed, and city was very high on compliance, that a lot of complaints we received that the people have collected the money from the poor guys as an EMI, but it has never been deposited because these guys never have the ability to go back and complain. And these customers can continue to go to 30 plus, 60 plus, 90 plus bucket and eventually they write off. So I think this will also enable a lot of great efficiency in system. Great. So I think great consumer insight. So moving on to you, Kumar, what do you think? So a payment can only be possible when we will create 2-3 things. One is consumer, second is the tech, and third is the receiver. Receiver could be merchant, or receiver could be consumer to consumer, Saurabh to Kumar. But Saurabh to Kumar is a limited use case. I hardly give 4 or 5, kind of a transaction in a month. But I do at least 50 to 60 transactions on a merchant side. So looking at that merchant story, what is your views? How do we stitch that story in that, streamlined way so that these adoption of such products should go up?
Yeah, I think the way we should look at it is that none of the merchant, right? I mean, so far, whatever innovation has happened in financial services is the poor guy who has been put into the process, is the merchant, right? So I open a very good cafe, right? I invest in good seats. I pick up the best beans, right? And the last thing I want is that when I start doing good, people will come and stand in queue, right? So I've created those seats so that people can come, enjoy their coffee, sit there. But what happens is when I'm doing good business, there's a long queue which starts getting created. The question is, why was that queue in the first place, right? Because, hey, here's a process to buy coffee. You have to go to a billing counter, you have to place an order, you have to tap or scan or whatever, right? And then only you'll get a coffee, correct? But ideally, it would have been that I just walk into the cashier, I speak something, he speaks to me, and I just take my coffee and done, right? So I think merchant never wanted any of these things. What they really love is that I could interact with the customer, right, whom I am serving. And that's precisely where we are going. Even if you see the evolution of tech, right? So when we started first interacting with machines, we used to type. Then a gentleman came and said, you know what? It has to be more natural. And that's where Apple got launched and your touch screen came, which is more natural. Now, if you think about what would be the next experience, of course, it has to be more natural. And that's where your voice comes. So we think that, hey, merchant would really not only like, something wherein through voice things are happening, but I think this is also going to help them bridge this divide of trying to learn a system which at first place was never there for solving any of his things, right? So one good example I'll tell you, during pandemic, right, merchant adopted WhatsApp, right, to take orders. One can say that, you know what, that was a forced adoption. But you will be shocked to know that a lot of businesses, right, they used to leave voice messages to their suppliers to get the products. So they were already within their community using voice messages, right, to get products. And when pandemic came, they just extended that service to customers, right, and it was so convenient. China, a lot of Southeast Asian countries, right, you will see that WhatsApp, the common download language is English, even in India. But in India, after 200 million, right, people neither can type English nor understand English, right? So what are they doing with an app which is in English? So they are only consuming content and leaving messages. And most of these are businesses. So we think that, you know, with this intervention, we are going to see a far more simpler adoption within the merchant community, and some of those traits we are already seeing.
Great. So Kumar, I have just picked couple of points, and I think which I'm going back to my 2-3 years back, while my grandmother, she wanted to be on our family WhatsApp group, but due to age she can't type. But she loved to be there and see all the action what was happening there. So ultimately every day she used to give a voice message over the group. And we loved it so much till now that practice is there. So I think what you are saying is, one, how do we use the thing which people are using? Second, how people already have a lot of comfort in terms of non-financial transactions which are happening. So I'm saying somebody is giving order or somebody is giving any messages out, right? And if we can stitch this journey, right? So I think there where this sweet spot gonna be. So this brings, once we have sorted out this merchant side story and then your consumer side story, and then we create something good. Coming back to you, Sanjeev, and Sanjeev is one who is driving this Bharat customers since last 20 years. So again, he's CEO of the Spice Money, and I think, I don't know, more than 50 million customers he has just moved, and helping people to at least start from the assisted model, and now they are going to more digital. So this gonna be the biggest issue for us, Sanjeev. How do we get the consumer awareness that this is trustworthy, and this is safe, and this is very simple?
Thanks, Saurabh. So I think I want to sound a bit of, I don't want to sound critical here, but while we've spoken about opportunities, we've spoken about successful use cases that we can do, and I think we will. But a lot of adoption in rural India is also a function of behavior of people. And it has a very strong role to play in adoption. And if I were to summarize top 3, 4, which is very common. First is, it's a community-led environment, which means हम एक दूसरे को जानते हैं. So there's a lot of trust. And when you see people doing something is when you get influenced to do it. Second, multilingual. Language is very important, right? You change borders, you change states, and the whole dialect change. And there's also a change in the dialect in the same language. Third, when you talk of payments, it's very important, but it's about money. And like it or not, there's a bit of huge inertia of anybody adopting to any technology when there's a financial. Any technology, non-financial, is a very different use cases, reasons, but adoption on financial reasons is very different. And last but not the least is literacy, right? And hence, a lot of success that even we've seen today in, let's say, democratizing a lot of banking payments, financial services, because there was assistance that was given. People are not going to move to it on the first go. How can I handhold them?
And I'm saying that there has to be a combination of both. There's going to be technology and community-led influence over there locally, which has to play a role in making this movement. It cannot be single-handedly technology that will do this.
So I think that brings me to a new point, and thanks Sanjeev. So one is that how do we, the dialect changes every, the moment you go to district. And again, I want to come back to my grandmother's, example. We in Madhya Pradesh having a very khadi language. So if somebody wants to write it in English or somebody wants to write it in Hindi, that's not possible. But, but we can understand it, right? So, so one important point on that awareness side, Sanjeev, how do you ensure, how do we collectively give the message of this fraud on the risk which is associated with these financial transactions? I think one of the biggest reasons, I think these poor people are the first victim of the Jamtaras of the world, right? So I just wanted to take some views from all of you that while we are moving towards the journey and we are inching towards to handle the next Bharat kind of customers, what all we all should be take care in terms of 1, 2, 3, that which will help our consumers to safeguard their hard-earned money. And trust me, it is so important that Saurabh can pay bill online, right? But a poor person needs to go to 10 kilometers, while if against that if he'll work, he will get 200 rupees more. So when they need more money, they spend their time in going and doing those financial transactions there. And so just, that's the importance of the money for them. So this question to all the panel members, how do we ensure that we get this security angle in each of the things what we are doing? So be it product development, be it anything, be it awareness. And that's, let's start from the Rupunjay.
Yeah. So you rightly mentioned, Saurabh, there are two parts to the payment ecosystem. One is the sender and another the receiver. Sender knows that he's sending a money, but the receiver has to get a confirmation that what is the amount he's receiving and whether that amount has actually come in his bank account or not. And we have seen cases where a poor merchant, people used to show some GIF and show that I have sent the money. So the voice has actually helped us in Paytm as an ecosystem to enable merchants who are new to the digital ecosystem. That now merchants have a trust that one of the Paytm innovative product Soundbox, when it says that this is the amount which he has received, the merchant immediately confirms that, okay, I have got the money. And he hand over the goods or services. So, and the second point which I think adoption is, the regionalization or the localization of the language is very important. In Paytm, we have seen that most of the merchants actually do not know app because they may have a muscle memory to check a transaction or XYZ, but they don't frequently use all use cases of app. So can we build a local, regional, voice-based system where he speaks to an Alexa kind of a system and checks what is my last 15 days transactions? And those systems exist in, as someone, I think Abhishek was mentioning, in China, there is, if the merchant wants to know that which payments have failed, it is just over a call. So those kind of systems are gradually developing. In Paytm, we have seen that adoption in tier 3, tier 4 city can only come, especially on a merchant side, when the usability is easy and easy to understand, because the trust is the most important factor in payments.
Thanks, Rupunjay. So this, so with this, I think, let's move to the use cases. So as I know, and as we all agree that language is one common thing which can take this journey a little more faster. So in 1, 2, 3 Pay, I think, we have developed 4, 5 kind of approaches. One being voice on UPI. You just call and you will get the transaction happen during your on the fly. Second, now we are also trying to get something which is called these feature phone also getting these chips or the solution software inside which can scan. So feature phone can also scan the the normal QRs which we are doing. Third one is the missed call base. So a lot of people, and in fact that part of the world, they might be very wary of these transactions. So every transactions call and all that thing. So missed call is also been enabled now. Right? And so against all these 3, 4 things, this is all phone-based, voice-based, right? Again, we are talking about the, so we are dividing our solutions into one app-based solutions, second is the non-app-based solutions. Now, if we want to scale this up, and the use case could be immense, right? From each and every call, IVR converted into a payment hub, from each and every cash on delivery, how do we get? So I think this panel is one driving bank, second driving the biggest offline, business in the India, and both of you guys driving the biggest of, the intuitive solutions in the market, and Sanjeev, you are witnessing the highest growth in this financial inclusion side. So starting with you, Sanjeev, what do you think? How do we scale this up and how do we measure this?
So Saurabh, firstly, I think I come back to the point, there are two, three, I'll just share with you a success story recently, and it links with voice. So in the biggest use case of cash withdrawal in our outlets, same thing of how do I get a consumer to come to a Spice Money merchant and to withdraw money and get that comfort. One of the things we introduced was voice alert for every transaction. Okay, and the fact that your transaction was successful, similar to what Paytm has launched in the Sandbox, it confirms to you that the payment has gone through. Now that in 10 days has got an 80% adoption, which again comes back to tell you that voice as a feature confirms, is a very positive way of confirming to the consumers, and it's very receptive, right? The question is, come back to the point of the use cases that we do. I think the only point is how do you stitch the journey and how do you move a consumer to make that happen? That in my mind, we've got use cases. I think it's going to be a journey. I think we need to, so we've got the technology today. We've got the use cases today. We got to now build solutions to build journeys on how do I get the consumer to do this, and also probably close loop on all issues that will come and how do you handle that. I think it's going to be a combination. It's going to be a journey, but I think that's the way we need to work. Saurabh, it's not going to happen overnight.
Absolutely. So I think, so what Sanjeev is saying, that let's create one or two great use cases and create that journey end to end. So I think fully aligned with you. Ganesh, moving to you, the same two questions. One is how do we ensure the risk part of it? And second, how do we scale and measure it?
Well, I'll answer the second question first, because let's first get the consumers and then obviously talk about risk in parallel. I'm not saying we'll talk about risk later. Yeah. So, our own experience, and I'm just reflecting on how Airtel Payments Bank, and I'm sure that's true for a lot of other digital banks, how it got built. In the past, if you told a customer that he or she has to open a bank account, he or she would think there's a bank branch, I open a bank account, I get a checkbook, I get a passbook, I get multiple documents and stuff like that. And that's a pin picture, and they then have a physical branch whom they can visit and stuff like that. I think all payments banks have actually changed that.
And one more thing, that is the response from that branch officials. While all that thing that customer can create a lot of things, cover all that thing. What is the time period that account will open? Is there any discrepancy? So I was a branch manager and I'm having a live experience that around 30% account opening form used to reject because these Bharat customers differs their sign. And India being, our ops being ops, they don't take anything. So yeah, you're right.
So we have now sort of moved over the last several quarters to opening more than 30,000-40,000 accounts every day. And the reason why there is that significant demand is because now people understand that this is how a bank account can be opened within a few minutes. They get SMSs and notifications where they get all of these transactions and so on and so forth. Now, this change has happened over a period of time. To me, there were three key things which have really helped that. One, technology and experience. Now, obviously, for a customer on a feature phone or for a customer who has a smartphone and chooses not to use that smartphone to do a digital transaction, what is the experience you're giving that customer, and how can you enable him or her or them to do a transaction, maybe a small ticket recharge or a LPG gas booking in a seamless manner. I think that's the first key thing. Second aspect is around trust, which is to say that in case a transaction has failed or in case there's something wrong which has happened, how does it work so that the customer at the push of a button can reach out to the bank directly and the bank can within few minutes, change that. Because for some of us, we are, I think, fortunate to say that if we lose $300, it's okay. But for the low-income consumer, unfortunately, in India, that's not true. As in, they lose, as you mentioned, maybe a day's work, because of that. So how do you make sure that we treat each of those cases with a lot of empathy, and we respond back within few minutes rather than sort of hours or days. I think that's the second aspect. The third is a route to getting there, which is, getting, as Sanjeev mentioned, in every village, there is likely to be a key opinion leader or a sarpanch, or there is likely to be a BC agent or a kirana outlet with whom consumers or consumers have a lot of, trust and faith in them. So using them, as opinion leaders to actually drive this habit change, I think is the way. So to me, this is the way in which over a period of time, the category would get created. 1 billion Indians today who are not doing a digital transaction, I think there's a massive opportunity there. Coming to the point around risk and frauds, I personally think that maybe the Jamtara target audience is all of us here, because those consumers unfortunately don't have enough balances. But that was on a lighter note. On a serious note, again, at every touch point, giving the customer the reassurance that he or she or they are on the right path and doing the right thing, and guiding them in that journey, I think is going to be important. And secondly, they will make mistakes. And if, for example, if I had to send money to person A and it went to person B, how do banks or financial institutions take that call saying, listen, to me, this cost is a cost of habit building, and I'm okay with that cost, and hence I give that customer the trust saying, listen, you sent it to the wrong person, no problem, I'm giving that money back to you, next time this is the way to do it. I think that these kind of actions just build that much more trust, and to me that I think, Saurabh, is the way in which we would sort of need to go forward.
So I think one important point which I would like to bring upon to our notice, that in UPI, what we did, and UPI is UPI because of 2-3 things. One, we ensured that it is 24/7. Second, we ensured that every bank or every member and every participant of the, they have to give notification and real-time messages. So that in terms of fraud, at least that person go back and intimate someone. So there where at least, we have some window to resolve that. And coming back to this, regulator is very, very keen. The way we are solving the digital transactions, how can we solve the online real-time dispute resolutions? Means Saurabh has sent money wrongly to Ganesh. Can I solve it online without human intervention? I think this is one area and which we could able to crack with the help of regulator, and which we are calling it as a UPI help. And you will see, or you must be seeing on your apps, that every app is now will be showing you 3 ticks: initiated, completed, received. And if anywhere the money is not there, and you will not see that green buttons, point 1. Point 2, you will also, we are also giving that every call center are being full on alert mode, because right now we sometimes observe that the social engineering frauds are more. So there is no technology fraud, but the social engineering frauds are increasing. So how do we get this? And I think if we start giving that trust back to these Bharat customers that your money is safe, and if you have anything which is related to dispute, it is real-time resolution. And if we can club or stitch in our products, that is where we will go. So I would like to take your views on, Vishal and Kumar. How do we stitch this real-time online dispute journey, which is already available in the UPI, with this voice tag or with this, 123 pay? And how you think it will, what scale it will be helpful to take our numbers up?
Right. So, so on the fraud per se, right? You are right that faster resolution and things are critical. But I think some of these audience which we are really talking about, right? They are worried to do that first transaction itself, right? So what my view here would be largely to that when I am doing the transaction, right? Do you have methods, right, which is not in front of me, right, but is hidden and ensuring that a genuine, legitimate transaction is happening? So, for example, the whole idea of blockchain, right, stands there, but, so another example, right, so when you are asking OTP to be entered, right? You have already given a cue for social engineering and a lot of other methods to be cracked. Say, imagine there was no OTP ever coming as a message, but the platforms, right, so any financial app or financial services through the regulator has worked with the platform to say something will come, you pick up automatically and just verify it, right? So a guy will never skim a SIM because he never knew that there is this factor, coming in, right? And I think that's precisely what at Tone Tag we are trying to solve for. So what you're saying is that there will be this hidden third authentication method, right? So while you are doing that transaction, right, this hidden third is the genuine guy, right? So that if a fraudster is trying to kind of emulate that experience, right, card get tapped on that machine, all systems will talk. No, when customer reports a fraud, then the issuer bank contacts the acquirer that this terminal was malfunctioned. By the time that machine has already done so many frauds.
It's all reactive.
So I think in fact with voice, this is what you will be able to crack. We are working on things wherein the first time when you register yourself, that hidden thing is already embedded in your voice, correct? And whenever you are doing the transaction is when actually the transaction is happening. Yes, people can call you, influence you, and do things, but then I think those will be the later things which could be addressed.
Great. So voice authentication or bio-authentication, I think that's where we are heading towards. And this will make or take us to the next level. And this is the right way to start. And this will also start giving us the potential to start giving the right scores to the consumers basis on AI/ML. Right? So if we'll start using those kind of stuff, so I think it's amazing. What do you think, Vishal?
I believe that the voice payment right now is in a stage where, see, the solution which has been created today is reasonably very, very, very secure. There will be security layers added to it. As you mentioned, voice biometrics is definitely one aspect which will come in at some point of time, right? But today, because the paradigm is UPI and hence MPIN is the common form of authentication. Now there will be security layers coming on top of it to make it even more secure. The bigger challenge I see is that how does the ecosystem come together to scale this up? Because that's where the real challenge is. Like any new system, like any new technology, like any new product, the voice-based payment requires the cumulative effort of industry. Like Sanjeev is sitting here with so many of his people out there in villages ready to help the end consumers move to digital. Airtel Payments Bank, you know the reach of it. I'll give you a very simple example. The moment we went live with 123 Pay, right? So there are different target audiences. One of the target audience was the rural India. And we immediately realized that to create an MPIN, you need a debit card. And there are so many accounts in India where the debit card itself is not there. It falls flat, right? Because there are millions of bank accounts where there is no debit card, hence you can't create an MPIN, and hence you can't use UPI, whether it is on voice or on the app. And that's where I would have to really give it to NPCI the way they move fast, where the Aadhaar is being used now to create an MPIN. So I think it's a journey. We need support from government in educating. We need support from fintechs, the startups to really keep innovating, taking it to the market. We need all the support of Paytm, Airtel, Spice Money, who are all there in the market to take things there. We've seen the ecosystem standing together. Like we're talking to almost all insurance companies, almost all NBFCs, MFIs. I'm yet to see somebody who doesn't believe in the power of voice-based payments. They're ready to rally around us if we are able to provide a holistic solution. I think that's where we are moving towards.
And I can't agree more. I think Aadhaar, which will another way to add another 400 million users in the UPI foray, and that's the one big bet for all of us to get this going. So, can't agree more, Vishal, and thank you for adding this important point. So moving to the last questions. So Ripu, what do you think? How, how do we curtail this risk and scale this up? Because both things are, important. If we'll not curtail this risk, growth will not happen. And ultimately, again, we will be, square back. So,
one of the things which we have to look, what is risk? One is somebody initiating a transaction from a bank account, which I don't want to do, is risk. The second is, I have done a transaction, but mistakenly I'm not able to reconcile. So in both, the adoption will suffer because the user will churn because he feels that this technology is not for him. And the first, there are a lot of educations which we have to do in terms of like, RBI run a lot of campaigns of not sharing their security passwords with the one. That is more important. Second, and you rightly said, that the voice has to be more used. Like today, there's a screen which comes up. If we can enable that while entering a screen, if their apps can make an announcement that, okay, please put the password here. So for the payment. So, those are simple steps. Because today, every app, whether it's Paytm or whether any other app, has enablement that they can announce things. Like when we receive a payment, our Paytm for Business makes an announcement. So similarly, while making a payment, if we can have an announcement feature enabled, and users should have a choice that, okay, I can disable or enable the announcement, I think that will curtail the risk to a greater extent. Because most of the time, in our experience, we have seen when the transaction is done by somebody who is on a call, the person actually does not know that he is actually doing a transaction. He puts the PIN or something else, and the transaction happens. But if there is an alert which comes with a voice, and that, okay, this is the transaction moment, please be very aware. So those kind of small steps can actually help users to curtail that risk to a greater extent.
So I think great idea for the app-based solutions. So you said, make more customer journey, more voice-centric. So that's great. So guys, I just wanted to have any questions from the audience to our panels. Anyone? Is the session is too boring or these guys are
It's too late in the evening.
Okay, no problem. So with this, I think we are coming to an end. Yes, ma'am.
Thank you. My name is Rohini. I write for Straits Times. It's a Singapore paper. I wanted to know if, like many of the other elements of other apps, UPI, Aadhaar, where the biometrics are similar for one person, like that, do you see different apps and different companies using voice as a single element, or different companies will have different approaches to it? Will you process the voice as a single thing, or will you be processing it in different ways?
So I would like to take this question. Voice is one of the approaches, but in China, the face is another approach. So in China, we have seen that most of the organized shops take transactions by the scan of the face. And with the Aadhaar system, we have everybody's photograph and everything. And if that database comes to the fintech players in a secured way, the transactions can happen through face also.
I'll just add, I think Saurabh mentioned there are at least 4 or 5 ways in which UPI 123 is getting manifested for the consumer. And I think all of those are various versions of voice. For example, making a payment through IVR where I just enter my MPIN, where effectively I don't speak, but I use the interaction to process the transaction is one of the routes. So I think there'll be multiple, such interventions which will go through. Face could be another route which a different country has taken. Maybe at some point in time it may be relevant in India as well. So.
Can this be a centralized kind of a recognition like we have in AEPS or similar payments methods?
Sir, would you want to answer that question?
A tough question to answer. So yes, this has to be standard. I will not say standardized because this biometric, face auth, and all that things are very heavy, right? So in terms of databases. It needs to be standard, and we will be sharing very soon that the teams are working, that how do we create those kind of standards slash protocol, that instead of, your app or PIN, is that your biometric is sufficient, your face is sufficient, your thumb is sufficient, the way you open your iPhone or the way you open your, phones with the help of your, your biometric details, can we also do the transaction? That work is on, you will hear it soon.
I'll just add on that. I think it's also related to the question which you asked. I think what Saurav is saying is still in the making, but the way you should look at it is, on your phone, right? When you do the scan of your finger, that data is not shared with anyone. It's for you to authenticate your phone, right? And that could be my first factor any which ways. So it could also be very much possible that your voice is used as an identity, but never leaves your phone, right? It's one of the identity form which you have chosen over a PIN for convenience, right? So that could also be one angle to it, but yeah, this is definitely under makings.
So payment is more than anything else. Payment is the most crucial part of the human being, and that's why we need to be double, triple sure that it works everywhere, and no platform, no one can have the data elements out of it and all that thing. So that's why I said it will take some time, but we are reaching there.
Sort of what happens is eventually the issuer has to authenticate because there's somebody taking the risk there. Yeah. So it has to go through the entire system.
Absolutely.
That's how the architecture will evolve.
Thanks.
So we can take one last question. So cool. So with this, I think, let me just wrap this up. So whole idea has given us 2-3 things. One, how do we make it simple? So simplicity in terms of onboarding. Onboarding, we are just making simple by adding one more layer called Aadhaar. So if you don't have debit card, you can come via Aadhaar also. So that brings up your simplicity in onboarding. While you are doing transactions with 123 Pay or any other thing, make it more simple for this, Bharat customers. Make it little more intuitive, right? And while after the transactions, so while we are focusing more on the transaction side, our focus is more on the after the transaction. If there is dispute, if there is complaint, how do we handle it? And I think that's journey which we have already created in terms of ODR/UPI help, which is available in each of the UPI solutions which is available. Make it safe. So safe is, security has to be by design. So as we see, UPI 123 is already on, and the safety is in terms of giving little more time to understand the customer in terms of cooling period. So not allowing customers in one go while they are onboarding, start a little, get little more comfort. So that is one. And there could be, as Vishal and Kumar mentioned, we can also add a lot of more secure angle like voice or biometric angles to it and make it really fast. And the moment we can create these journeys for this segment of customer, or rather any segment of the customer, the success should be on our plate. So with this, I am rounding up this session, and I once again thanking each one of you, Sanjeev, Vishal, Ganesh, Kumar, and Ripunjay, and wishing you a great evening and enjoy sundown with the NPCI. Thank you.
Thank you. Thank you, everybody.
Yeah,